enterprise AI and the fact that it's going to be slower than expected. This is something that we highlighted for you yesterday. Neeraj had pointed this out, and it ended up being the sector of the day.
Yeah, and good for IT bulls, frankly, to have that whiff of fresh air, right? So it was actually really good going. In today's setup, you could argue, guys, I don't know how you think about it, but in some sense, the trajectory of oil prices seems to be indicate that maybe, just maybe, peak conflict is behind us. Now, remember, these may turn out to be the famous last words because you do not know what will happen on a Truth Social post today evening. But be that as it may, oil prices right now indicating that there is some bit of optimism out there. Now, the other thing is speaking to a few dealing rooms over the last 24 hours, and they're turning optimistic on deal flows as well. Usually, in markets which are very, very lackluster, deal flows completely die out. Those are starting to pick up, which is very, very interesting at times like these. That was a slight difference that I found yesterday versus what has been happening over the last maybe 5 or 6 weeks. And in terms of pockets of strength or pockets that people seem to be chasing, energy transition or energy per se, actually I wouldn't call it energy transition, excuse me for that, energy per se, right up there, and asset owners. I mean, today I'm seeing this note on aluminum, which we'll talk about. On April 14th, I think JP Morgan put out a note on aluminum. So rare earth minerals, aluminum, that's whole cohort of mine owners also now turning out to be favorites out there. So keep an eye out for that cohort of stocks. That is something that most people seem to be eyeing even at higher levels.
I would say that amongst other things, whether IT continues its momentum is something that I would watch out for. This Jefferies India strategy by Mahesh Nandurkar caught my eye. He's saying domestic flow nears $10 billion a month. Domestic flows into mutual funds have held up well, despite 3-year SIP returns for the Nifty close to zero. Even as a majority of SIPs get churned every year, Q1 of calendar year 26 SIP flows are up 19% year on year. Sustained mutual fund flows alongside a surge in pension fund flows have raised domestic flows into equities to $10 billion a month. That's basically the wall of money which is supporting the markets. This is a key market support, says Mahesh, through relative valuations still remain rich. Select promoters are using the correction to increase stakes as well. In terms of the setup, the Nifty has successfully reclaimed 24,200, effectively shifting the trading range higher. The index is above the 50-day EMA for the first time since late Feb. It's a major technical buy signal. Sustaining above the 50-day EMA opens the path towards 24,400 to 24,500 range. Support zones: if the index slips, immediate support rests at 24,100 to 24,000. Trend is now buy on dips, not sell on rise. For the Bank Nifty, while the Nifty soared, the Bank Nifty showed some fatigue, failed to hold above its 200-day EMA due to late session profit booking. Resistance levels at 56,700 to 56,800. Need a sustained move above this to see a rally towards 57,300. Immediate supports at 55,700 to 55,800. If this breaks, the banking index could drag on the broader market's momentum. Those are some of the points you have to keep in mind for factors this morning. But let me go across to Puneet, who's joining us for the setup on the F&O side.
Well, thank you for that. The Sensex expiry today, so we continue to monitor all of those moves, especially in those set of stocks. But continuing, yesterday was a strong session, sustained momentum, maintained over 24,200. That's a key support level in the near term. And with the implied open indicating a start in the green, today's session will largely be hopefully continuation of what we've seen yesterday as well. And on the Bank Nifty, 55,500, we spoke about that level yesterday as a key support level. We're now at 56,300, but there is essentially lack of a long-term, medium-term support in the 56,000. So only 57,200 as well as 57,700 are some of the key levels where we've historically maintained multiple days of support back in December and January, and a lot has changed post that. Yet to go back to those levels, but that will be a key level. So around 1,500 points even from here will be something to watch, while there is not too many supports in this particular range. In terms of cash market, also a buying figure yet again by foreign investors. Second time in the last 3 to 4 days but the momentum has not been too rigorous in that sense. So while we take it as a positive, continue to maintain if this level of buying at least continues in the medium term, but a very small number, 666 crores by foreign investors as of now. But the index long, that's largely been maintained at the 21 to 22%, similar to what we saw in December and January. So, and in terms of put call ratio, also very, very stable between the 1.1 to 1.2 mark, where foreign investors continue to maintain their positions, not increasing the puts at this point of time. The open interest distribution also shows you that because we moved up the ladder, you see 23,500 as a key level for the puts being formed. 23,800 is also seeing higher open interest because of that 500 point uptick that we've seen from those levels, while 24,000 as well as 24,300 continue to be level for the calls that there are longs being built on those levels. So does at 24,500. Finally, stocks, Godfrey Phillips continues to be one where investors continue to monitor this, at least in terms of the open interest gainers on a daily basis. So third straight day for this week where we've seen Godfrey Phillips seeing long build up. Motilal Oswal also another one, and Force Motors is the third one where longs have been built up in the system with rigor in terms of OI change. And the losers, there's just a couple of names that we continue to monitor. Bosch as well as CDSL saw covering of shorts, but largely a day where we are expecting continuation, but a lot to watch out for in the trading session of what could be some of the triggers that drives the market today.
Absolutely. What's also sort of buzzing in the backdrop is all of these announcements coming in, some from the government side in terms of new schemes and order wins beginning to build up. So just keep an eye out on that. I would say that that's definitely one more factor to watch out from, apart of course from results. And results is what makes the first stock on my watch list. ICICI Lombard is what I'm looking at. It's a thumbs up, good set of numbers. Net premium earned was up 10.8% at 5,791 crores. Net profit up 7.3% at 547 crores. They will of course also pay an interim dividend. Their motor vehicle portfolio was up 15% in Q4 versus the industry growth of 10%. And they've also mentioned this in the post-earnings management con call. So some of those details have also come in. Their health operations grew 38.2% in the fourth quarter versus industry growth of 20.5%. So robust there. Here's what Macquarie is saying. They've maintained an outperform on the stock with a target price of 2,350. They're saying good discipline in a tough industry is how they're describing the FY26 for this company. They're saying they're prioritizing profitability over growth, letting go of market share in certain lines of business. IFRS to have a positive impact, and so will IRDAI regulations, which is important from a perspective of an insurance company. So that's the first one. That's a thumbs up. So is Suraj Estate Developers. They've acquired a new land parcel in Dadar West. So that's in the central part of Mumbai for those of you who are not from the city. The total acquisition cost is at approximately 18 crores. They'll undertake a redevelopment project on this specific plot, and it offers a saleable carpet area of around 18,000 square feet. It holds an estimated gross development value of 100 crores and bolsters the upcoming portfolio and medium-term revenue visibility, further strengthens presence in their core South Central Mumbai market. Could be interesting because the area where they have this development property is just very short on land parcels. So to get anything there would be at a premium. UBS has a positive view on Dabur. That's the third stock I have on my watch list this morning. They've upgraded it to a neutral from a sell, although they have cut the target price to 490 from 540. They say valuation appears to have bottomed. Growth rebound needs to be sustained. For the fourth quarter FY26 business update, it suggests an uptick in the domestic business, but consistent execution is needed for a sustained re-rating. Valuation appears to have bottomed out is their key point over there on Dabur.
Very interesting on the land parcel in Mumbai, and it just shows how real estate is such a it's a sector to be studied in micro markets, right? Because
location.
Absolutely, and Brigade Enterprises, top of my list. It signed an agreement for an 8.63-acre development project. Now, this is in East Bengaluru. It just goes to show how even Mumbai and Bengaluru need to be looked at completely differently, because Mumbai is waterlocked, as you know, and so therefore that density of construction is something that you have to bear in mind. That agreement that Brigade has signed enables the development of a 39-acre development project that has a gross development value of 7,200 crore rupees. So it's a very large project. This is going to be a housing project, and so therefore watch out for this. Brigade has signed a couple of deals in the past, and the stock has reacted to that as well. So watch out for that. That's where my good news ends, because the remaining two stocks on my list are actually not the best developments. GMR Airports, you've seen the kind of disruptions that aviation has had in the last quarter of the year, and that has led to weak passenger growth for them in the fourth quarter. Q4 passenger traffic has grown less than 1% at 3.18 crore rupees, and the March traffic has actually declined 1.5% year on year to 1.04 crore rupees. Now, not the best news. We'll have to see how that translates into the financials, and we'll see soon enough. Tejas Networks has posted its numbers, and some of the takeaways that you should pay attention to. Revenue uptick is seen on a sequential basis, but it's still down as much as 83% on a year-on-year basis. There is an EBIT loss that is narrowed marginally, 219 crore rupees from 239 crore rupees, but the net loss has actually widened sequentially to 211 crore rupees, and the net loss now for the full year standing at 909 crore rupees. Order book stands at 1,514 crore rupees. So a little bit of a positive trajectory, but far from a resolution for Tejas Networks, which continues to be languishing, and it's far from the peaks that it has seen, I think, a couple of financial years back or in the last financial year.
Yeah, I mean, it's shocking to see what it's come to Tejas Networks numbers.
And Tata Group company.
Hopefully it picks up steam at some point of time, because it was in the right space at the right time when the Tatas bought it seemingly, but has not quite lived up. Okay, HDB Financial is the first one on my list, and a lot of, by the way, the con call takeaways were constructive too, but just look at the numbers. Disbursements, 4Q disbursements, highest ever, 11% quarter on quarter. Loan book about 3.4% quarter on quarter, which is okay. But the customer franchise is now 22.9 million, which is 19.7% YOY growth. And it was just 5 million in 2020. Imagine the growth that they've had there. Easy though for the kind of business that they are in, of course. Remember that. Gross NPAs declined to 2.44 versus 2.8 quarter on quarter. Credit costs moderated to 2.35% versus 2.52. In fact, they have guided to 2.3 for FY27. The net interest margins improved to 8.23, and now they have said that 8% is a floor. They'll not go below that, which is also actually a constructive statement. And the gold loan portfolio doubled in FY26. No surprise there. Most companies would have seen that, but good news effectively, and that is actually the decency of HDB Financial. Let's see if the stock reacts positively today. GHV Infra should come up on your screen next. The stock, presumably, yesterday had a whiff of two positive pieces of news, but the stock ended lower. But there's one more positive news that they've gotten today. They received a construction contract worth 815 crores from APCO Infra. Watch out for this one. And thirdly, aluminum. People seem to be constructive there. Yesterday, despite bad news on Vedanta, that stock did reasonably okay. If I'm not wrong, was in the green for a better part of the day. Nalco, of course, was in the green, so keep that in mind. But Kotak says that aluminum will stay higher for longer. They say aluminum prices continue to trend upwards, notwithstanding the recent de-escalation of war, which by itself is confirmation of the bullish trajectory that people may have there. The supply disruptions are outweighing the risks of demand destruction. Kotak factors in lower production from Middle East, and inflexible and insufficient global surplus capacity could keep prices firm. They have upgraded Nalco and Hindalco to reduce. So presumably it was a sell earlier, but Vedanta remains their top buy. It was interesting that they're so constructive on aluminum and they have upgraded it to a reduce, but like I said, it must have been a sell call earlier. So
valuation picture, I guess.
Yeah, but from a sell to a reduce despite the upgrade, so it's interesting. But Vedanta is a top buy for there. But watch out for aluminum, because 2 days ago Morgan Stanley also came out. JP Morgan came out with a very constructive note on on some of the same metrics that Kotak has highlighted.
But this has been a theme for a while. It's very market veteran I was speaking to, and was like, what are you looking at in days of AI? It wasn't that kind of a generic conversation. It was like anything that's coming out of the earth, because how are you going to replace it? And anything that you can physically see. Land, mining, so all of those broad themes, of course, not from a short-term basis, but are ones to keep an eye out on, I suppose. Talking about another theme which is going to pop today, though we have one listed player which is going to get all of that action, is the mobile PLI 2.0. So PTI Copy last evening has reported that the government is likely to roll out another set of production-linked incentives to boost mobile phone exports. They might roll out the scheme in May with an outlay of $5 billion. That's about 46,000 rupees. It's a scheme for large-scale electronic manufacturing, which was launched in 2020. And it was commonly known, of course, as the PLI scheme for mobile phones. The 1.0 scheme aimed to boost domestic manufacturing of mobile phones with an outlay of about 40,000 crores. And it actually hit all of its goals, right? The idea was that you have to import less, and it really did that. So key beneficiary, of course, no prizes for guessing, will be Dixon Tech. It records more than 80% of its revenue from mobiles, and the PLI did help the company with margin benefit of 100 to 150 basis points. It, of course, passes on those benefits to customers as well. That stock was already up yesterday. Remember, Dixon was in focus, was part of Heard on the Street segment on NDTV Profit yesterday as well. So watch out for this. I think this, also the idea that this PLI 2.0 has already come, gives a sense that maybe there is more that the government will come in from. If you just look at it as a pattern, whenever there is a global crisis, then at least this government does come in with more schemes to shore up domestic industry.
Production.
Even the PLI 1.0 came out of COVID.
Yeah.
So all of those crises lead to these opportunities. So let's wait and see what happened. The rare earth scheme, for example, when we were squeezed there. So maybe more to come.
Any sense on whether it will be back-end electronic manufacturers which get the PLI or brand owners? Nothing to that effect as of now, as yet.
Nothing which has come. But in Dixon's case, this is something that they were waiting for in any case. So it's going to be a positive for them, one assumes. We'd love to speak with them on the channel today. All right, Wipro is set to report its fourth quarter earnings with expectations of a modest revenue uptick but stronger margin performance. Jasmeet joining in with what we should watch out for Wipro. Jasmeet, in Wipro's case, it's all about the buyback.
In terms of the overall revenue, we expect it to take an uptick of 2% and cross at 24,000 mark in this quarter. While in the coming quarter, we also expect the EBIT to expand by 15% odd and margins to expand by 200 basis point and also reach that level of 16.7 to 17% of margin range. In terms of net profit, that's expected to have a healthy uptick of 10 odd percent. Now here are the key things that will be in focus in this particular quarter. Firstly is the overall CC growth which we're expecting. The brokers are penciling in the growth to between 0.8 to 1 odd percent and most of it to come from the acquisition which they had done of Harman's in the previous quarter. While the acquisition is expected to add roughly 160 to 180 basis point, that's roughly 1.6 to 1.8 odd percent, which means that the company level, the company could do a degrowth in terms of overall CC, but that overall inorganic growth should help company sustain the CC growth at 1 odd percent. Now, in terms of the other key details would be the buyback proposal update. Company is expected to do a buyback of roughly 18,000 odd crore as per the brokerages. So proposal update on that would in terms of what the size of the buyback is and what's the premium expected in terms of overall per share. Other key highlights that will be in focus would be the guidance and the acquisition ramp up in the coming quarter. While we also look at the overall rupee tailwind which will impact the margins, so how much of that is coming in from the rupee tailwind and how much of that is getting impacted by the wage hike and also the deal ramp up which will be in focus. Lastly, in terms of the client add-on which the client company will be doing in this particular quarter will be in focus alongside the healthcare commentary on the healthcare segment of how that is ramping up for the company. In terms of the guidance which becomes a key in this quarter, we expect the overall Q1 guidance for the particular counter to be between -2 to 0 odd percent, where Morgan Stanley, JP Morgan expect the CC growth to be -2 to 0 odd percent. While we also have Jefferies which expect the overall Q1 FY27 CC growth to be between 0 to 2 odd percent. So we see brokers have been divided in terms of what to expect in the overall CC growth going ahead. While lastly, deal wins are expected to have a healthy addition and be at 3 to 3.5 billion range. So all in all, we do expect a good set of numbers with a strong deal win in this quarter, but the buyback commentary remains a key focus.
Okay, all right. Thanks so much for that, Jasmeet. Manav Medewala, a research analyst at Mire Asset Sharekhan, joining us this morning. Manav, thanks so much for taking the time. We saw with Tata Consultancy Services, a couple of factors were ahead of expectations. The rupee in INR terms, but the CC growth was not there. BFSI did not really work. Is there a possibility that Wipro will surprise on the upside? At least, do you anticipate that they'll perform better than the consensus, or is there likely to be a little bit of softness?
So to be very honest with you, I expect Wipro to perform as per our expectations. No surprises or headwinds on that part. What we would be looking out for is how the deal ramp up, which was delayed in Q3, right? Large SAP transaction program was put on hold by a consumer client and still had not restarted as of Q3. So we would like to see if the project will get started in, let's say, Q4, or is it going to begin in Q1 FY27? And then probably how the deal wins and the conversion cycle pays off.
If you put this, okay, so before I ask you about Wipro as part of the whole cohort, let me ask you about the buyback and whether that is something of an opportunistic thing for an existing investor to consider. Because this is ultimately a way in which to reward shareholders, right? So is this something to consider? In the past, you've had Wipro react positively to buyback share-wise.
See, it all boils down to what's the buyback size. We are assuming it's going to be somewhere around 15,000 crore to 20,000 crores and at a premium of 15 to 20%. Based on that, I would say you can go ahead with the buyback opportunity if it presents.
Okay. And finally, Manav, Wipro is part of the whole cohort. What's the view?
See, right now, in terms of Wipro, we are hold. So there have been a couple of factors that have led to a decline in revenue growth in terms of constant currency. First is macro and discretionary spend suppression, tariff-related sector weakness. Then Europe is not performing. Americas too is not performing that well. And again, delay in the large deal ramp up. So there would be a couple of factors that we would be seeing in Q4. And if there are surprises when it comes to, let's say, organic CC revenue growth and guidance, and then, deals started ramping up, given that except Q3, the other TCVs have been pretty much good, Q1, Q2, and even Q4. So it all boils down to how well are they able to convert the deal wins into tangible revenue.
Okay. Manav, we'll leave it at that. Thank you so much for taking the time out and being with us and giving us your perspective. Really appreciate your time.
Yeah, thank you.
All right. Our experts join us on the panel as well, Kush Bora and Parag Thakkar. And gentlemen, both of you, thank you so much for joining in. Before we talk about the markets at large, the upcoming conversation is the one which is exciting, Alex, because yesterday we spoke about MTAR Tech as being a consensus idea.
Yes.
Both Kush Bora and Chandan Taparia had it. The stock ended up very, very well. Kush Bora, you were recommending that if it reaches some 4,800 levels, you might want to book profits here. You might change your mind after hearing the management coming up, but still, broadly, what do the charts suggest for MTAR Tech?
By the way, credit where it's due. I mean, you did put out that positive news, which which sort of added to that spurt, that extended spurt.
So we spotted it in the morning, I think.
Yeah, absolutely. So 4,800 was, I think, Chandan's target. Stock is now in overheated territory, so not a bad idea to book partially and hold the rest of the quantity. But the stock's done phenomenally well, and it does have a room on the upside from here on as well.
Wow. Okay. And in a minute from now, we'll get in, of course, Mahima to set up the conversation for us as well. Because it's an interesting set of positives that MTAR Tech has. Oracle has expanded fuel cell deal with Bloom Energy, which translates into expected incremental orders for MTAR. Mahima Johnson to set up the chat for us. Mahima.
Right. So Neeraj, as you rightly mentioned, the Oracle and Bloom deal is, set to be a big positive coming in for MTAR Tech. The deal basically is that Oracle plans to procure around 2.8 gigawatt of Bloom's fuel cell systems with initial 1.2 gigawatt already contracted. And this partnership will require fast and reliable power suited for AI workloads. And As per analysts, this can additionally translate into around 1400 to 1700 crore of incremental orders for MTAR Tech, which is almost 1.6 to 1.8 times of its FY26 estimated revenue as per Motilal Oswal. What Motilal Oswal is saying is that they're maintained the buy rating on this one and have given a target price of 6,000. They're factoring in a strong order visibility for the fuel cell business. Revenue targets also they've raised by 16% for FY27 and 33% for FY28. And what they're saying is that this translates into 14% upward earnings revision for FY27 and 25% for FY28. The estimated EBITDA growth is also penciled in at 65% and PAT at 90% over FY25 to FY28 is what they're penciling in. So this is the overall view of how this could, be positive for MTAR Tech going forward, and this is the entire perspective.
Thanks, Mahima. Parvat Srinivas Reddy, who's the Managing Director of MTAR Technologies, joins us right now on the show to talk about this. Mr. Reddy, thank you so much for joining in. And you are doing a bunch of things, so we're going to dissect them one by one. I want to start off with the potential benefits that could come in because of Oracle's order to Bloom. How do you read into it?
I mean, it's just a point of saying that adding further orders into the order book for Bloom from Oracle has been a very good news for us. And apart from that, the kind of demand that we have today, we need to really get up and start delivering, which is going to be really huge. And we are planning those expansions and training the people to meet the requirements of the customer. So this is not just going to be for a year, it's for years together. And we have planned on a long-term basis and in terms of expansions and in terms of execution of the requirements that the customer needs at this time.
Okay, and Mr. Reddy, I understand that in some sense, a lot of it could be hypothesis, the numbers may be difficult, so on and so forth. But is there merit in the street being optimistic on this Oracle order to Bloom? Because so much of your own supply also goes to Bloom that there will be a translation of some of that to your firm as well over the course of the next 1 to 3 years?
Absolutely. I mean, there's no second thought about it. We are pretty confident about it. And the way things are going, they're going in the right direction. And it's going to improve more and more as we move quarter on quarter basis as well.
There's no number out there. I mean, in some sense, there is no one-to-one correlation that if there is an X order inflow for Bloom, it translates into an X order inflow for MTAR.
It does. Basically, the demand, the way it moves, and the kind of expansions that we are doing to cater to the requirements of the customer. So it definitely does.
Mr. Reddy, I'm just going to try asking you the same question slightly differently, and you can choose to not answer me, but it's my responsibility to ask. There are some estimates that are suggesting that this could translate into a revenue or incremental orders of between 1,400 and 1,700 crore rupees. Is that exaggerated or is that ballpark range appropriate?
I just can't comment on that right now, but we are pretty confident of it's an automatic process. That's all I can say. And one is the orders and the other is the execution, which we are already planning ahead of time. So I think we are planning based on the requirements of the customer and the way it's moving. The demand is going higher and higher. So we are actually getting up and reviewing it every month how to move in that direction.
Speaking of execution, Mr. Reddy, one of the factors that has been pointed out is that when such a large or chunky order comes through, it's obviously good news, but it has a bearing on working capital requirements as well. And so do you anticipate that your working capital needs will go up, and have you secured the source of funds? Are you comfortable?
We are very comfortable. Probably I don't want to comment right now what we promised. The number of working capital days are going to come down. We worked in various areas with various customers to bring down the credit limits or whatever we have been doing in the past. And the number of working capital days, you can see them coming down quarter on quarter basis as well.
Mr. Reddy, good morning. Tamanna here. Do you expect working capital days to come down significantly further as well?
Absolutely. I mean, you can see that probably I can't just say the numbers right now because of the silent period, but basically it will come down, as we said earlier, by March, and even further quarter on quarter, the working capital days should come down, purely based on our discussions with various customers on how to bring it down and working on the credit limits with the customers and as such. So it should come down.
Mr. Reddy, what is the extent of revenue that you get from Bloom? Because customer concentration is one question that analysts keep raising. Just trying to get a picture there.
I'm not really worried about it. It's not about customer concentration. See, one area, fuel cell, is doing extremely well. That doesn't mean we are not doing well in the other areas. If you look at our absolute numbers and the order book as well, we have enough orders in various divisions of ours in nuclear, aerospace, space, and we are also entering into oil and gas right now. So we have enough, visibility out there, and our absolute numbers have always grown. So I don't think,
absolutely agree with that. But just for our understanding and our viewers' understanding, what is the extent of revenue right now from Bloom?
No, it's about close to, I think, 55 to 60%
Okay. And is there an active strategy or consideration to reduce dependence on one customer? Not saying the other bits are not doing well, but is there an active consideration in that direction?
We have a very clear strategy as far as we are concerned in terms of customer diversification. We are working with other customers as well right now. So we have a clear strategy for that, and we are not really worried about that as such.
If I just may ask you one question about the opportunities you see on the nuclear power end, and that really is something where there is a lot of focus right now. There's a lot of policy push as well. If you can outlay that for us.
See, look, if you look at our order book, we have now close to about 650 to 700 crores of nuclear orders, which was never there before. And further orders are expected. A lot more reactors are coming in. So our plate is completely full in terms of servicing these nuclear energy requirements for the country. And a lot of new reactors are going to come in the next year. Tenders are going to get floated. So we are on track where we will never have those cyclical kind of issues in the past. So it will be on the exponential growth year-on-year basis as far as the nuclear division is concerned.
Okay, thank you so much, Mr. Reddy, for your time and for speaking with us. That's the Managing Director of MTAR Technologies, answering questions on his company, one that has seen the stock price up 12% in trade yesterday. We're taking a very short break. Pull up the implied before we go into that break. There's so much to discuss on the other side. Top ideas for the day and so much more coming on the other side with Kush Bora and Parag Thakkar. Stay tuned.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
कुछ खास होने वाला है।
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
Back with India Market Open right here on NDTV Profit. The implied open suggests a start in the green. Let's see if we build on from there. In fact, from the 70 odd point that it started off when we started the show, it's about 103 odd points. So there's optimism in the air. Like we said, Kush Bora and Parag Thakkar with us. We spoke briefly about MTAR Tech. Now, the markets at large, the guy who mentioned yesterday that I'm putting 10% of my cash balance, which is with me, to work. Now, I'm not saying he put the entire 10% to work, but Parag bhai...
And he's like, no, of course not.
but the macro deck is looking solid.
Macro, absolutely.
Why so?
See, I'll tell you, India 10-year, which went above 7% for a brief period of time when oil touched 110, now it is 6.86. US 10-year is under control, 4.25. Dollar index is below 98. Oil is at around 95 in spite of the blockade of Strait of Hormuz.
June WTI is 88 by the way.
If you see banking system liquidity, it is at 5 lakh crores, which was just during the COVID time because of the fantastic support from RBI to the system. So I would say that plus if you see the CD rates, they have dropped by 50 to 170 bips from the highs, peak highs. So that means there is enough liquidity in the system. So everything except for geopolitical part, which is still unpredictable, I would say, but going into a right direction. At least the macro is showing, at least the oil price is showing that, at least the bond yields are showing it. Apart from that, everything is now getting in order. So I would say that, and this is fantastic time for banks. Good banking system liquidity, CD rates coming down. If you have seen yesterday, the credit growth and deposit growth both have accelerated. And if you just see the business updates of all the banks up till now, and then you see the system level deposit growth rate and loan rate, you will figure out that ICICI Bank and SBI can actually deliver above 15% loan book growth. And both of them have not given business updates. So I would say that both of them can actually deliver above 15% loan book growth.
Which SBI had guided for, right?
Yeah, SBI can do it, but ICICI Q3 was hardly 11.5-12%, which is now going to accelerate to 14-15% in Q4, with range-bound margins and very strong asset quality.
Okay, so banks is the, but you know, for liquidity in the system, the larger point that you're making, where else would that push come in? Do you think even car loan companies, your NBFCs, some of them will also be large beneficiaries?
Yeah, absolutely. So if this crude doesn't go above 100 now, stabilizes between 90 and 100, if US 10-year, India 10-year, all those, then definitely you will see it boiling out down to NBFCs also. For example, HDB yesterday reported 40% growth in PAT, improvement in asset quality, improvement on the OPEX side. So you will gradually see that happening. This for particular fear.
Are you positive on HDB? Because HDB had a rough start in the capital markets,
Absolutely.
I would say.
So now things are getting better. Now things are getting better for them. Now, even if you see their asset quality, I would say the NPA provisioning things like, 30-day, 60-day, 90-day NPAs are also improving. Overall asset quality is improving. So I would say that NIMs are at 8%. OPEX is under control. So now things are getting better for them, constructive for them. Although AUM growth was slightly soft because there were large repayments. But that is also one of the good sign of the economy. That in such a quarter you had a good repayments.
Okay.
All the other parameters look rock solid for HDB Financial on all counts.
And stock has fallen completely. So I would say it's a good opportunity. Right now, see, up till now I was very constructive on ICICI Bank, HDFC Bank kind of banks because overall view on economy was not that constructive because of this or whatever geopolitical things happened. But if gradually things improve, then you can boil down to other NBFCs also.
Kush, on charts today?
इतना enthusiasm और positivity के बाद ना my commentary is going to seem a little tapered down, which
no, we want balance.
is.
We want balance.
Which it is, by the way. Actually, I'm going to start off with something different, something that the team mentioned yesterday. Retail data आया था, जहाँ पे number of investors increased, but the number of active investors went down, right?
True.
And also, Tamanna, I think last week we had a conversation about how retail participation is not really there. I pulled out some data from NSE. This is up until Feb, right? In terms of participation, the cash segment overall has seen an about 7.5-8% drop. Within that, the retail participation, and I'm talking cash segment only up until Feb, has seen a 9.5% drop. So retail participation already come ho raha, and if you look at the market share of retail versus other participants in FIIs, prop and everyone else, FY24 में जहाँ 35% हुआ करता था, अब वो गिर के 33.8% हो गया है. Again, all of this is until Feb. I think 1-2 दिन में मार्च तक का डेटा आ जाएगा, so we'll know. So the point is,
if anything घट गया होगा.
घट ही गया होगा, absolutely. And what I find amusing is, markets are supposed to be the epitome of economic principles, और यहाँ पे सबसे ज़्यादा violate हो रहा है the basic law. जब प्राइस बढ़ता है तो डिमांड बढ़ता है, जब भाव घटता है तो डिमांड घट जाता है. So retail participation will come back only when you see new highs or at least markets approaching new highs. Now, when can that happen? Let's talk about the here and now. Let's start with the positives. Bias positive है, medium term, long term structure मुझे भी bullish लग रहा है. And like I said, let's look at positives. अभी जो rally आई थी, that is more of a relief rally, more of short covering rally, right? FIIs, net buyers in cash and index futures, again positive. But on the derivatives front, 24,200. That strike price has seen a straddle formation after a long time. While this suggests कि put option में बहुत heavy writing हुई है because geopolitical tensions are easing and participants are willing to go out and write that put option and play that straddle because there might not be so much volatility. That's a good sign. Now the other phase of it. If you see RSI from a technical standpoint still in neutral territory, it's not really gone on to the bullish zone. Also volumes on the long side continue to remain subdued. Yesterday we saw massive action in terms of price action, but volumes are still subdued, especially if you see Nifty and Bank Nifty futures. So that's a small concern. Also from a technical standpoint, resistance is around the corner. If you see Nifty has a resistance in the 24,300 to 24,500 band, Bank Nifty has that about 57,300 zone. So point being that we've had a good rally from the lows. Right now, maybe consolidation from a near-term perspective, maybe results and any further positives from geopolitics can change that. But up until that happens, consolidation, stay long, but don't be aggressively long now.
And picks for the morning to not be aggressively long.
Picks is
mid-long picks, mid-aggression picks.
Picks is where you can go aggressively long because index level पे शांति है. Small and mid cap और stock specific action बहुत बढ़िया है.
100 points up again after nearly 300 point rise. तो इतना भी शांति नहीं है.
अभी हम greedy है ना, 300 point की आदत हो रही है.
Okay.
So yeah, on the pick side, going with all longs, Union Bank, VA Tech, Wabag and IKS. Targets on these, Union Bank 194, 195, 183 is where you keep that stop loss. VA Tech, Wabag 1417, 1452. These are your targets. 1347 is where you keep that stop loss. And IKS 1555, 1590 targets, and 1480 is where you keep the stop loss.
Okay. All right. Let's talk about what the buzz is in the dealing rooms. And Soumit Sarkar joining in to tell you just that in what he's hearing on the street. Soumit, very good morning to you. And seemingly, the mood is more positive than it has been over the course of the last couple of weeks.
Good morning, Alex. Definitely the mood is quite positive. Few stocks that dealers have highlighted. Firstly, it's Dixon Tech. There are some buy flows on the large HNI desk. Dealers expect the Vivo JV approval to come in anytime soon. Along with this, the mobile PLI could be an additional trigger that could happen for Dixon Tech going forward. So keep an eye out for that counter. For Bandhan Bank, there are buy flows on FI desk. Delivery volumes are also on the higher side. For BSC and Bajaj consumers, the buzz on the street is that the fourth quarter numbers are expected to be quite better. In fact, for Bajaj consumer, the quarterly PAT is expected to be one of the highest in the past many quarters. So keep an eye out for that counter as well. And lastly, when it comes to Tech Mahindra, there are some the stock was trading higher yesterday, but there are some sell flows that dealers are indicating at the higher levels in trade. Earnings are expected to be on the weaker side. So keep an eye out for Tech Mahindra as well. The stock could reverse from the current levels.
Got it. Okay, so a few interesting names even from the tech space. And so therefore, Kush, specifically on the tech pack, because of the kind of move that it saw yesterday, and for good reason. But would you build into that? Because if there's one sector that has relatively underperformed over the last 7 or 8 sessions, it is IT. That catch-up play was in yesterday's trade.
True, and this is perhaps the reason why Nifty did not see a profit booking as sharp as Bank Nifty. Bank Nifty had two reasons. One, ICICI Bank after Monday's rise saw some consolidation, and hence Bank Nifty perhaps saw that dip.
Dropped 1% from the day's high.
Absolutely, exactly. And also the fact that IT was strong throughout the day. So that is where the Nifty perhaps held its ground. This momentum could continue, but I think it's hitting that resistance zone. The index itself is now at that level where 31,800 31,800 is the 50-day moving average, could hit resistance. I wouldn't go all out on IT. It's not buy any stock within that sector. I'll be very stock specific, and I'm a little surprised because on the positive side I had Tech Mahindra, which as Soumit indicated perhaps has sell flows, but ended at the high point of the day, so I remain constructive on Tech Mahindra. And the other name to add to the list is Emphasis. So be stock specific. There could be momentum returning to some of these names. It's not a buy anything within that sector kind of a play for me just yet.
What did you make of ICICI Lombard, Parag bhai? The numbers that came in, very positive notes this morning from Morgan Stanley, Jefferies. And
See,
what is
basically,
talking about the industry?
Yeah, so I would say that this industry was going through a lot of competition. I think ICICI Lombard being so well managed and very, I would say, it's a great organization, and I have held that stock for long. So I would say that, and on auto sales were good.
You hold ICICI Lombard?
No, I don't hold right now. I was owning at one point of time.
Would you
whatever
consider
it is, ICICI Bank only. Na? So
Yeah, but interestingly on Lombard, they did say that the margins on the auto sales have actually come off because of that premiums coming off. So I think maybe just broadly, while auto sales may be great, but their numbers may not be as good because the premiums have come off. So
but their growth versus industry was much higher.
Much higher, exactly.
Yeah, it was 15% versus industry growth at 10% for that quarter.
Yeah.
Correct.
And premiums would be coming off. That same problem would be for everyone.
For everybody.
So that's an insurance industry problem at that point.
Correct me if I'm wrong, that revision in the premiums that we were anticipating for motor has not taken place yet. No?
Would have, which is why ICICI Lombard would have said this, right?
No, it was supposed to rise.
I don't know. So maybe they've taken, their commentary suggests that they've taken a bit of a hit there. But yeah, then, and Tamanna, right. So therefore, maybe that whole cohort will see a lower earnings, and therefore, maybe just avoid the cohort. We are not a mutual fund manager. We don't have to buy every sector.
Is insurance an avoid right now, and ICICI Lombard an avoid right now, or it's,
no, I would
a
say that, see, there is some value emerging in both in the general insurance and life insurance. For example, life insurance stocks have not done anything. So there is good value, might be in ICICI Prudential Life, HDFC Life, those kind of stocks also. But as I said, right now my hands are full with whatever I am bullish on.
Yeah, so. let insurance make its money. I think, frankly, life insurance should prove that it is getting on a trend before, because there have been many false starts, like we described, I think 10 days back or 5 days back, right? I mean, HDFC Life is at a price that it was last in some 2019.
Yeah.
I mean, let it create wealth.
Right now, but the fact is there are many heavy hitters who, if you go back 5 years, 3 years, have not really given much to investors after all of that.
Even LIC, I think you were pointing out yesterday. Na?
LIC to yes, but I'm saying
2022.
Even not just insurance, very heavy hitters. I mean, the fact that Nifty SIP returns are zero in the last 3 years is something that's pointing out. ICICI Lombard on the charts, just to round that up, Kush?
It's had a good run, nothing too constructive. Within the space, GIC, RE is a much better setup. It's at the cusp of breaking that resistance, also that psychological mark of 400. So beyond that, and Neeraj, you're right, HDFC Life is indeed at those 2019 levels. But compared to that, SBI Life has had a good structural up run. So maybe that is something that you consider. But again, this is not a sector where you trade. It's something that you buy and hold and perhaps pray a little ke chal jaye.
क्यों करना है सब बहुत चीजें करने के लिए, right? So just before we get to Varsha, a couple of pockets of strength, and I was speaking about aluminum in the morning, and just the fact that Vedanta had very bad news yesterday and the stock held out, is that a sign of strength? Part two, we were talking about MTAR Tech as a defense name. The other defense name which did very well was Paras Defense yesterday. Very high volumes, good price action. How do both of those look on the charts? Two different sectors, Vedanta and Paras Defense.
So as far as the metal names go, Vedanta has had stellar accumulation. I am always more excited about what the volumes and what the internals are doing rather than the price. Price, in fact, goes out and confirms, the internals. So that is more of a consequence rather than the cause. So very interesting volumes on, Vedanta. There is a golden crossover of the 50 and the 20-day moving average. Mild resistances, because the recent swing high was at about 770, very close to that. Maybe, in this momentum, it could take it out. So if you have a position, continue to hold. Fresh positions also, but maybe slightly lesser quantity because it's a conditional buy above 770. So that's the only thing. Otherwise, structure's very positive. I still prefer Nalco in this space over Vedanta, by the way. MTAR Tech, as I was suggesting, partially book profits, hold the rest, and fresh additions should be on declines. And Paras Defense, very interesting moves. Last 3 weeks of gains, good price action. Now, I think there is a breakout imminent about the 760 mark. If you have a position, continue to hold, stop loss at 745. But if you want to create a fresh position, then let the breakout happen. Above 760 is where you go out and buy.
Okay. Some other stocks on your list that you should keep. Varsha Johnson, just before we start markets at 9 a.m. Varsha.
Well, let me start with a couple of pharma names. Let me start with Rubicon Research, wherein they've acquired 85% stake in Arena Life Sciences, which marks their entry into the CNS formulation. And if you see, Arena is valued at 200 crore EV, and the EV EBITDA ratio stands at around 21 times, which is fair considering the peers that Arena has. Well, next on the list is Aurobindo Pharma, wherein the subsidiary has signed additional product schedule with MSD Singapore. And now this expands the CMO partnership announced in May 2024. A company will build a greenfield mammalian drug substance facility, and the company will also invest $150 to $170 million for facility and downstream purification infrastructure. And this strengthen long-term biologics contract manufacturing relationship with MSD. But do note that all this will reflect in financials in next 3 to 4 years. Next, you have Sami Hotels, wherein they've signed lease agreement for 162 room hotel in Noida, and ARM also entered into long-term agreement with Inga Group and will develop an upscale hotel in a mixed-use project. Lastly, you have John Cockrell India, wherein they've won 300 crore order from JSW steel coated product. So these are all the stocks which will be in focus as of today.
Okay. Thank you so much for that, Varsha. So you have a lot of options of what to look at. Your pre-open rates are just coming in. What's going to be in focus? Earnings, HDB Financial Services, ICICI Lombard have both reported. Numbers are looking good on the face of it. The first ticks might also show the same for both stocks. HDB Financial about 9% up, ICICI Lombard 2% up. Remember, these are pre-open rates, they will settle. And your key indices are also looking strong this morning. You also had a set of weak earnings. Tejas Networks was not looking good at all. NBFC stocks will be in focus. RBI has allowed NBFCs to open branches without prior approvals. That's a positive for some of these companies. Hindustan Copper, watch out for that. Government has no plans to disinvest its stake as per media reports. Hindustan Copper is also doing fine this morning. Dixon Tech, PG Electroplast, both in focus as government likely to roll out mobile PLI 2.0 schemes as per reports. There have been order wins. We saw some of those talked about by Varsha, GHV Infra, John Cockrell India among them, which could be in focus. So quite a lot to look at this morning as we get into the pre-open session. But I just want to understand if defense is something that you would see in a constructive manner. Kush, we spoke to MTAR. I want to look at Hindustan Aeronautics. Even after the call between Prime Minister Modi and US President Trump, there was some reports that there would be more defense tie-ups and Hindustan Aeronautics would have a big part to play.
So, right now defense is in a space where you're seeing that rebound. And if I can just take 30 seconds and say this, right now you will find a lot of stocks which will look very attractive from a very near-term perspective, at least especially if you track technicals, right? Because there is a good rebound that is happening. You have to consider the primary trend, एक महीने पहले क्या चल रहा था, and see if those resistances are taken out. Right now, that doesn't seem to be the case for defense. While, like I said, the near-term trend for something like an HAL is positive, there could be supply pressures coming in, at slightly higher levels, at around 4,300, 4,400. So, yes, you should continue to hold, but do you build on a fresh? Not really. Again, not to say that the sector will not do well. MTAR Tech, we have discussed buy on declines, Paras, defense again above 760. Add another name to it, Data Patterns. This one's also had a good run on the cusp of a breakout above the 35.50 mark. So, if that comes about, you go out and buy a fresh. So, yes, selectively you can consider. Again, this is not something that, you consider, or paint everything with the same brush kind of a situation right now.
Okay, since we're talking about defense, quickly, a city view on Hindustan Aeronautics that has come in. Maintain a buy with a target price of 5,560. The recent F414 engine headlines reinforce the medium-term pipeline. We spoke about this in trade yesterday. The commercial formalization timelines and execution risks remain key watch items and likely enhances the ordering visibility of the Tejas Mark II. Remember that engine heads into the Tejas Mark II. Likely leads to a role for HAL in AMCA production, regardless of the final assembly arrangement. So watch out for this one. And we've just spoken about the entire defense pack. We've got Shrikant Chauhan, Executive Vice President and Head of Equity Research at Kotak Securities, joining us now. Shrikant, very good morning to you. And are you positive at this juncture, considering that we're looking at another positive start?
Yeah, good morning, Alex. Good morning, everyone. So, yeah, I think the way the market recovered from the lower levels and the way there is development on the momentum indicators, one thing is very clear that in case if there is any correction, then also the buying is going to emerge, because now the market has started the series of higher top, higher bottom. Also, if we consider the FNO statistics, then FIs have started cutting their short positions. And the most important part is that the option statistics have shifted from 23,500 to 24,000. So I think now 24,000, 23,900 is going to act as major support for the market. 24,150, 24,100 going to act as major support in the near term. And today, yes, if we see the market is opening 140, 150 points higher, then the possibility of hitting 24,500 would turn bright. But I think at this level, at this juncture, instead of taking any specific view on index, it is better to buy stocks. Let the index come back to the important support levels. There we should look for taking some long bets. But for the time being, I think we need to be more and more stock specific.
Okay, what are your picks this morning, Shrikant?
Yeah, good morning, Davanna. Good morning, everyone. So, see, like this Siemens India, that looks good. It was at its peak of last 10-12 days. It was around 3,600 sort of levels. Today, if it is opening around same levels, 36, 35, 75, then there we should look for taking long bets, because after a very long time, almost after 6-7 months, the stock has broken this important level at 3,500. So 3,500 is now going to act as major support for the market, for the stock. And that should be the final stop loss for creating any long position. I think from here, the stock can easily move towards 3,800. And in the best case scenario, 4,000. So at least in the near term, 3,750, 3,800 is not ruled out. So it's a buy at current levels. The other stock on which we are bullish is from the pharma space, and that is Wockhardt Pharma. Here also we are seeing some upward activity on the momentum oscillators. Yesterday the stock was a little bit down, but it is consolidating. So from here again, the stock can move towards the levels of maybe 1,500, 1,550. It's a buy around 1,350, 1,365 with a stop loss close to 1,320.
Okay, okay, Shrikant, thanks so much for that. So two interesting names, not quite in the realms of conversation these days, or at least the last couple of days, but interesting choices there from Shrikant. Well, let's give you one more idea for the brokerage call of the day. HSBC has maintained a buy on Trent. Sharad joins in with more details on the rationale. Sharad, I think Zudio could probably be one reason, right?
Exactly, Neeraj. That's one of the key reasons as well. But there's an important misconception which the broking house has actually addressed, and that's very much important. They have maintained a buy rating. Target price has been cut to 4,800 from 5,300 rupees per share. But now there is a comfort of growth setting in. That's what they have stated. They are achieving 200 store additions for Zudio for FY26, despite the productivity moderation was there, and that's an important point raised by the company. Now this gives a good visibility for FY27 and other years coming ahead. Now the performance triggers are sustaining a 18 to 20% growth, and there is no negative impact coming in for cannibalization or the competition, and they're estimating a like-for-like growth of 4% in Zudio for FY27. And top line growth, that is something which will be the key share price trigger going ahead as well. But overall, it's a bullish tone for Trent.
Okay, so Zudio and Trent in focus. Is there more to the Trent story?
Yeah, definitely. You cannot say that Trend story has ended.
No, I mean from the very specific purpose of someone looking at this program and wondering if they should buy this stock.
Today.
Let me narrow it.
No, so let me be very straight. I don't have it in my portfolio right now. But as I find that in all these high quality companies, what happens is the PE multiple is far ahead of the growth rates, which are sustainable. And that is the only thing. Otherwise, it's a great company, and somebody who wants to buy high growth companies which are very high quality, Trent has fallen also a lot, significantly from its high.
But on valuations, you still don't have.
Yeah, PEG wise, PEG ratio wise, it is not yet.
Shrikant, on Trent?
Yeah, I think, see, there also we saw smart recovery in last 10-12 days, and there is like some more consolidation is not ruled out at current levels, because 4,000 acted as major resistance, major support when it was falling from the highs. So I think close to this 4,000, the stock is going to spend some time. But I think the stock is heading for the levels of 4,500, 4,450, 4,500 sort of levels in the near future. There the stock is having good amount of resistance. So there we need to be careful. But if I have to choose any one, like let's say DMart or Trend, then I would like to go with DMart.
Is a preferred pick for Shrikant. I want to talk about Dr. Reddy's for a minute because yesterday was a stock which was under pressure, one of the top losers at least in the opening session, and there were negative notes on it as well. But BofA has a different view. They've maintained a buy and hiked the target price for Dr. Reddy's to 1,540, saying they're assessing resilience and risks in a defensive sector. It's not as immune to the conflict. A buy on diversified drivers and semaglutide catalyst. The street is underestimating the diversified earnings drivers outside of semaglutide is their take. That's, if I had to say, the big takeaway. Cost reduction levers in case of revenue delay likely to still keep margins above 20%. I mean, this was a beaten down space. Apart from the financials, is pharma something that you would look at constructively?
See, I'll tell you how I look at it. The moment the geopolitical tension eases, the focus is more on domestic cyclicals like banks, auto, cement, and the moment the geopolitical tension increases, oil goes up, definitely you tend to look at safe havens, right? And which is like pharma, Bharti Airtel. So for me, it is Bharti Airtel. For some people, it will be pharma. So the pendulum is shifting between those two narratives. But I would say that within the pharma pack, of course, the Torrent Pharma remains my favorite stock all time. Because of its chronic portfolio, and somewhere then see Dr. Reddy as a stock like HDFC Life has also not done anything since last 4 years, and in spite of earning big money from Revlimid, because that was considered as a one-time cash flow. And yes, it was one-time cash flow, and now it is going to fizzle out. So there will be a reduction in EPS in Dr. Reddy.
There's going to earnings cliff.
So that generally market does not like that earnings are declining.
So, shifting focus to real estate, and Brigade Enterprises is gaining quite considerably on account of that joint development agreement that it has signed in Bengaluru. But this is coming at a time, Parag Bhai, when there are question marks about real estate demand. So, on the one hand, you have a major project that is coming through. The potential is humongous, over 6,800 crore. But you take that with a pinch of salt, yes?
Yeah, absolutely. So basically in real estate also, for example, this is also another thing, right? That if the geopolitical goes against you, if crude oil goes up, there is inflationary pressure, there is a pressure on global central banks to increase interest rates. Already there is a lower demand due to, portfolio erosion, value in value terms and all. So, but the sector has been beaten down immensely. So there can be some good trading picks which can come in this sector because the sector is completely rogered.
Is Brigade one of those good trading picks?
Not from a fresh trade perspective at these levels. Already run up resistance. I'll give you an alternative. Phoenix Mills. This is something that popped on my radar yesterday. Hasn't really turned into a call, but the kind of run up that it's seen and steered clear of most of the averages. So this one's very well placed technically. So I would remain constructive on Phoenix. In this space. Positional stop loss around the 725, 1730 mark.
Okay. Shrikant Chauhan. Defense looks rock solid this morning as well. All stocks starting off 1.5% higher. Is there a stock idea that you have from this set of stocks?
Yeah, absolutely. I think this particular space is definitely going to do well. And in that, we like HL, but it is already up. Bharat Electronics looks quite promising bet to buy even at current levels because there we are seeing rising top, rising bottom series, and from current levels also the stock can move towards the levels of 465, 470. So we should look for adding Bharat Electronics to our positional portfolio. We also like Bharat Dynamics. There also we saw smart recovery from lower levels. But I think at these levels, when already all these stocks have rallied to their important resistance level, I think we need to be more and more specific. And in that, Bharat Electronics should be a strong candidate to buy for.
Still about 20 seconds left. 0.9% higher for the Nifty IT. One stock that you like this morning?
Union Bank, I'll go with that call. Targets and stop losses, 194, 199 targets, 183 stop loss. So, could do well once it crosses that 190 threshold.
Watch out for the defense name, watch out for Union Bank, watch out for Wokhard, clutch of names out there that you may want to consider. We'll start off higher, that's the key thing. Between 100, 150 odd points for the Nifty. Let's see if we build on from there. And then let's see if we make a dash towards 24,500 or do we cool off. Remember, we're still midweek, not towards the end of the week as yet. So the selling pressure may be some time away. But here's how we're starting off. 150 points or 135 points in the green. Not bad really. Banks giving support to the markets today. The market breadth looks solid as well. Mid cap's about 0.78%. Small cap index should come up on your screen. My guess is that about 0.5% or more. Okay, nearly 1% actually. 153 points higher. So good brisk start for the broader end of the spectrum for sure. Let's get the heat map up on the screen and see what the large cap activity is. I reckon more activity in the mid cap space. Less red, more green. Let's start off with the green. Adani Enterprises, another 1.3% added. Larsen and Toubro is now coming back into the thick of things. Indigo, another 1.2% by the way. Keep that in mind. HDFC Life, well, this set of winners on the top 5 is changing very, very rapidly. It's brisk, active morning by the way. Infosys up about 1%. Bajaj Finance, HDFC Bank giving that bit of a support too. Not a bad start. Adani End now back to the top of the pile. And ICICI Bank in this list as well. So it's very, very rapid on a very small percentage rise. Of course, it's just about 0.5%. So nothing rara, but interesting moves there. On the losing side, Coal India, to an extent, the defensives like Nestle, HUL, etc., Asian Paints, etc., are all coming off. Reliance is marginally in the red. So bear that in mind. But I think that's the key takeaway. Coal India yet again succumbing to selling. ONGC yet again down. And on the flip side, some of the stocks which had lost out are bouncing up now. Eternal featuring in that list. This top 5, Tamanna, is really moving very, very briskly on a very low base, of course.
Yeah, about 1.5% between all of them. What's also interesting is the Nifty holding up above 24,300. Well, I wonder if you're going to hit 24,400 today and how that really looks, because gains are staying on. You're not really petering out. VIX is also benign. Let's pull up the broader markets this morning and look at what's happening there. The small cap and the mid cap coming in about 1% up on the mid cap 150. The small cap index also looking decent, about 1% up. Advanced decline ratio looking superb this morning as well. It's turning out to be a good Thursday. The sectoral heat map will also give you a picture of what's right on top, and it's equal stakes, I would say. Everything is doing well. No clear winners in that sense, and of course a full green screen. Nifty Realty, maybe Brigade would be a big pull up there because this huge township that they're going to build, nearly 7,000 acres of it, 7,000 crores worth of that value will be important to see. Defense stocks are doing well, consumer durables, metals. So a whole pack of stocks that are doing well today. The market breadth is what is crucial here. So everyone's in a bit of a buying mood is what I would say. What do you buy and what are the stocks that are being bought at this time? Let me just pull up that for you. I want to look at the results candidates, because you had a fair bit of reporting of results which is coming in, and of course this will continue over the next few days. So I want to look at an HDB, for example. HDB, ICICI Lombard, Tejas Networks. These three reported. HDB Financial is cracker, about 9% up right now. Good numbers. We had this commentary before the market started where our experts talked about now perhaps they're beginning to build up after a very rocky start to their journey in the capital markets. ICICI Lombard, good set of numbers, but the entire space, will they really move to that momentum is the question. About 0.5% up right now. Tejas Networks was a disappointment, but still just about 3.5% down, not being punished that badly compared to what the numbers look like. We talked about Brigade Newsmaker. Plans to build a Bangalore township, about 4% up. Dixon and PG Electroplast, the PLI scheme 2.0 could be on the anvil. Both those stocks up and about this morning in the opening session. GMR Airports had weak operational data, and that stock is still up in the green, about 0.5%, 0.25% up actually. Sagility has 100 crore tax demand, not very positive for it. That stock is 1% up with 100 crore tax demand. And Railtel has an order win coming in, and there's been quite a few of those for Railtel last few days. This stock again about 3.5% up. The street is in a mood to buy, Alex. That's what it's looking like.
The breadth is very comfortable at this stage, right? So you look at the 500 and just about 45 odd stocks that are trading in the red. The rest of the constituents doing particularly well. The ones that are underperforming, let's get that out of the way first. And some of the stocks Tamanna has already pointed out to you. Tejas is standing out as the worst performer for good reason. The earnings performance has not been good. Supreme Industries, Astral, Mahindra Life, not too much in the way of big losers today apart from Supreme. But what about those gainers, right? Sonata Software now gaining as much as 11.5%. eClerx up and about. Intellect Design, you have Finolex, you have Rajesh Exports, you have AB Realty, all doing particularly well in trade, and some more stocks from the broader markets. First Source Solutions is up about 5.4% or so. Brigade is continuing to hold ground. Railtel is doing well. BLS International. So of that list that I've spoken about so far, Kush, what stands out as a prime contender for booking out profits and getting out right now? Because there are some of those stocks from that list that have done well in the recent past as well.
So two names. One is Railtel. Already had a sharp run up, hitting the 200-day moving average. Yes, it's still showing strength, in the first 5 minutes of trade, but not a bad idea to take some money off the table from this. And Brigade Enterprises is the second profit booking candidate. If you see already, the high was 787 odd, and already seeing some profit booking. So some of these candidates, not a bad idea to start taking money off the table. Railtel and Brigade being those prime candidates.
Got it. Shrikant Chauhan, anything that stands out from what I've spoken about? Sonata Software is clearly the stock of the morning, gaining as much as 11%. Would you buy into this?
For Sonata Software, yes, I think the way it recovered, yes, the stock can move towards the levels of 300, 305, where it has next leg of resistance. It's a gap up opening, and it's since last few days we are seeing some volume accumulation. So it's a buy, but yes, we have to keep a stop loss somewhere close to 274 for the same. But apart from that, I think Bajaj Finance and Prestige Real Estate, I think these are the two stocks to buy for. There we can expect at least 3 to 4% sort of up move in the near future.
I think Prestige Estates, well, yes, Suraj Estates is a small company which also got an order, I think, and that stock too is active in trade, so keep that in mind. 16% on a 100 crore project win, quite something really. It must be thin volumes here. Very high volumes, but not as much in terms of percentage gains is Interglobe Aviation, but yesterday's top gainer, starting off well today, Kush Bora. Is somebody who's long, take money off the table, or can it actually do more?
That's a good question. If you already have a position at around these levels or lower, then you continue to hold. Do you go out and buy afresh? I'd suggest no. I'll tell you why. 27th February, the stock was at about 4,700, 4,800 odd levels, right? So it's in a way recovered all the losses, since the war started. But now it enters a band where it spent about 2.5, 3 months, right, within that 5,000 to 4,750, 4,800. So yes, there could be resistance. The upswing from here on could be slow and gradual. So like I said, fresh initiation, not really. But if you have a position with the kind of move that it's already shown you, you could continue to hold. Positional stop, I would suggest, at around the 50-day moving average, close to the 45-50 mark.
Okay, we call it a day on this leg of the conversation with our three experts. Shrikant Chauhan, thanks for joining in today. Kush Bora, Parag Thakkar, thank you so much for being here. Parag bhai, one sincere personal request, because you look at things so closely, if over the next 10 days you can look at the mid-cap defense space beyond BEL and try and tell us what do you like, whether you buy or not is a separate thing.
Sure,
it'd be great to understand from
absolutely,
you.
Absolutely.
All right.
Sure. Okay, yes, sure.
We hold Parag bhai to that. Okay. Thanks.
Just to clarify one thing, yesterday Alex said that IC7 is trading at 18p. If you just, so on what? Price, IC7 trades at 18p. Actually 18 is trailing. On 1 year forward basis, actually it is only 11 times X of subsidiary value.
We'll talk about this yet again. Parag bhai and his fondness for ICICI Bank. Thanks so much both of you for joining in today.
Thanks.
Okay, let's get in one more fundamental voice. Aman Chauhan, fund manager at Abacus Asset Managers LLP, Johnson, right now on the show. Aman, great having you. Thanks so much for taking the time out and being with us. Neeraj here, good morning. I was reading the House View yesterday, which Sunil had sent, and it seemed that while there are risks and all of that, this is arguably an opportune time to put money to work. Is this considering a status quo on or a resolution of the conflict being a principal driver? And if so, where is the tilt towards? Because you guys also have started a small cap fund. So are you guys tilting towards the small cap end of the market, or are you placing money equally distributing amongst all three sizes?
Morning, Neeraj. No, it's not tilted towards ceasefire or the opening up of streets. Markets tend to bottom out before the actual event happens. Even COVID, markets bottom out before the COVID vaccine came out. Or for that matter, markets bottom out with the Russia event, and the Russia war is still going on, right? So same thing is going to happen here also. The only difference here is that in the earlier events, we were not directly involved. This time around with the crude, we are significantly impacted from the higher price. So for us, market seems to have bottomed up in the near term. Crude is already 90, which is still 50% higher than what it was a few months back. Still, market has recovered from its lows. From that point, yes, the worst is over. Looks like, unless crude goes back to 120 kind of a scenario or something major happens. But for the market to sustain this rally from here on, crude has to come back. Crude has to come back into 70s, right from the 90s. That is where we'll see a rally happening in the market. Otherwise, the first leg of bounce is already behind us. And that's the reason we are constructive, but not aggressive. So we had cash in the portfolios, which we have used to gradually deploy in the month of March and even in the early part of April. But we still have cash. So it's not that we are fully deployed.
Got it. But Aman, even if the market, and by the market I mean the Nifty, right? Effectively, the Nifty, if it were to stabilize here, does this current construct, crude at where is it right now, etc., have the ammo to give rise to individual pockets, say defense, say energy transition, say select manufacturing? Can those still give you returns even if the Nifty were to stabilize or stagnate at the current levels?
But that return will be very, very selective. It's not going to be broad-based because 9.5 out of 10 companies get negatively impacted by higher crude. As simple as plastic, which is up 40%, to your shipping cost, to XYZ, everything is up, right? So this needs to be passed on. There is going to be some margin impact. We won't see that in the quarter of March because mostly for the month of March, people had some inventory, raw material or finished good, but it's clearly going to be visible in June. And who gets impacted, which way, something is going to be pretty drastic, right? So from here on, it will be very limited stocks which have limited or no impact of the higher crude, but most of the companies would have some impact, right? So we need a lower crude for rally to sustain from these levels.
Aman, but the reality is that at 95 for Brent, and if we're talking about, and good morning to you, Alex here, the reality is that people are saying that this is paper oil, right? And on the ground, the cost of oil is actually higher, one. Two, we're unlikely to see lower than $80 per barrel levels because there has been already damage to the infrastructure. And so there is going to be a period of time when we will have to contend with oil at above $80 to the barrel. And so from that perspective, you're saying that there is a possibility that we are range bound heading into the rest of 2026?
At least the first half of 26, because if crude has to stabilize at 80, then the reset is on 60 to 80. Then all the companies, the corporate India or the country as a whole has to reset itself toward 80. So the kind of earnings growth that we are projecting for 27 gets pushed out by another 6 months before the reset happens. And hence, first half, then there is no trigger. See, the problem that we are facing today is that we are not getting FI inflows. On the contrary, there is a huge amount of FI outflows, right? There has to be some trigger for the money to come back or at least stop going out, right? For that, earnings growth has to come back. FI is investing in India for the growth. So if the earnings growth is not happening in 27 and then it's going to get pushed back to 28, then we don't have any motivation to come in 27, right? So at least the first half of 27 then stays range bound. And then as people start looking at 28 and the normalized new band of crude at 80, whichever company sectors get benefited, get less benefited, whatever the reset has to be done happens, and then we look for whatever up move in the market.
Just one last point. Is it something that worries you about the consumption picture when there are news points on, say, mobile phone sales dropping? or worries about that EC companies are talking about, saying that the demand is not as robust as you might have thought. White good companies are saying that maybe we would have anticipated that demand could pick up. So does that worry you, or do you think that this is a blip that will sort itself out heading into FY27?
This is a blip because what has happened is people have just taken a step back in the uncertain times. That's what we normally do, right? Even though the diesel and the petrol prices are still the same, but people are taking a step back. Okay, I'm not buying a car in March. Maybe I'll look at it in April or May or June, something like that, right? So this is just a blip according to me. But nevertheless, minded that IMD has projected that this year monsoon is going to be below normal. If that pans out, then one needs to be careful as to how the rural demand shapes up, because it has been pretty robust over the last few years. And that is something that is more worrying, at least for now, than this temporary blip in the urban or the normal consumption that we see.
Okay.
So this will come back. But if the rural demand gets impacted due to monsoon, then that 1 year demand of rural goes away and it doesn't come back.
There are worries on the horizon. Aman, thanks so much for taking the time and for speaking to us on NDTV Profit. All right. So, incidentally, by the way, the market is looking pretty, and specifically the IT index is once again a rip-roaring success in trade today, up about 1.5% and not too far away from the high point of the day. Earlier, it was about 1.7% higher, and that's providing some comfort to the benchmark as well.
मैंने तो बोला ही था.
आपने तो बोला था.
Just kidding.
I think the other big story that we should track this morning is the government likely to roll out a second phase of the mobile production-linked incentive scheme as early as May, aimed at boosting India's mobile phone exports. We're going to be speaking with Renu Bed Pugalia. She's Senior Vice President Research at IIFL Capital, for her view on this. But before we do that, Puneet joining in to set up. Puneet, there was a query this morning. Do we know on what components or what part of the process this PLI scheme will be extended to? Any more details that we have?
Well, thank you for that. It's definitely going to be interesting. A little more details awaited. $5 billion of 46,000 crores is what the expectation is from a mobile PLI 2.0, which could be one of the key ones. This also is the second tranche. So the first one was almost 40,000 crores. That was largely in terms of scaling mobile production from 2021 to 2026, which expired in March 31st. Now, specifically to your question, what we have seen that there's been a ECMS scheme, a component scheme also announced of almost 40,000 crores. So this will be interesting if there is some speculation of majorly focusing on a lot of exports as well, because a lot of mobiles made in India now are locally made, and Dixon is one of the big beneficiary of that. But largely a lot of news and media and reports speculating that exports will be given more focus this time around in terms of incentives. So that will be something to watch. In terms of the listed space, Dixon Tech definitely one of the key ones. 80% of their revenue comes from the mobile segment, and they have started to do exports in the African continent as well as for the US for companies like Motorola, which is their big client. So there is speculation, of course, that exports will be a focus, but a second scheme for PLI specifically for mobiles will be a big boost even to the unlisted space. But Dixon Tech definitely will be a big beneficiary of this. While we await, of course, the Vivo JV, this will be a big boost for the company.
Okay, thank you so much for that, Puneet. Renu Bed Pugalia is with us this morning. Renu, very good morning to you. Do you think this is exactly what some of these companies were waiting for? This is sort of the, rain to that parched earth kind of a situation. Not that they were in a bad shape or anything, but the fact that they needed this kind of boost.
Well, hi, good morning. I think industry was expecting something. They have been discussing with the government, but it wasn't clear on the timelines. Unlike last time where PLI 1 actually brought in the entire base ecosystem of assembling and manufacturing mobile phone handsets in India, PLI 2 for mobile phones is likely to target more about backward integration on the components driven by the ECMS scheme, and also focusing more on exports than just domestic manufacturing today. So which is where I think companies were expecting some thing on the pipeline, but to that extent, PLI 2, what we hear from PTI also seems to be on expected lines.
Renu, good morning. Some conversation with some brand owners suggested that maybe the PLI may come in for companies which also are owners of brands and not just necessarily doing the EMS work per se, and therefore the PLI benefits could go to the brand owners. Could that happen? Is it in the realms of consideration? And if so, could it be advantage some of the brand owners and not necessarily the EMS players?
Possibly, yes. We have to look at the fine prints and the contours. And eventually, if you look even in terms of brand owners, these are all mobile phones manufactured in India. So indirectly, it also boosts the local domestic manufacturing ecosystem, whether they are sold in India or outside, they are made in India or imported there. So to that extent, largely it is, I would say, the entire ecosystem of and the contours of the production-linked incentive scheme has been to drive manufacturing, more localization and deepening the entire ecosystem. And the version 2 should be more focusing on the export part of the business because India domestic, most of the demand today is catered locally, including for large-scale electronic players like Apple here. So clearly, I think on the larger scheme of things, brands or players like Apple, which dominate the space, will definitely benefit. They've already had 25% of local sourcing from India. In the global shipment data, they were last year at close to 55 million units. And this scheme, in terms of focusing more on exports, will help to deepen India's footprint into Apple's, I would say, supply chain. And even for domestic manufacturers, be it Dixon or even brands there, it could be a further flip. And these brands would be also locally sourcing. So indirectly, it would be a boost to domestic manufacturing per se here.
But Renu, that's a little broad. So let me ask you this. Did PLI 1 achieve what it was meant to achieve? Or were there a few gaps? And you've just pointed out that domestic is taken care of. Export is an opportunity. But we are still not at the cutting edge of the value chain globally when it comes to tech production. Can we get there in PLI 2 or is it too early?
Getting into the cutting edge of the value chain takes time, right? So you don't start directly going into the high end of the market. You start with basics. So which is where was the target of PLI 1. And I think PLI 1 was a reasonably good success with respect to government initiatives to drive local manufacturing footprint for the electronics ecosystem. So that was the starting point. After PLI 1, we had series of ECMS schemes, backward integration. And if you look at the entire semicon policy which government rolled out, and ISM was also as a follow-up to that. You get electronics manufacturing. At the back end, you slowly start getting into OSAT and Fab. So I think PLI 1 definitely was a big success, and which is the reason why we are seeing the 2.0 version coming in pipeline. It did its due in terms of getting the larger brands, Samsung and Apple, in terms of local manufacturing footprint, and also to get in and support domestic manufacturers to get become a part of the ecosystem. So, for example, Dixon, if you look at 5 years back, they were just doing few hundred quantities of smartphone manufacturing. Last year or this year, they should be closing with almost 35 million, approximately 30 million plus of smartphone manufacturing. So it did its due in terms of encouraging domestic.
So Renu, just because you spoke about Dixon, if I can ask you very quickly, what is the kind of margin impact you see of PLI 2.0? If you had to link now this announcement with how it benefits, and I'm taking Dixon as an example because this is the most obvious one, what is the kind of benefit that you see?
Well, we don't have the detailed contours of PLI 2.0, so I'll not be able to quantify. But because of the absence of gap, only purely because of the ECMS benefit coming in only towards the end of the financial year, we were looking at close to 30-40 basis point impact on the margins. But PLI 2, the timings of it being rolled out, the details, and thereafter the kind of incentives coming in will help to bridge this gap. So right now we don't have any numbers, so I'll not be able to give any comments on the impact on margins or profitability.
Okay, no problem there. Thank you so much, Renu, for speaking with us. PLI 2.0, once there are more details available, you might see more of a reaction there. Dixon, PG, Electroplast in focus this morning. So as ICICI Lombard delivers an overall strong fourth quarter driven by healthy premium growth and improved underwriting performance. Before we get that conversation with the management, Sharad joining in with more. Sharad, the numbers seem good on the face of it, but a bit of weakness on the stock.
Well, yes, seems like a little bit of profit booking is at play, but nevertheless, the numbers were very strong, especially on the operational front. And looking at the combined ratio, there was a good improvement coming on a year-on-year basis, and the gross written premium also that beat the street estimates. Only a little bit of concern was there on the PAT because it was impacted due to the lower capital gains, higher investment provisions, and higher acquisition costs as well. But net overall, the brokerages also gave thumbs up, and there was, you could say, some upgrades also coming in. And the premium growth outlook, especially for the retail health segment, remains strong. But of course, the motor segment, there is some competition as well. But going ahead, the industry is likely to witness a little bit of price aggression in the fire segment. But to get in more details, we are joined in by the management of the company, where I had spoken with him on what led to a strong growth in Q4. Do listen in. What are the key takeaways from these earnings coming? Because there are two ratios which have done well as per the analyst estimate. One is the combined ratio and other is the gross written premium. If you could just give us the main reasons why the outperformance has happened.
So good morning to all your viewers, and let me just put this in context. I think what we have always spoken about is to say that whenever we see market getting rebound in terms of industry growth coming back, ICICI Lombard is well positioned to capitalize the opportunity of growth across segments. And this is exactly how things have played out, particularly in the second half of the year, largely aided by a lot of reforms that has been done at, let's say, governmental / the regulatory front. Now that has obviously kind of rekindled growth, even from a market perspective. And obviously, as I said, in our context, we have been able to leverage that growth potential. And that's the reason, if you look at the second half of the year, for example, the industry growth was roughly at about, I would say, close to about almost about 11%. And ICICI Lombard had grown at almost about 15%. So we had an outperformance of almost about 400 basis points at an aggregate level. And if I were to distill it down to the quarter gone by, now that delta between our growth versus the industry growth has been almost about 700 basis points. So in that sense, I think it has been a great quarter for us, aided by growth in lines of businesses which we think are viable from a profitability standpoint. And that is what has aided in terms of the overall beat when it comes to, let's say, top line revenue numbers. And exactly to your point, absolutely, bottom line, combined ratios, again, is an area which we have always focused on. And we have always maintained that from an ICICI Lombard standpoint, we would want to continue to see how we can see an improvement in combined. And that's also reflective in the quarter 4 combined ratios, which has seen a drop by almost about 150 basis points.
Right. On a year-on-year, it seems there has been an improvement coming in the claims ratio as well. Just wanted to understand, Gopal, a little bit more about the nitty-gritties about getting your company, because you spoke about the market share gains. Of course, you are having a better delta than the market growth rate. And what's the outlook looking like? At least if you could give us the initial feel of Q1. Will this sustain going ahead? Because fourth quarter, we have seen a good growth coming in most of your operational parameters. But what are the Q1 trends suggesting, especially in the month of April?
No, again, I think that's a great question. But again, let me just kind of carry forward the momentum that I spoke about. I think what we are very, very excited about is the fact that the industry is, in that sense, kind of pretty well placed to capitalize the momentum that one had seen in second half of the year. And now if we were to distill it down to some of the key segments that we keep talking about. So for example, let's take motor. In motor, again, while I spoke about the industry numbers in response to the earlier question, even in motor, I think we have been able to do two things. One, we have been able to kind of obviously outperform the industry vis-a-vis growth numbers. And there again, if you would have seen, for example, for the quarter 4 gone by, the industry grew by roughly about 10%. We grew by almost about 15%. So again, we had a huge outperformance vis-a-vis the growth in motor. And that was aided by clearly the reforms that happened, particularly on the GST front, that led to a lot of uptick in the auto volume sales. So obviously that will be a key factor as we head into the next year in terms of how one is likely to see growth getting played out. And the second and the most important thing from an ICICI Lombard standpoint is, even in our earlier calls, we have talked about how we have stayed disciplined on improving our customer retention, or let's say policy retention numbers. Very happy to note that on a full year basis, Again, across categories, I think what we have been able to do is achieve an improvement in our overall retention.
Right, Gopal. Right. We spoke about the motor segment. That's the bullishness coming in. But there's the health segment also. Will that also have the same growth rate which the bullish tone is there coming in for motor segment? And also there are some concerns in the industry, especially if a price aggression comes in for the fire segment. Will that growth be slow? So I need your opinion on both the fire segment as well as the health segment.
Thank you so much for highlighting that, because those are the next two segments that was any which was coming to. So let's look at health. I think again, health, for us, when you look at health, it's two categories: corporate health and retail health. Corporate health will always be something that we will kind of continue to kind of see more in terms of an opportunistic play, depending on exactly to your point on how pricing plays out in the market is what we will be guided with. But on the retail side, I think what the investment in distribution and product that we have always kind of talked about in the last 3 years in specific clearly has played out to our advantage. I think on retail health, our market share saw an increase from 3.3% to 4.1%. Again, if you look at it on a year-on-year basis. So again, the momentum that we are kind of getting into the next year looks very, very positive. So overall health as a category, we believe from an industry standpoint should continue to be one of the fastest growing segments. And for ICICI Lombard, we will continue to accrete market share on the health space. Coming back to the last segment, in terms of the commercial lines and more importantly on fire, you're absolutely right. And that is something that we called out even in our investor call that we had late evening yesterday. What we are seeing in the market at this point of time is a bit elevated levels of competitive intensity on price aggression. And therefore, to that extent is why we have obviously kind of, unlike the past 10 years, where ICICI Lombard has always gained market share in the commercial line segment and more importantly in fire. At this point of time, we are doing obviously a bit of wait and watch insofar as some of the large commercial line book is concerned. However, given the strength that we have in distribution, we are continuing to write some of the small and the mid corporate accounts, including the fire portfolio as well. So that's how we are kind of positioning the book. It could be a bit cautious as we head into the next year on the fire space, but the overall commercial lines, I think we still believe should continue to do well.
Right, so that's a very important commentary coming in from the management on these sectors where the focus would be, and a little bit cautiousness is definitely there in the fire segment. But Gopal, one more query is there on the IRDAI regulations and the IFRS impact. Of course, those benefits come, but they come with a lag. We already saw the GST impact cut benefiting the industry as a whole, including your company. But now this impact on this new IRDAI regulations, IFRS, which comes in, that also augurs well for the industry. So does that change your growth outlook for FY27, which was there initially? And if yes, any increase in the numbers we can expect?
So I think I think any regulatory transitions are always very, very positive. And this is something that the industry has been kind of looking forward to on transitioning to India's form of reporting. Having said that, obviously one has to kind of take a calibrated call in terms of state of preparedness for the transition to start reporting numbers on an India's basis. But having said that, I think what the new form of reporting does is obviously it kind of does correct some of the existing anomalies that exist in the current form of reporting. And therefore, to that extent, it's a better form of reflection so far as accounting outcomes are concerned. But having said that, I think what we will continue to deliver is sustained outcomes, both in terms of growth in revenues, which obviously kind of contributes for us from a return on equity to shareholder standpoint.
And Gopal, just a short question for you before we end our conversation. Your priority will be what? Growth or profitability?
At the end of the day, we have always tried to balance between the two. So as an organization, we have always said we should grow profitably.
Well, that was one point that a lot of brokerages have made also, that this company is focusing on profitability. I want to just pull up the intraday of ICICI Lombard while that conversation was on NDTV Profit as well. Slight uptick into the positive, about 1% up. We'll take a very short break. But before we take that break, and we were speaking about it since this morning, remembering Mark Mobius has passed away at 89, veteran investor, Perma India bull. And of course, we leave you in this break with some very fond memories that we at NDTV have shared with Mark Mobius. Take a look.
I always think of India as the United States of India. Great strength of India is the incredible diversity. The fact that you have these different cultures, different languages, which results in incredible creativity. You've got a market here that's one of the biggest in the world. Thank you very much for buying. Thank you.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Sell Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
We're teaming off with Dr. Vinod Hayagiri, MD and Director of CKC Jewelers. As a fifth-generation leader steering a 155-year-old legacy, he knows that brilliance takes patience. Watch at these times.
Tamil Nadu votes decisive, uniquely.
Welcome back. You're watching India Market Open. Now, one of the key events that we're tracking today is a hearing at the National Company Law Appellate Tribunal, and that's set to hear Vedanta's plea against the acceptance of the Adani bid in the JAL insolvency case. And that's set for today. Nimit is joining in to give you some details of what the case is about and what to watch out for today. Nimit.
Absolutely. So this case has been going on now for 2 years, and it looks like it's finally going to come to its conclusion today at the NCLAT, where Vedanta will finish its plea in appeal from the NCLAT's decision to approve Adani's bid plan to take over JAL in this insolvency process. Now, the key question here that is going to arise before the court today is the commercial wisdom of the creditors, which are the key stakeholders in any insolvency, versus the overall value plan. What Vedanta simply says that its value plan is worth 17,000 crore, which is about 3,500 crore in overall value more than Adani's. But what Adani has constantly been saying, and what the NCLT has upheld along with this committee of creditors, is that even though its plan is 3,500 crores less, it is being paid off in a shorter period. Vedanta's is a 6-year plan, Adani's is a 4-year plan. And also Adani's upfront payment is 6,000 crore, while Vedanta's upfront payment is 4,000 crore. So this committee of creditors has looked into all of this and made its decision saying that Adani's plan is actually better for value maximization. Vedanta is simply going to be arguing that no, you cannot be looking at all these criteria. You simply look at the overall plan, and that is what is good at value maximization. And of course, now in the last few days, as the hearing has been going on, JP Group founder Jaiprakash Gaur has also come out in support of the Adani plan and has accepted the Adani plan as part. The Supreme Court has also refused to stay the plan, and earlier, of course, the NCLT approved it. So today is almost Vedanta's last chance, last plea to make this appeal and make its case to the NCLAT, and all eyes will be at the NCLAT to see what it holds.
Yeah, all right, Standard. Thanks so much, Nimit, for that. And standard disclaimer here, of course, NDTV Profit is part of the NDTV Group, which is owned by the Adani Group. Right, now all eyes are going to be on, at least some eyes are going to be on HDFC Life Insurance. That's set to report numbers. Our eyes certainly are. And let's take you through what the key expectations are. Sharad joining in with what the street is penciling in. Sharad?
Well, Alex, Street is expecting largely a stable quarter when it comes to HDFC Life Insurance. And looking at the operational numbers, APE, that stands for annualized premium equivalent, that's expected to be up almost 3%. Retail also, over there we see expecting a 3% up move. The VNB, the value of new business margins, that's where we are seeing a downtick of almost 240 basis points. So a little bit of pressure is there. So expecting mixed to neutral set of numbers from this segment. The margins impact is seen because of the GST related impact which is there. ULIPs expected to be strong, with non-par under having a sustained competitive pressure in this segment. The retail protection is growing, but it's insufficient to offset the weak savings volume. So definitely we are expecting a mixed set of numbers when it comes to the operational numbers. And even the HDFC Bank channel is showing some sort of saturation. The non-HDFC Bank channels are underdeveloped in current levels. Agency and directly are not yet large enough to compensate. So definitely there is a mixed set of numbers expected, be it the AP numbers or the fall in the value of new business margins.
Sharad, stay on with us because HDFC AMC also set to report its numbers. A sharp downtick in other income is on the cards.
Tamanna, that's right. That's what the expectations is coming in. But remember, a lot of AMC stocks already had a run up in the last 2 to 3 weeks where the brokerage is turned cautious. So there is a thought of profit booking as well. Revenue seen down 1% sequentially, and PAT, there is a big degrowth expectation coming in. And the overall quarterly AUM, that will be a flattish or slight increase of 0.3% on a sequential basis. But the pressure is in the yields, which we already saw earlier in ICICI Pro AMC's numbers as well. Yields may fall here, and there might be equity markets correction which was there, and that impact would be coming in as well. OPEX as a percentage of AUM is largely expected to be flat, and a sharp downtick in other income will be likely negative due to the mark-to-market losses which were there in the current markets. The revenue yield, if you look at it, could see slight contraction due to the changes in AUM mix. So, of course, for HDFC AMC also, it's likely that a muted set of numbers would be coming in.
Okay, thank you for that, Sharad. Now, another report we're tracking this morning. Enforcement Directorate has arrested former Reliance Group executives Amitabh Jhunjhunwala and Amit Bapna in a bank loan fraud and money laundering case. Sources tell NDTV Profit that the remand order will be issued today. Rishabh Bhatnagar joining in with more details.
Right, what we're picking up from Enforcement Directorate sources is the fact that you have the arrest of 2 former Reliance Group executives. This is, of course, in the ongoing prevention of money laundering case that is taking place with regards to a bank fraud. What we're picking up is that Amitabh Jhunjhunwala as well as Amit Bapna have been arrested. They've been held by the ED in this particular probe. You can expect a court order on this ED remand plea post 10 a.m. today. You've had these talks and you've had these hearing in this ED case going on till late last night, about 4:30 a.m. So the order is expected around 10 a.m. After 10 a.m. These arrests are in connection with the ongoing money laundering probe, and this is, of course, against the entities of the Anil Ambani Group. So those entities are, of course, Reliance Home Finance as well as Reliance Commercial Finance. Amitabh Jhunjhunwala, he was the vice chairman of the Reliance Capital, which actually was the holding company for these entities. So that has been made, and that is the development in this particular case.
Got it. Thanks so much for that, Rishabh. Certainly a case to track. Let's take a look at the markets because we've come off the high point of the day for the benchmarks as well as for the broader markets. For the benchmark, we're now trading with gains of just about 0.2%. The decline from the day's high is as much as 119 points. For the broader markets, that's sharper. So you have a drop of about 0.9% for the mid-cap index and about 1% or so for the small-cap index. IT is where the biggest slide has actually taken place. And so IT now trading with gains of just about 0.8%. At one point, it was gaining as much as 1.7%, and so therefore some money being taken off the table. And the breadth also would have changed quite dramatically. So if we can pull up the market breadth, the advance decline ratio, that gap has narrowed quite considerably between the advances and the declines. I wonder if it changes towards the end of the session. Of course, today is the Sensex expiry, so you can anticipate extended or elevated volatility. Let's talk about an interesting update, and this is what mutual funds have done in the month of March. And there are some interesting picks that they have made and interesting stocks that they have sold. Mahima joining in to tell you about that. Mahima?
Right, Alex. So I'll start with sectors first. This is the second quarter where, healthcare and IT has remained in focus, and we've seen buy flows come in when it comes to healthcare, followed by IT, telecom and media, and then utilities. We've seen selling in sectors like financials, which has almost seen 1% selling as compared to where it was in last month, followed by auto and auto anchs, industrials, as well as building materials. These are the sectors where there was heavy selling seen. In terms of where stock-specific actions are concerned, large cap space buying was seen in HDFC, Bharti Airtel, Eternal, as well as ICICI Bank. In terms of where selling was seen, where for the mid-cap space, buying was seen in Yes Bank, Grow, Suzlon, V-Mart, as well as NTPC Green. And in the small-cap space, buying was seen in urban companies, Agility, Ujjivan Small Finance Bank, Manappuram Finance, as well as Inox Wind. When it comes to selling side, large cap selling was largely seen in IOCL, BPCL, Tata Steel, as well as Samvardhana Motherson. And in the mid-cap space, there was selling seen in Petronet LNG, HPCL, Nalco, JSW Energy, NHPC. And lastly, in the small-cap space, stocks like Samman Capital, Easy Trip, Motherson Wiring, as well as Crompton saw selling. The interesting part here was that cash positions have been lowered by around 11 basis points this quarter. Then this is the entire equity space that we are talking about. So this is the overall view of what stocks and sectors saw buying and selling in the month of March.
Thank you so much for that, Mahima. Interesting list over there. But a big conversation this morning with Vikas Kumar Jain, Managing Director and Head of Research and Strategist at CLSA India. Vikas, great to have you on NDTV Profit. As always, I'm going to start an overview of how you're seeing the relief that we see on our screens for the last 6-7 trading sessions, and not in a short-term manner, but in a sense that, do you think a case is now being made for foreign investors to look at India again?
Hi, thanks for having me. So, I'll just take you back to the real record high that we made about 18 months ago or so. We actually got quite worried at that point of time in one of our reports that we wrote, and we started getting very worried on India at that point of time. 3 reasons why we got worried. Number one, we were at nosebleed valuations on an absolute basis versus our own history, versus bonds, versus other markets. Secondly, we have this proprietary sentiment gauge, investor sentiment gauge, which was at an extreme bullish point. And thirdly, this was the point when narrative to us was like, nothing can go wrong with India. Everybody wanted some bit of India, and India was possibly the favorite market for everybody. If we come fast forward to today, all of those 3 things have changed. Some of them drastically. What has drastically changed is firstly sentiment. Our investor sentiment gauge actually made a near record low of 1% bullish from being 97% bullish 18 months ago. We've only gone this low or lower during GFC and COVID. So this is near record low sentiment. Our narrative has completely turned on its head. Nobody wants any bit of India. There's so many, multi-country fund managers or fund managers who working with multi-country funds. When we speak to foreigner India fund managers in foreign houses, And they've kind of joked with me that, even if I don't go to office, no one will notice. It's the demand for India has gone down dramatically. So that narrative is completely flipped.
But may I ask why, Vikas? Because my counter would be, you look at the latest IMF data, India still is projected to be the fastest growing economy in the world. One of the few economies where the GDP projection has actually gone up instead of down. Many would argue that we've handled this war situation well. We're in talking terms with Iran and the United States, one of the few countries that managed to get our LPG and crude out. What is the reason that these managers are telling you?
Well, I think you can count several reasons. I mean, how it started was the driving global bull market story were certain trends like AI, where although we are talking of near-term GDP growth, the narrative in that story is about how the world is going to change in slightly more medium-term perspective. As long as people believe in that story, then people will not pay so much attention on what happens very near term, number one. Number two, in very simple stock market parlance, there was a time when earnings growth in other markets was clearly lagging. On the back of whatever's happening on this story and a general cyclical pickup in other markets, India's earnings growth no more shows up as the top 1, 2, 3. That is what was happening through the period from 22 to 2024. So I would call a large part of this normalization. The narrative shift keeps happening from here and there, from time to time, to explain performance. What has happened? The complaints on India was also to do with valuation. That was the third point I was coming on to. Absolute and relative valuations have now come down to clearly more palatable levels, below 10-year average levels, around 10-year average levels. The lowest we've seen post the COVID rally started. So at least that complaint is lesser. So now one can argue that India can slowly start coming back as a discussion point. What is left is the whole narrative bit, which will take time as performance catches up. It's quite heartening to see that we've had a 10% rally in this move already.
It certainly is. And Vikas, good morning, Alex here. I'm wondering, a part of that narrative, of course, you've spoken about the India angle, but the other angle is the continuation of the AI trade. And we're speaking the morning after, you have Allbirds, a shoe company that has gained as much as it has because it's pivoted to IT, or rather AI. And I'm just wondering whether the narrative might just be inflated. I'm not necessarily commenting on one company and whether or not it will find success, but just the thought of a shoe company pivoting to artificial intelligence, computing, and gaining as much as it did.
Sure. I think that narrative will take a much longer part than what we have time for. Essentially, my simple takeaway over there is, what do you think AI is likely to be? If you believe that AI will be a tool by which it kind of solves all global problems on its own, it doesn't require any kind of human interference, then, of course, all markets where we expect more working age population kind of rising will be in trouble. However, if you believe that AI will be a tool which will be used by humans to improve efficiency, and there will be human interference, somewhere in that interface, human helping you use this tool better, then I think India can pretty much be a handy force to allow to build solutions on the back of this AI. So I am a believer on the latter, and that's why I believe a lot of what we are seeing is more a fear of India being left behind because of whatever's happening. See, we are at this stage of experimentation where trillions of dollars are being thrown just to see which model works. At this point of time, a market like India or an economy like India cannot afford to lose that much money. But once a model which is usable comes in, we will definitely be there to find better ways to use it more efficiently, to find more economical solution. And those solutions at the end is what will matter to corporates in general and to economy at large.
That's interesting and that leads me to the next point, which is what Goldman Sachs Chief Executive Officer was talking about with regard to implementation of enterprise artificial intelligence. And what I think a lot of Indian IT companies have been speaking about their role in this entire transformation. A lot of people were fearing that they would be left behind, but the fact is that they will be enablers. And so to that end, are you more positive on IT, particularly in context of what TCS did in its numbers, not necessarily asking you to comment on one specific company?
No, sure. So, Gen AI in general, we've been, our sector analyst is a firm believer that is going to help IT companies get more business, and that will actually improve their profile. Yes, models need to change, because what is going to happen is revenue per employee is likely to go up. It doesn't necessarily, the correlation of revenue and employee strength may not be like it was historically, but it will not be bad for IT companies. In fact, it might be a tailwind in the near term, is what our belief has been. So that's the belief of our sector analyst. From a more portfolio construct basis, there are times when you choose one sector over the other. Despite holding this belief, my recent portfolio changes, we went underweight IT for the simple reason that whatever I'm telling you and the fact that we have discussed for the last 2-3 minutes is a debatable topic. At a time when we expect that market is going to have a quick recovery, maybe a debatable topic will not be the place where a lot of people will spend fresh time on, and new view may not be taken. So that is the view that I've taken, that from a near-term perspective, maybe this debate will continue. And in an otherwise stronger recovery that the market might see, in a more near-term basis, IT might underperform. But that doesn't really take away our slightly more medium-term view that IT could actually be a gainer in terms of implementation of these AI solutions.
Vikash, morning, Neeraj here. And just pivoting back to your earlier point that you made, valuations have come off, and therefore at least that argument is reset, but relative valuations to some of the other faster growing economies, if you will, or earnings growth showing economies, Kospi, China, etc., probably still is high, right? What will it take for FPI interest to come back? Will it only be the valuation argument, or does it have to be something else? Because the AI story and the spends and that spend-led earnings growth is definitely not going to be for India, but going to be for some of the other markets.
Sure, Neeraj. So I think earlier the problem was 18 months ago, everything appeared risky on India. When suddenly the narrative shifted away from India, valuations were high, sentiment was, very positive already. And, ownership itself was very high. Ownership has also turned. Now, at least we can have a debate. There could be a set of fund managers who might say that, yes, there is this 1 or 2 year period in terms of where we are in the memory cycle and some of these other things, where some of our Asian peers may look much stronger. But from a slightly longer term perspective, here you're getting a market which is at fair valuations, but with a much stronger longer term story. So the ones who have a slightly longer term horizon can start coming in and taking small bites of India. All that I'm saying is that India was a rank underperformer. Just picture this. Over this 18-month period, Kospi is up 95% and Nifty is down 18%. We've underperformed by 110 percentage points over this 18-month period. I think that kind of rank underperformance is behind us. It might take some more time for us to get back to being the top performer, but we are likely to start getting near the average performer tag with this kind of a setup that we have now.
Point well made. We just talked about it yesterday, about a 50 percentage points underperformance in YTD after a 67 percentage points underperformance to Kospi in 2025. Well put, Vikash. The other question is therefore, could it well happen that and because you are looking at strategy, that the domestic flow is looking strong, and even if continues, and therefore even if the FPI interest doesn't come back, but the selling stops, the incessant selling just dies down a little bit, because they are so underperforming, so underweight India right now. Could it mean that the index stabilizes and individual pockets of strength emerge and make real gains for investors?
Yeah, sure. I think we are gunning for a normal kind of a market. See, what you need to appreciate is over 18-month period, starting October, October of 24 to March 26, total foreign selling was $45 billion, but 13 billion of that came in March 26. Okay, so that kind of aggressive selling is a very rare event. It is tough. It is unlikely that that continues for a very long time. However, I will just qualify that with one simple point that of the worries that I have, I'm more positive on the market, but there are still worries that we have. One of the worries that I have is if I look at domestic mutual fund dry powder, that is cash plus potential in multi-asset funds, potential unallocated equity positions, all of that is possibly down to the lowest levels we've seen in multi-months. This is very different from how it was, say, in April 25, when all of that was pretty high, so there was dry powder they could throw into the market. So the setup that you're saying, selling subsides, yes, it may give some kind of a floor to the market and small recovery, but for any reasonable recovery, for us to hold some kind of a rank within our peer market set, we need foreign interest to come back. And what I suspect is going to happen, since a large part of our foreign money is multi-country money, 90% of more than 90% of India foreign FIAUM in India is multi-country AUM. As the fears on the war settle, hopefully all of those worries around the war starts unraveling, maybe with a peace talk, then whatever was happening before the war starts happening again. That is, international markets come back in favor, more flows into EM. Within that flows coming in, now some of it will also come into India. And that is, I think, the better setup for India rather than just stopping of foreign outflows, as you kind of put it.
Yeah, a lot of ifs and buts there, Vikas, because if I look back to the situation even before the war, as far as FII flows are concerned, it wasn't a rosy picture in the Indian context. Just want to shift focus a little to what you're finding exciting in India right now as a house. Is it more of a defensive, let's immune ourselves to war kind of strategy, or are there clear growth areas that you're spotting?
So, not really linked to war, but since we got negative about 18 months ago, we, for a large part of the 18-month, had a portfolio where, because our sensitivity tables were showing us that even in the bull case, we were struggling to get more than 10% upside on Nifty. So we were more worried on the downside. So the portfolio mindset that we had was to protect downside. We shared that mindset with these changes that we mentioned, and we made reasonably large, you can call an overhaul of the portfolio constituents, and we have moved from protecting downside to finding upside, which is a more normal style portfolio. In fact, to us, when we trade crisis like the war that we are talking about, I think there typically is that period of, at that point of maximum pain. I think we have crossed that point of maximum pain. That point of maximum pain is the point where, in the middle of this crisis, market is dealing with scenarios, and some of them are really, really bad. If an event happens which takes out or reduces the possibility of that really bad scenarios significantly, which in this case was everybody hitting each other's energy infrastructure and crude going to $200 or so. If that is very, very less likely now than what it was 15 days ago, then I think we've seen through the max pain point in this market. And that's what the recovery also is telling us. And about a week back or so, we made a big change in the stance of our portfolio. So we are now in a more normal kind of a portfolio. The setting that we have is a post-war setting where some problems, in some areas, the macro is a little different from pre-war. It is going to be a bit more inflationary than where we were pre-war. Most likely, oil is going to settle about 20-25% higher than where we were pre-war. That means a range closer to $90 a barrel, which is not great news for India, but it's a manageable problem. At the same point of time, what might also happen is, because of that, some inflation worries being there, yields may not drop too much below pre-war levels. Mind you, even pre-war, we were hitting 7.6, 7.7% between that. So slightly higher than that. 6.6, 6.7%. Our 10-year yield. So slightly higher than that. So that setup is what we are trying to deal with. In that setup, certain questions will still remain, whether higher input costs can be passed on by consumer companies or downstream companies which are much closer to consumers. So that's where you need to be more picky, more careful, and stay as much upstream as possible where those questions are much lesser. So that's really the thought process that we have. And with yields staying high, there's clearly a slight bit of a favor towards value over growth in general.
Okay. All right, Vikash. And I think you've given us a very comprehensive view there. Thanks so much for taking the time as always.
Thank you. Thanks for having me.
All right, well, let's take a look at the markets. And we've held out with gains of just about 0.4%. We're shuttling in that range, having bounced back from the low point of the day. And for the benchmark, we are holding above 24,300, at least at this juncture. The broader market's looking sanguine and holding with gains of about 0.3% for the mid-cap index and 0.5% or so for the small-cap index as well. The breadth has narrowed quite considerably, and the IT index has lost quite a bit of ground from the high point of the day. The Nifty Bank also is holding at pace with the benchmark with gains of just about 0.5% and holding about 56,500 or thereabouts. Quite a few individual pockets of strength where stocks are reacting sharply to numbers, and a few commodity plays are doing particularly well in trade today. One of them is actually GMDC, which is doing very well for itself at this point, up as much as 13% or thereabouts, but that is eclipsed by a couple of stocks in the broader markets. First Source Solutions doing particularly well, gaining about 13.4%, and Sonata Software also doing well, up about 14% or thereabouts. But our focus at the end of the program heads towards Max Healthcare, where this is another situation where capacity is being added and an expansion is taking place into new markets. And we have a conversation lined up with the management. But before we do, let's head across to Hiral just to give you context of what they're doing. And of course, Hiral, you're going to be speaking to the management after.
Absolutely, Alex. It's very interesting to see how Max Healthcare has actually been expanding when it comes to the smart super specialty hospital in Saket. The other conversation point over here is their expansion in East India. The ideal understanding over here is that the expansion in East India will be similar in terms of cluster-based expansion that they are doing in the NCR market, and whether that will actually aid their average revenue per occupied bed, and what happens to margins as well on the back of the capacity expansion. To talk to us about this, Abhay Soy, Chairman and Managing Director at Max Healthcare, joins in. Abhay, welcome to the show. Always a pleasure to speak to you. This is Hiral on this side. My first question coming to you is, if you talk about Max Smart, it's a brownfield expansion. If you could help us understand what kind of facility this is going to be, and how would it actually be unique from the other facilities, because you have been expanding in Saket and now entering East India as well. So what is the strategic thinking behind these moves?
I think first and foremost, we've had 3 recent rollouts of new facilities attached to our existing facilities. The first one was Mohali, where we added 200 beds to our existing facility of 200 beds. The second has been Max Nanavati in Mumbai, where we've added 280 beds on existing facility of 300 beds. And now the third one, Max Saket. Again, this cluster of Saket, we have 800 beds. We are adding another 400 beds. And the primary reason for adding these beds has been that these hospitals have been facing huge occupancy numbers, and had a shortage in number of beds which are available to patients. We've got extensive waiting at the ER in these hospitals, and pretty much no availability of beds. So we had to debottleneck these hospitals. These are patients require beds. Our doctors require beds for their patients. They require OPD spaces. They require operation theaters and so on and so forth. So first and foremost, pure infrastructure has been rolled out in each one of these facilities. I think secondly, and most importantly, today, it's aspirational India. The kind of airports we land at, the kind of metro stations that we have, our infrastructure is far superior than perhaps what is there in hospitals. So what you will see these are really state-of-the-art facilities which will host the best of technology as well as the best of Indian clinical talent, which is desired today by the aspirational India as well as global medical tourists. Right? I think we will be able to showcase the best of what we have. And the starting point for that is infrastructure. So I think that's the hole which we've been able to plug with this. So in terms of touch, feel, in terms of look, etc., these are significantly superior assets compared to what we've had in the past.
Okay, so Abhay, if you're talking about NCR where Max has built a strong cluster model, is this the idea to replicate the same kind of a model in East India as well?
Yes, and so are we in doing the same in Lucknow. We are coming up with our second facility over there. We've done something very similar in Mohali, Chandigarh, where we have a facility. We're building another facility as we speak, and we expanded the first one. Dehradun, similarly. Mumbai, we're expanding the existing facility, putting up a new one in Thane. Nagpur, we're expanding the existing facility. So it makes all the more sense to do brownfields. And when you run out of brownfield space, really to look at a cluster approach, because resources can be shared, referrals can be shared, your knowledge of a market increases once you do your first facility. So it's always easier to do the follow-on facility in the same kind of. And there is advantage in clusters. In fact, there is more advantage in clusters than being present in the length or breadth of the country, so to say.
Okay, so with this expansion, Abhay, what's the kind of contribution that you're seeing in terms of earnings, and when do they really start?
Immediately, these are brownfields expansions, and immediately, in fact, your profit margins are accretive in these new facilities simply because you only look at incremental costs. The cost of the management, cost of clinicians, common utilities, etc., already incurred by the existing facility. And when you expand that facility, it's just incremental cost. All these costs don't need to be replicated. So it's extremely advantageous to do brownfield expansion.
Okay. And if I'm talking about the average revenue per occupied bed for Max Healthcare, I think it's one of the highest in the industry. If you can talk to us about how sustainable this is going to be, what is it that is driving this, premium pricing power? And with the expansion coming your way, will there be a dilution there, or are you expecting further improvement?
So first and foremost, I think, I can answer that, but first and foremost, my objective is not to maximize ARPOB, average revenue per occupied bed, or EBITDA per bed, or EBITDA margins. That certainly can't be anybody's objective. Certainly, because even from an economic standpoint or a commercial standpoint, it doesn't lead to any joy, so to say. We are generating X amount of free cash flows, alpha amount of rupees, let's say, in our present hospital network. We are in the job of investing this incremental dollar incremental rupee at high ROCEs. We seek a 20 to 25% ROCE. Now, if I get an opportunity to buy something which can immediately give me a 20-25% ROCE, it doesn't matter whether what I acquire leads to lower ARPOB, lower EBITDA margin, or lower EBITDA per bed, and drags the rest of the network numbers down from that standpoint. So long as when I deploy every incremental rupee, I'm able to make that 20 to 25% ROCE.
Okay. Very lastly, with all of this said and done, in future, what's that capacity addition that you're looking at in the next 2 to 3 years, and what is the kind of capex that it will entail?
So we're looking at, we were 3,500 beds in 2024. We are about 6,500 beds starting of 2026. In the next 3 years, we are planning to be 10,000 beds, but now we'll be a little more than that. We just acquired Bhubaneswar. you will see more beds being added through M&A route other than what we've declared, in the coming years. So I gather will be significantly higher number than that. And all our sort of expansions, we are looking at funding through internal accruals. We should be to the tune of 4,000 to 5,000 crores over the next few years.
Okay, so I think interesting aspects to watch out for going ahead as well. But thank you, Abhay, so much for joining in. Always a pleasure to speak to you. But with that, it's a wrap on this edition of India Markets Open. Up next is Ask Profit with all your queries, and at 11 a.m, a town hall with Ramdev Agarwal only on NDTV Profit. Stay tuned.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार, विमल बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
We're team off with Dr. Vinod Hayagiri, MD and Director of CKC Jewelers. As a fifth-generation leader steering a 155-year-old legacy, he knows that brilliance takes patience. Watch at these times.
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, a show that solves all your stock-related queries. With me is Mahima Vacharani as always, and it's going to be an interesting session today because we're seeing sustenance of what we saw in yesterday's move. So the Nifty continues to be in the green for now and up about 88 points. When you look at the heat map for the Nifty 50 also, it gives you that perspective where a lot of stock movers continue to be in the green today. So pull up the heat map for the Nifty 50. You'll see these individual movers in trade today. The likes of, you've seen Hindalco continue to be up. Adani Enterprises, Bajaj Finance, Tata Steel and L&T are all up in trade today. You're seeing some losers now and that gap is widening. So from roughly around 10 stocks in red, we're now increasing that to 16 for the Nifty 50, but continuing majorly to be in the green, and that's a key positive. In terms of the sectoral heat map as well, You're seeing positive moves across a bunch of sectors today. You've seen the Nifty Metal, defense, as well as what we've seen, for the IT index also continue to be in the green, while the auto and realty are down, but not with too much rigor. So we'll take that with both hands at this point of time. But overall, in the advance decline ratio, yesterday was a blistering session to say the least. A 10:1 in favor of advances, and when you pull that up as well very quickly, it shows you that almost very neck and neck we were, and now we're starting to see the widening essentially in favor of the gains as well, Mahima. But overall, the broader markets continue to be one of the key ones in terms of news flow as well as expectations before the earnings season.
Most certainly, right? And the sustenance part that you talked about, largely, of course, we saw FI buying, again yesterday. We'll have to wait and watch out for whether that happens today also or not. And just that 88 points uptick on Nifty 50, we'll have to wait and watch out for whether that happens or not. But with regards to broad end of spectrum, doing slightly better as compared to where the benchmarks go. The mid-cap 150 is up by about 0.5% off from its day's high point. So is the small cap 250 up 0.7%, but off from its day's high point. Slight recovery from the day's low point has also happened for the small cap 250. But specific names, you have GMDC, completely rocking in trade today, up 15%. First Source, Sonata Software, NLC, as well as Indian Metals, All Cargo are some of the names that are doing fairly well in the broader end of spectrum. And you have Tejas Networks, which is taking a knock in the back of its earnings. You have Mahindra Life, Confidence Petroleum, Sterlite Tech, Z Entertainment, as well as Astral, which are down in that range of 3 to 4% each. So that's with regards to where the broader end of spectrum goes. But with that, let me welcome in our guest for the day, Avinash Gorakhshakar, founder and head of research at Avinash Mentor Research Services, joining us. And we have Kush Bora with us in studio today. Kush Bora, founder of kushbora.com. Gentlemen, thank you so much for taking out the time, and a very good morning to the both of you. I'll start by taking the first question, which is from Arvind, who's writing us from Mumbai. Asking about LIC. He says that is it advisable to buy it at the current levels from a long-term perspective? 2+ years is what he's looking at, considering the bonus that was announced yesterday. Avinash, would you recommend that?
I think, Mahima, just for buying the stock for a bonus is not, doesn't make any economic sense, because as it is, I think all of us remember that the stock still trades below the IPO price. So, retail investors who had invested in the IPO are still not making any money here. It's only a matter of some relief for them that now the bonus has come in, so maybe the average cost, gets reduced. But I think there's no need to buy the stock purely for bonus. It's better that the stock goes ex-bonus. Let's see how the numbers perform. And most importantly, what kind of traction they show on the earnings side. Because, that would be a near-term trigger for the stock. As of now, not advisable to buy.
Not advisable to buy is what Avinash recommends. Despite the bonus, you have that majority shareholding by the government as a whole, 96%. So that could eventually put a pressure on the stock once that comes in. But the next question coming in on BHEL, our viewer Suina from Noida actually holds roughly around 200 shares bought at 300 rupees per share. Now, Kush, good morning. Welcome to the show. Her question largely being if she should continue to hold or move out of this particular stock, what would be your recommendation?
Hi, first of all, very good morning. I think it's a good idea to exit because 300, that's the level where the stock has, seen multiple rejections. Even in the past, the stock did briefly go above that level and, then just gave way quite rapidly. This is that false breakout kind of level where it shows strength, moves above 300 and then just fizzles out. So having seen that history repeat multiple times, I think it's a good idea to exit BHEL at cost, 300, maybe a little over that. But I wouldn't stay on in BHEL for too long at these levels.
Okay, Tata Tech is the other one. Razia from Hubli, Karnataka is asking this question. She's bought at the levels of 643 and she's holding 1725 as quantity. Wants to know if she can continue to hold or sell. Kush, I'll stick with you for this one. Your view on the charts.
Yeah, massive underperformer. What's happened in this along with the rest of the market is that even this is starting to see some sort of a bounce. I doubt this will be a lasting one, a sustainable one, for a very long time. However, the next levels of resistance come in at 610 and then at about 645, 650 the buying price. So my suggestion would be to hold right now with a stop loss at about 565, and as the stock approaches 610 and then 645 levels, you should start exiting gradually.
Got your view, Kosh. The next question, now coming in, it's on Action Construction Equipment. It's a stock that's largely been in a sideways momentum over the last year or so. Let's pull up that counter. It's trading above 900 now, but the 1 year chart gives you that real perspective. And a viewer is holding 50 shares bought at 870. So it's a recent purchase. Stock's down 27% from the highs. But Kush, is the momentum coming back now for the next 6 months, or would you recommend a viewer to just exit at the current price point? He's bought it at 870.
Yeah, so two points of compliments there. One, for the viewer, to buy this at the levels at which he is bought. So it takes courage, because that is close to the lows, maybe a little off the lows, but he's bought it at very good levels. And secondly, to you, Puneet, to lay out how beautifully the stock has reacted in the last month or so, in the last year or so, in fact. I would hold on to this, because now the things are starting to turn a corner. Volumes on the healthy side, price action on the healthy side, stocks taken on 20 and the 50-day moving average. And more importantly, if you see the last 12 to 18 months, falling trend line, that resistance is also being taken out in the last couple of days moves. So my suggestion, because you've entered at a good level, stock is starting to show strength, you should continue to hold this. I would suggest, a trailing stop loss at the 875, 880 level. So continue to hold and put a trailing stop loss at the 880 mark.
Okay, the next one is coming in on Bajaj Finance. This is from Balasubramaniam, who's writing us from Bengaluru. He's holding 20 shares of Bajaj Finance that he'd bought in November 2025 at the levels of 1014. Says he's incurring a loss of around 1720. Wants to know if he can add more at the current level to average out. Says he's a long-term investor. From a long-term perspective, Avinash, would you recommend that?
Yeah, I think, within the NBFC space, Bajaj Finance can be accumulated, but I think keep a time frame of at least a year, year and a half, because I think, the market is definitely now going to reward large NBFCs in a much better way. Interest rates have also stayed neutral, and I think demand seems to be coming back. So obviously FY27 should be a lot better. And I think the outlook also shared by Bajaj Finance has been quite encouraging. So definitely I think worth accumulating, but keep a time frame of at least 12 to 15 months.
Unimec is the other question that Ramesh from Vijayawada is asking, and viewers, you can also call us, talk to us for your stock related queries as well as of course with our guest. On Unimec, Avinash, Ramesh is holding 70 shares at 893. So he is currently sitting and incurring actually it's recovered in that sense, right, from the lows. But what would be your view? It's the quarterly results haven't been that strong. Should he still continue to hold, Avinash, for the next 5 years is what his question is.
No, I think, defense companies normally display a very lumpy kind of a pattern in terms of quarterly numbers, but I think the tailwind continues to be very strong. And I think, the company operates in a very niche area. So if the investor can hold on for the next at least 2 years, if not 5 years, I think definitely things should improve, because defense is a very large space and I think the opportunity is very large. So, you need to take a very long-term call and can't base your decisions on quarterly numbers. So I would say, yes, continue to hold, but keep the faith at least for the next 2 years.
Okay. All right. The next one is coming in on latent view. Our viewer wants to know from a 9 to 12 months perspective, can I go ahead and buy this counter? Kush, your view on the charts?
Well, the stock could see some sort of rebound and it could continue moving higher, but there's a possibility that it might hit resistances. Even those levels, by the way, come in slightly higher at about 355 and then 380 levels. So if that's a healthy return that the viewer is happy with, then you can go out and buy, because it has a major overhang of supply, because the stock's seen sharp fall and lower high lower low formation on the weekly chart. So there will be some supply pressure that will come in. But like I said, if you're happy with targets of about 345 and 380, you could consider entering at these levels. Stop loss, I would suggest at the 285 mark.
Got that view, Kush. But the next question, and Kush, largely because we've been asking this question to a lot of guests on Ola Electric. Now, viewer Ram from Hyderabad holds 11,000 shares at 32. So clearly, Ram is the smarter one of all of us at this point of time, given the buying prices. He wants a 2-year target, but largely coming to you because we've seen a very stellar move, right, Kush, from the bottom. What would be your view now? Is there enough to move above that 40 mark, which has been a key resistance? How are you viewing Ola Electric now?
Yeah, so there's a technical reason why the 40, in fact, if you push it a little and be a little precise, then 40.8 is where the resistance comes in. That is the 200-day moving average. And Puneet, you'll recall my view on this has not been as constructive, but kudos to him for buying it at lower levels and making this massive profit. If he wants to continue holding on because of the momentum, I would suggest yes, but it's a good idea to book partial profits at these levels. So book partially, and then you could hold the rest with 37, 37.5 as your stop loss. Any further move will require a comfortable close above the 40.8, 41 mark. But even now, with the kind of move that it's already had, I wouldn't really suggest a fresh entry.
Okay. All right, so that's the view coming on Ola Electric. The next one is an interesting one, and this is coming in from Muiz Ansari, who's writing us from Mumbai. He says he has one query, and he's asking as to what 2 or 3 stocks that he can buy right now and continue to hold forever. He says he's a retired person and wants to know as to what could these counters be. Avinash, if you were to pick 2 or 3 stocks right now to maybe buy from a really long-term perspective, what would those be?
I think very difficult question because the markets are so volatile.
Yeah.
But I think my sense is that businesses like steel or cement or infrastructure or hotels will not go out of business. So maybe I think he could look at investing in Indian hotels, or maybe he could think of investing in companies like Mahindra and Mahindra, or maybe even something like a Larsen and Toubro, because these businesses have got a long kind of tailwind. They are operating in sectors which are going to grow along with the economy. So I think, yes, I think if the investor can probably have the time and patience to hold on these stocks eternally, then I think these 2-3 bets in the large cap space could be better. In fact, even IT companies could be looked upon. I think IT is not all that bad, but clearly you need to have a higher risk appetite here. So something like a TCS, Infosys can also be looked upon.
What's interesting is that he has specifically mentioned that he's a retired person, but he wants these 2 to 3 forever stocks in his portfolio. So that just makes Avinash's job more tougher. But some interesting spaces, Avinash, that you highlighted. Next question is coming in from Guru. Kush, his question is directly for you. He wants to buy into a couple of key names, Sai Silk, Sula, as well as SW Solar. Now, a couple of them definitely beaten down. What is your view right now on these stocks? Should he continue to hold them, average down more? What would be your view?
Puneet, could you repeat the names again, please?
Yeah, it's Sula Vineyards, Sai Silk, as well as SW Solar.
Yeah, so Sula Vineyards is something that I would avoid right now. The reason being that, the sector has not really seen an all-out upswing, but a lot of names in this space are seeing, a good up move. So Sula Vineyards, unfortunately, hasn't participated. So I would, perhaps keep that out. Sterling SW Solar also, perhaps, you could consider because the stock is rebounding. So maybe just from that perspective, but it really doesn't have too much strength going for it. Alternatively, I would look at Warrior Premier, by the way, in this, broadly in this space. But Sai Silk, very interesting because, most of the stocks that he's mentioned are not only from a near-term perspective seen, a deep gash, from a medium to long-term perspective also they've seen a gash. So I want to perhaps understand, what is the rationale? Is it just because they're so beaten down that he wants to pick them up? That's not the best strategy, by the way. So like I said, Sula Vineyards does not feature on my list. SW Solar, maybe, but I have a preference of Vari and Premier. And Sai Silk also had a good run, but is given way now. But it's still something that you can consider. So I would suggest amongst the 3, Sai Silk is perhaps the only one that you should consider. Keep a stop loss at the 90-91 zone, and you could aim for targets of about 112 and about 125. So I'm more interested in the rationale of these stocks rather than the stocks themselves.
Yeah, all right. It's time to take a look at the F&O space, and we have Sharad standing by to give us a perspective on how the F&O queues are shaping up. Sharad, yesterday there was green on the screen, but today what are you observing? Does that still hold?
Interesting case, Mahima. Little bit of technical cool-off is at play. Of course, the markets are from the day's high levels. But nevertheless, the technicals, how it's suggesting, is still showing a good strength. Largely, we see a sea of red. 80 to 85% of constituents in Sensex are still in green. Of course, some sell-off is definitely there in HCL Tech, but there's nothing to be majorly concerned about. This is a technical pause, and it's actually healthy for the markets as well. But overall, the value buying in the mids still remain. But let's look at the stocks which should be on your radar. A key long build-up happening in which of the important counters, if you'd like to point out, and of course that includes PNB Housing Finance and Chola Finance. All the NBFCs are buzzing in trade also. There was an RBI announcement also, and that's also aiding a good momentum in these NBFC stocks. Let's look at, apart from the long build up, let's look at the short covering candidates, which should be on your radar. That's also where the action is coming in. Hindalco and IDFC First Bank make it to the list where we'll be tracking their momentums, but not major trade happening, but definitely the metals are seeing a good volume buying as well. Let's look at the long unwinding, which are the important stocks which should be on your radar. And two stocks make it to the list, GMR Airports and Eicher Motors. Not a major convincing trade, of course, GMR Airports impacted by the weak operational numbers. And lastly, I would like to point out the short build-up, the counters which should be on your radar where short build-up is there, and Astral and Supreme Industries both make it to the list. Of course, there's an important development on the industry front, and that is why we are seeing a sell-off happening, and both of them as a pair trade are seeing a big short build-up.
Okay, all right, Shara, thank you so much for getting us that perspective on the entire F&O space. Moving on to the next question, which is from Sudhir, who's probably been investing in a lot of FMCG counters and interested in a lot of FMCG counters. Today he's asking about Marico. He wants to enter into this counter at the present levels and wants to know if this is the right thing to do. Avinash, would you recommend kind of investing in Marico right now? A lot of these FMCG names are trading below its 5-year averages when it comes to valuation. But at the same time, there is the entire global uncertainty which is putting pressure in terms of raw material prices and eventually their EBITDA margins and volumes as well.
No, I think it's better to wait for the Q4 numbers because the bigger negative now for the FMCG companies is that this year the monsoon is not going to be great. The prediction has not been sound, and I think monsoon has got a very significant factor in almost all the FMCG companies. So I think it's better to wait for Q4 numbers and probably wait for maybe a quarter because the monsoon factor is going to play a very important kind of role in most of these FMCG companies. In case the monsoon is not good, I think you're going to see a significant amount of kind of a price decline for almost all the FMCG companies. So it's better to wait and watch.
And watch is what Avinash recommends. The next question coming in, it's on GMDC. Now, Bhavna from Bangalore actually bought it at 420. Stock's trading over 720 levels now, and she bought it in June 2024. So kudos to you, Bhavna, for continuing to hold this particular counter. Bought at 420, and she's holding 50 shares. Now, Kush, on the charts though, is the momentum largely done? Because we've seen some rare earth key aspect coming in on the fundamental side, but on the charts, what would you recommend? Is the move yet to continue even after this 12 to 13% move we are seeing on the stock today?
Yeah, it's interesting that you come to me, Puneet, because it's just yesterday that I had mentioned GMDC as a call with very sound technical reasons as to why it makes a good buy. And now my targets seem very conservative. Around 600 levels, my targets were 633 and 650. So that's been taken out in just a couple of days. And as you rightly said, the stocks actually run up quite a bit, especially if you include today's move. So while I do see there is momentum and the stock could go higher, given the kind of run up that it's already seen and that it's approaching overheated territories, and it has a tendency of seeing some profit booking after it reaches those overheated territories. So my suggestion would be to book partially, maybe 25-30%, and wait for a decline to add again, maybe around 660 to 680 zones. If it declines, you could go out and add that quantity again. So don't let go completely, book partial profits.
Okay, interesting one. Puneet was just putting a perspective and giving a perspective on how charts have fared for GMDC. If you would like to tell our viewers.
Well, it's been a stellar run, right? 250 rupees is the low of March 2025. So just in the last 1 year, ever since this rare earth play started to come in, I don't even want to go to COVID lows because it's trading at 55 odd rupees. But just look at the move in the last 1 year, 130%. If you can pull up the 5-year chart also if possible to make this more interesting, and it's up 12x in terms of that momentum. So it's been a stellar run, Mahima.
I know. So anybody who's caught that rally is probably sitting on a gold mine right now. But moving on to the next question, which is coming in on Enviro Infra Engineers. Our viewer wants to know whether this is the right time to enter into this counter from a long-term perspective. Anil, in fact, from Gurugram is asking this question. Avinash, what would you recommend?
Yeah, I think, the company enjoys a good order book. I think execution has also been pretty good. And in the water solution business, they have a large order book, which gives them a very good, reasonable tailwind to grow in FY27 also. And I think there are large institutional funds, a lot of ultra HNIs who have invested in this stock. So I think, if you have a 12 to 18 month time frame, I think definitely you can stay invested. You can definitely expect a decent risk reward in the coming financial year.
Got that view, Avinash. But Avinash, Kush, as well as the viewers, it's now time for the rapid fire round in this edition of Fast Profit. You both know the drill. The first question coming in now on from Vipin Kumar Sharma. He wants to know the best price for Vari Energies. Avinash, what's your view on the stock now?
I think it's a hold from our side. I think wait for the Q4 numbers. We'll probably take a call post the Q4 numbers are announced.
Okay, Tenneco Clean Air is the next one. Venkatesh is holding 38 shares at the levels of 549. Hold or exit this one, Avinash?
Yeah, continue to hold.
The next question coming in is from Anita from Vijayawada on Aisha Motors. Kush, she's holding shares at 7175, a short-term view.
I think you should continue to hold. Keep a stop loss at the 6900 mark.
The next one is on Railtel. Our viewer V Murli is holding 1000 shares at the level of, I think, 497. Wants to know as to till what time can he continue to hold this to wipe out his losses. But Kush, your technical view on the charts for this one?
Yeah, the timing is always a tricky question. My suggestion would be you can continue to hold. It could see some profit booking, but hold with a stop loss at 325.
Khurshid is holding on to Samman Capital at 139. Now, Avinash, he wants to know if he should continue to hold or sell. Is the price also where the acquisition has happened? What's your view on the stock now?
No, I think continue to hold for long term.
Sterlite Tech, is it a good time to buy for the next 3 to 6 months? Planning to buy 100 shares is what Krishna is asking. Kush, your view?
No, run up quite a bit. If you want to add, consider on declines close to the 220 to 25 mark.
Nalco is the other one, Kush, bought at 396 by Ramesh from Bangalore. What's your view on the stock now? It's been one where a lot of investors are tracking this counter now.
Absolutely, and it's given a breakout above that 420, 418 zone is a call on our advisory for buy as well. I would suggest a hold with a trailing stop loss at 425.
All right, okay, that brings us to the end of this rapid fire. Okay, all right, we still have some time is what my director is telling me, but MRP is the next one. Sushila from Bellary is holding 5,227 shares at the levels of 179. Wants to know the short-term targets on this one? Kush, your view?
No, ideally you should exit, but if you want to hold, keep a stop loss at 166.
We can't stop now, there are a lot of queries to go through, but Varun Beverages bought at 655. Avinash, is it a good time to average now? Our viewers have been holding for the last 2 years.
Yeah, I think you can average now.
Anant Raj Prasant from Bengaluru wants to know if this is a good time to make an entry into this counter for the next 2 years. Avinash, your view?
Yeah, I think you can add in a SIP kind of mode.
Kush, on Siemens, our viewer Rakesh from Hyderabad wants a short-term view on the stock. What would be your view?
If you have it, you should definitely continue to hold. Stop loss at the 3430 mark has room to move higher, even perhaps 3750, 3800 levels on the cards.
Okay, Lemon Tree bought at the levels of 110. 500 shares is what our viewers holding. View for the next 6 months, Kush?
The momentum could fizzle out, but because he's bought it at good levels, hold with a stop loss at your buying price of 110.
Sharda Cropchem also, Kush, our viewer Shobha actually bought at 1193. Currently sitting on a loss. Should she continue to hold or average down?
No. Don't average down. The momentum's not all that great, but you could still hold. Stop loss very tight at 1045.
Premier Energies 150 shares bought at the levels of 910. Hold or sell? Avinash, this has been one mid-cap stock that has been outperforming. Your view?
No, continue to hold.
Next one, the interesting one on Suzlon, but our viewers asking what could be the reason, Avinash, because of this lag. Is it just valuations or bigger players entering the space now?
No, I think a lot of institutional money coming in, and I think it's better to hold. I think you could see a better FY27 going ahead.
REC 500 shares bought at the levels of 380. Short-term view on this one, Kush?
Hitting the 200-day moving resistance, but his buy price could be achieved. So hold, but exit at buy price. Stop loss at 360.
Okay.
The next one coming in on Dabur, our viewer has bought, Animesh has bought it at 462, holding 200 shares. Now, can she hold for the next 1 year, Avinash?
Yeah, I think she can hold on, but as I mentioned to you that no fresh buying advisable, only continue to hold old positions.
Okay, the next one is on MCX. Our viewer Bala from Hanoi has 280 shares bought at the levels of 1382. Hold or sell partially? Avinash, I'll stick with you for this one.
Yeah, continue to hold.
Aether Energy is the next one for a very short term. Our viewer Raj from Delhi is asking a question. Kush, what would you recommend?
It's in the profit booking mode. Let it decline close to the 855, 850 zone. You can enter. Primary structure is positive, and in that case, stop loss will be at 820.
Gravita India, is it the right levels to enter from a long-term perspective? Avinash, your view?
Yeah, I think one can add at the current levels.
GRSC bought by Bhaskar at 3123. It's holding 64 shares. Avinash, can he exit now, or should he still continue to hold?
I think continue to hold.
Netweb Technologies, GK from Bengaluru wants to know if this is a good time to probably make an entry and continue to hold from a slightly long-term perspective. He wants your view, Kush.
Yes, you can. This had good momentum before the war started. I think you can continue to hold or even add fresh positional stop at 35.50.
Okay.
Sandeep from Hyderabad wants to buy into MedPlus for the long term. What would you recommend, Avinash? Is it a good time to buy now?
Yeah, I think continue to hold. Buying at lower levels is advisable.
HDFC Bank is the next one. Keshav from Chennai is holding 70 shares at the levels of 832. From a time period of 2 years, can he continue to hold, Avinash? Maybe add more?
Yeah, I think for the next 2 years, you can definitely look at adding it. But time frame has to be minimum 2 years.
Okay.
We of course exceeded the time, but there are so many queries, so we are keeping to going on at this point of time. On Clean Science also, Kush, if our viewer has bought it at 800, what's the view on the stock now?
Primary trend negative, rebound could take it to or closer to the buy price. So my suggestion will be a hold, stop loss at 725. But remember, primary trend negative, so you want to exit as soon as possible.
Sirma SGS, 140 shares bought at the levels of 890 a couple of months ago. From a 6 months perspective, is this a good hold, Kush?
Definitely, it's just given a breakout above that 900 mark. Continue to hold, keep a stop loss at 900, that resistance zone, now support.
Sneha is asking a question on Lemon Tree, Avinash, if it's a good time to add the stock and enter for the next 1 to 2 years. Would that be a safe bet?
Yeah, I think for the next 2 years, this definitely can give good returns.
Kush is saying no there. The development is the next one. Kush, for you, 2 months perspective on the charts. Our viewer Neha from Bengaluru has 100 shares bought at the levels of 263.
Yeah, a lot of stocks fall in this category where they could just perhaps come to your buying price, but the primary trend remains negative. So same view here also. I would suggest a tightish stop loss at 225. Doesn't look very encouraging.
Kush, since we have you here on Biocon, also a question has popped up. Is it a good time to buy at the current price, trading at 351 and fell back again from that 400 mark? Any view on the stock now?
You remember, and I suppose so do the viewers. No, I would suggest an avoid. I prefer Oro and some of the other names in this space. Avoid Biocon.
Okay, Ramakrishna Forging, holding 500 shares bought at the levels of 760. Avinash, continue to hold?
Yeah, continue to hold.
Sterlite Tech actually bought at 58 from Rajesh from Noida. Avinash is holding 1,000 odd shares of this counter. Should he still continue to hold? He's up almost 5x from his current from his buying price.
No, I think he should book out 50% and hold the rest, for the next, say, 12 to 18 months.
The next one is from Sunita, who's writing us from Hyderabad, asking about Inox Wind. She wants to know as to what would be the right buying price to invest into this counter from a short-term perspective. Kush, your view?
Yeah, so you could buy now, keep a stop loss at 89, and the stock could go to about 102 and about 114 levels. So you could buy now and keep a tight stop loss.
All right, so that's the view coming in on Inox Wind. But viewers, we've extended this rapid fire round. But like promised, we have a very exciting town hall that we're going to do right now with Ramdev Agrawal, who's going to be in our studio. All the viewers who are watching us right now, you can send us your queries that you want to go ahead and ask Ramdev Agrawal.
And that continues to be one of the bigger ones, right? It's a big time to also continue to look at, in terms of where the market is at this point of time. So you have seen that there has been, of course, the correction. You've seen some revival from the lows as well. Right. But what a time to get such a big market veteran and a big voice at this point of time, because already we've seen a 10% move from the lows. I think Vikash from CLS actually highlighted this on our show today. So it's going to be very interesting, viewers, that if you didn't buy at the dip, and even if you missed this 10% rally, if it's still a good time to look at this as well. But that's all the time from this edition of Fast Profit. A lot more, of course, Ramdev Agrawal on the other side of this break.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the self-prospectus and the tranche 1 prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
We're team off with Dr. Vinod Hayagiri, MD and Director of CKC Jewelers. As a fifth-generation leader steering a 155-year-old legacy, he knows that brilliance takes patience. Watch at these times.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
YouTube doesn't have a favorite news channel. It has three. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Sehgal. What's happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Aisha Sehgal, on Prime 5 only on NDTV 24/7.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall...
Welcome to the town hall with Ramdev Agarwal, Perma Bull, someone who has always been very positive on Indian markets. And I would say, first of all, Ramdev ji, welcome to the NDTV Profit Studios.
My pleasure.
We think it's been too long since you made
Yes.
it to our studios, but we're happy to have you here. And of
Yes.
course, our team is here to ask you questions as well. We've opened the lines to our viewers as well. So whoever wants to ask you questions has the opportunity. I hope that's okay
Yeah.
with you.
No, that's fine, but please don't ask me about any individual stocks. That's about it.
That, of course, we know the rules. So we know the rules, guys. You know what questions to give. Ramdev ji, very warm welcome. And I think it couldn't be a better time to talk to you right now because you've always been optimistic, bullish about the Indian markets. And in the last 10 days, those who had faith have been rewarded. Would you say?
Yeah, I mean, see, in anything that is most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal. What's big deal about it? I mean, market is up 3%. If you are not on the buy side, even if you are short, you say I'm bullish. So you have to be bullish when chips are down.
No, but were you bullish, say, 10 days ago when chips really looked down? There was a point at which we thought we were brink of maybe a nuclear war, and इसमें अजीब सा ये था कि युद्ध इतने देशों के बीच में हो रही है. India seemed to have been suffering the most as far as equity markets are concerned. Were you bullish even then?
Yes. Because there are two types of dialogue. When you have 10 months dialogue, it's a very different thing. When you have 10-year dialogue, in your own mind, different things will come up. If you want to be right or wrong in 10 months' time or 3 months' time or tomorrow or day after, then, God knows what to see. Probably just about who's buying, selling and those kind of stuff. But when you are buying for 10 years, 20 years, I typically think that I'm buying for 25 years. It's different that I'm not right every time. But I always buy thinking that it's 20-25 year kind of bet. So the dialogue is very different actually. In my mind dialogue is very different. And that keeps me, if you see my last wealth creation study which we did just now, see what is the summary of the report? The summary of the report is the world is becoming wealthier year after year. If you see last 50 years, 75 years, world is becoming wealthier. India is becoming wealthier at double the speed. World is becoming wealthier at 7% nominal dollar. We are becoming wealthier at 14% nominal dollar. Now 14% is not double of 7%. If you take a 10-15 year profile. So India is emerging very rapidly. Of course, other countries are also emerging like
it's
China.
It's also our base case, which is the reason why India is emerging more rapidly.
That is also one of the same. That also allows me to be emerging for next 50 years.
Yeah.
So it's a very long story, and there are very few compounded countries, predictable countries. One is, of course, nothing can beat US. US is one and the only one. Like in last 15-20 years, US has gone from 30% of total global market cap share to 50%. You imagine, the world is growing at 7%. In that, US went from 30% to 50%.
Sir, FIIs ये सब क्यों नहीं देख रहे हैं?
See, they are for 10 months. They want to be right in the next 1 year, 2 years. I don't care. I want to be right on 10-year basis.
So you're saying that the average investor should not worry about the FII figures today. We were earlier this morning speaking with a prominent market voice, and he said exactly this, that the conversations he's having with his friends who manage India for global funds is that हम office आए नहीं आए कोई फर्क नहीं पड़ता है. No one is looking at India right now globally.
Yeah.
Why aren't they seeing all of these points that you are talking about?
India for them is very small. Say if there is one micro cap where a lot of excitement is happening, I don't care. Because in my scheme of things, that 100, 200 crore company or 300 crore company, I cannot buy enough. So I don't bother about what's happening in that company. India, in their mind, is something like that. And particularly if you're sitting in US, which is now $70 trillion market cap, where single companies are bigger than India. Well, would you bother about an NVIDIA? Or would you bother about thousands of companies in India? So it has become like that, and US is doing extremely well thanks to this AI and AI-led capex and whatever is happening there. It's crazy. It looks scary. If they have 55-60% of the global market cap, can they go to 70-75% types? That's the kind of run. If you look at internet-based businesses, they are the only guys. There's nobody.
From a 10-year perspective, how are you looking at AI? Are you looking at it at the next big thing? We should be worried because that's the horizon. Or is it something which is being overestimated right now?
It's very tough to say for me, but it's a very big development. These kind of times happen every 15-20 years. We saw the mobile phone coming in, then we saw internet coming in, then we saw the internet and mobile coming together. That exploded everything out here. Literally everything, payment and scheduling and your road, everything is out here, and more things are coming. So we have seen that advent, and now AI will do its own magic. In what way? Consumer AI we have seen, where you can get your essays right for your son, you can get your letter well written. Those kind of things are done. But the enterprise AI is a very different ballgame, and that's where enterprise and government AI is not that easy nut to crack. It's not that easy as people are talking about. That will also require a lot of intelligent people to run it. You can write your own essay on your own, but you can't run a company with you can't give one instruction and the company will be run. So yes, you might do your things faster, but it's also not the situation that requirement of AI or software are limited. One of the funny thing or best thing is when things become cheaper, particularly software becomes cheaper, demand is unlimited, literally infinite. So say today, if there are 1 million projects are there in the system, and the 1 million projects could be say 20% or 30% faster in execution, there are 10 more million projects waiting to happen. So what do you do with that? So I think eventually demand will explode. That's my sense. Right now for a year and a half, there will be readjustment of the old model and new model, and then eventually the new model will explode. I mean, once the software is developed, once the way enterprise will adopt AI, if that is clear, I think all the projects will be done by the same services companies.
So you think IT companies will survive, thrive and come out smelling of roses?
Survive for sure. How much they'll thrive, it depends on their own adaptability and at what pace diffusion of the technology happens through enterprises.
Okay. So, in fact, we have viewer queries coming in. I'm not going to hog all the questions from Ramdev Agarwal, so don't worry. All of you viewers will get a chance. So will our team over here. But there is one quick query which has come in while we were talking. If you had to hold only 5 stocks or sectors for the next decade, what would they be? And Ravi specifically saying, is it a right time to invest in IT space given the AI disruption? Nothing stock sector specific. But you know, there's always a debate about IT, and we get both views.
Yeah. So in IT, I have been saying for last 2-3 years since I advent of this AI that it is headwinded. See, I met somebody very senior from Microsoft. He said the era of headcount driven model is over. See, if you have 500,000 people working for you, you don't need another 500,000 to double now your revenue. So, one part of the engine of Indian IT is kind of gone, where they used to add people at 15-20% every year. So that's gone. So will they be able to increase the productivity of the people or profitability per person at that pace? But I'm not competent to answer that. So I would still say the sector is headwinded. I would be very cautious unless I have extra insight. I would not put in more money.
Okay, cautious on IT. Let's get some questions in-house. Alex is starting off first.
So, Ramdevji, always a pleasure listening to you. And the question I have is more strategic in nature or tactical in nature, which is that oftentimes over the course of the last decade, we've spoken about fill it, shut it, forget it, patience, etc., and looking at the long-term horizon. But that the reality is that we remember the winners of that strategy. To say that in the 90s, you had an Infi that came in and now look at what Infi has done, right? But you don't remember those that have fallen by the roadside. Is there a pitfall holding on to companies that have been relative underperformers valuation-wise because they can have a hole in your portfolio as a result of that? When do you pull the plug?
I mean, you have to see, fundamentally in investing, you have to understand what you're doing. You know, what stocks you're buying, why you are buying, what is the source of value, where is the price and where is the value. That understanding is constant, not constant, because the value is continuously changing. As the company is growing, the value of the company is growing. Say like when we got listed, we were 1,000 crores. Today we are 40,000 crores. And we are growing at 25%. So my value, I hope I am able to grow my value. So, so long as the value of the company is growing, you are pretty comfortable even if price is fluctuating a little bit. If the value of the company is not growing, then obviously you have to take your call.
But even blue chips, you're happy to sell. And
forget about blue chip, red chips. I'm talking about your company. You know, so let's.
I'm going to actually take you up on that. Forget about blue chips, red chips. Do you think that classification and definition has changed over the last few years? You have mid-cap companies which are at huge market cap and value. And that old way of just looking at blue chips with the depth of the Indian market right now is also changing?
Come again.
My point is, should we look at blue chips with the same awe that we used to? Just taking from the point that you made about blue chips and red chips.
So I think one of the big differences is the availability of data. Now markets will become far more aligned to data rather than this. See, when you had scarcity of data, so you know you are saying, okay, you are a Tata, you are an FI, you are a what is that, multinational company, because they were known for terrific management and markets were generally reasonably priced. If the market is at 12, 13, 14 P and you are a multinational company, Colgate, Lever, underpenetrated categories and all, so your management was never a concern. You know, so you made a lot of money because of aligning with them. But now, because those quality has been so much, thanks to Buffett, the quality has been so much overpriced, irrespective of the growth, that they have been stuck at 50, 60, 70 P multiple. Whereas I am getting the companies, young companies at 15, 20 P multiple and growing at 20, 25%. Who the hell bothers about those 70, 80 P multiple? All the P's will get corrected. They will not make money. They cannot make money at 70p. If they don't grow at 25, 30%, there is no hope in hell to make money. So even if you have the bluest of blue chip, and if the valuations are upwards of 50, 60 times, and the companies are glorifyingly growing at 5%, just run.
That's the big one. I think that's the clearest answer we can get to blue chip and red chip. Puneet has a question there.
Actually, on continuing your point, because within the Nifty, you've seen IT and FMCG, both those counters haven't performed well in the last 5 to 6 years, and the growth hasn't been there. So continuing your point, are these largely dinosaurs essentially in that sense, and will you see that change, or should people or investors look at the broader end of spectrum, and how do you look at from that perspective?
So there are no dinosaurs in these companies, but there are phases of tailwind and headwind. In every business, while they are growing, say HDFC Bank. I'm just giving an example. Like they came in 85. They were 1,000 crore company. When they got listed, it was less than 1,000 crore company. It got listed $40, 200 crores of equity. So it was definitely less than 1,000 crores or 1,100 crores kind of market cap. Which in next 25, 30 years, it became a 12 lakh crore company. Almost became number 2 company of the country, and it was a pride of the world in terms of banking system. Okay, so they had a continuous tailwind from the management side and from the business side. Tailwind is still there in the business side, but there is a management transition, so it is taking a breather. It doesn't mean they have become dinosaur. They will, once everything transition is over, they'll again get the growth path. So what you do now, you made a lot of money out of them, or they look cheap relatively. And what do you do? So those are difficult things,
Yeah, no, but please answer that question. That is, sir, you
company
are
specific.
No, company question, company specific, nahi, but those difficult questions have to answer, because I'll put it in context. I'll put my question in context. The argument is being made that because of geopolitical factors, etc., valuable companies in India are available at rates they haven't been for several years, and for no fault of theirs. These are things that are out of our control. Should you be looking at them with fresh eyes?
That is what. You should have independent mind. Market is going this side, left side, you should go right side. Because the data and valuation is telling me that there is a tremendous opportunity in banking side. What has happened is the private sector banks have been bought by foreigners. Almost 40 to 50% of the banks have been bought by them. Literally, they own the private sector banks. I think 45 or 48% of HDFC, which is like almost 12 lakh crores, so 5-6 lakh crores worth of stuff is lying with them. And for somehow they're not in love with India. So they've been selling. And what will they sell? What they have, they'll sell. They can't sell what they don't have. So they're selling. So there is a continuous pressure on that. And combined with that, you have whatever is happening in the transition of the bank. So that has depressed the price. Now, if you get the premium bank at 13, 14, 15 PE, how can other banks be any more expensive? The whole sector is under crowd. And the banks are extremely, if you look at their numbers, their gross NPA has never been so low. Net NPA has never been, it is pristine banking system right now. Growing at, you saw the yesterday credit growth, 16%. I think this is the best sector to have. 16% system growth, and you are getting at 12, SBI you're getting for 10p, HDFC over 13, 14p, something like that. All of them are sub 15p, and your credit growth is 16%. I think if you don't make money here, at least my system tells me that you should be making decent amount of money in the next 1 or 2, 3 years.
Okay, we have a query coming in. I just want to see who it's from. Krishna Kumar from Bengaluru. As we are speaking, there's a part where he's saying, big fan of yours, watch your videos regularly. Sir, aapke bahut fans hai jo abhi dekh rahe hain. He's saying, I have 10 lakhs to invest for 9 to 10 months with high risk return. Please tell me the 2-3 shares, not mutual funds. Sir, share to batayenge nahi. First of all that. I want to come to the thought behind the query. Invest with a horizon of 9 to 10 months with high risk, high return.
So I have no idea for 9 to 10 months, guys. I'm telling you. No, I'm all about 10 years.
Is this the worst idea for investors right now?
No, it's not. See, See, there are million guys, there are million ways of making money. The beauty of the markets are like that. You know, if there are million guys, actually there are million ways of making money. You have found your way of making money, you don't have to bother about jokers like us. You know, so, because I have my way of making money. I am at peace. I run a company and I invest. I enjoy investing. So, since I have made from zero, I can also be I can be extremely patient guy. You know, I can see a lot of adversity. I have seen a lot of adversity. I have seen 67%, 67% correction in the market in my portfolios. So it doesn't, I mean, the downside, so long the story of the company is right, it doesn't hurt me. It doesn't pain me. It doesn't take my sleep away. No. I am pretty peaceful. But is that the kind of temperament everybody has? Obviously not. You know, so you have to see your temperament and what works for you and how you have been able to in market. It's not that today is day one. So if you are there for 5-10 years, you must have found your way of making money. Just stay with that and keep making money.
If you have actually made money, if it's worked for you, that is the important part.
No, I think in India there is. I can challenge. In last 5 years back, if anybody has come, if he has not made money, I need to get. And if he has invested, he's not speculated. Of course, almost 90% would have lost money. But if he has invested purely, he would have made money. Maybe not 20%, 30%, but 10, 12, better than fixed income. He would have definitely made.
I want to ask you a question very, candidly. In the last 5-6 weeks, when all of this war stuff started coming in, we saw crude go up to 110, 119, no idea, people are talking about 150. Was there any point at which the bull inside Ramdev Agarwal was scared or worried?
No.
Were you worried?
No.
Not one single day?
Why I'm telling you? Because ultimately, we are not in the, this is not our war. We are indirectly impacted. Iran itself is just about 0.3% of global GDP. First, when this kind of thing happens, I go and see the Wikimedia. How big is the country which is under destruction? So Iran is just about $300 billion country. Okay, why it became so serious is because of Gulf of Hormuz, where a lot of this oil comes out and 15-20% of oil moves, petrochemical moves, your LNG moves, your plastics move, helium moves. So those things, I mean, so many rich countries are sending their petroleum products out. So that became a issue, and then oil started climbing. And we are 70-80% energy importer. So directly and indirectly, that is started hurting the company's performances, supply chain, and cost structure. And so like plastic products are up by 30, 40, 50%.
Yeah.
So obviously the packaging cost, so wherever packaging intensity is there, those companies have to pay. And can they pass on immediately? Obviously not. So it brings inflationary pressure. Government is absorbing to some extent petrol, diesel hike, but how long? After elections and all, they will also kind of reconsider this. So that will take away my purchasing power out to whosoever is supplying the energy. So to that extent, they'll be hurt. And hence, the corporate earnings will be hurt. So if my corporate earning was to grow by 15% next year, that might grow at 13%, 12%.
But it didn't bother you beyond that?
Yeah, and market had already corrected. So what is there to bother?
Okay, we're going to mix it up. Kush Bora for our question, and then of course we'll come to others over there. Yes, Kush.
Very good morning, Ramdevji. 2 questions, in fact, if I can be a little greedy. One, typically these war-driven or event-driven bottoms, make the base for the next bull run. But with FII participation not returning, do you see that happening in the next 1, 2, maybe 3 years? That's the first part. And the second part is we've already seen that the retail participation, direct retail participation in markets is starting to dwindle. So in part, you've already answered this, but how does retail approach this? Typically you see when the markets are rising, retail comes in, and when markets go down, retail exits. So how does a retail participant and individual approach this? Asset allocation or still continue and have that faith in the markets and still keep on investing?
I don't know. So many questions are there. Which one to? So I'll tell you. See, market is going through a structural change. In last 5 years, say till 2020, it was very FI dominated market, and Indian institutions were not that strong because retail flow was very, very limited. Come 2020, and instead of 300,000 customers, we are getting as a system 3 million customers, 10x, and till last month we got it. Okay, so this is structural shift of the Indian market, and so DI flow is staggering, and it will keep becoming bigger. I don't have any doubts. Maybe for 6 months, 8 months, it could slow down, But if you look at say 5 year henceforth, it will double. If it was 5 lakhs or 7 lakhs this year, it will be 2x of that in 5 to 7 years. So that will keep increasing. There is no doubt about it. Now what FI will do? FI will keep selling. My sense is they'll keep selling till India stays here and the world stays here. Okay, they are the only arbitraging machine between India and rest of the world.
Yeah.
Because we are not allowed to go out. In fact, I wrote to one CIO or somebody that please open we should also be allowed to go out in a limited way through ETFs or something, so that the level here is little lower.
Yeah.
So that FIs don't have any encouragement to go out, and actually they have encouragement to come in. So that you open the two arbitraging machines, one through the FI and second through the domestic, in a limited way. So that is work in progress. So, but then what will happen is that India will remain expensive, and India will keep getting DI in a very sequential way, increasing number. As the GDP rises, the contribution here will come. Third, what has happened is the interest rates have come down. If you look at your savings deposit, you get about 2.5%, 3%, something like that.
Yeah.
So obviously there is no encouragement. Your inflation is 3, 4%, 5%. There is no encouragement to the people at large to actually go and deposit in banks. And now digital system and the marketing of mutual fund Sahiya is so intense that people are getting aligned to sending money for stock market. So I think we are passing through multiple forces. Most of them positive, except for FI is going out.
But have you observed active retail investor participation coming down? There was NSE data that shows active retail participation has come down in the last year.
I can tell you we run one of the largest broking, active broking that too, with a 98% pin codes all over the country. My March revenue from broking only is 37% higher than last year's March.
What are you saying? Well, that's the data from the horse's mouth. Hiral there.
Hi, Ramdev ji.
Hi.
I've been following you since years, and I've seen a knack that you have to even pick companies from the unlisted space. You identify gems over there even way before they are in the IPO stage. Now, the unlisted shares market is also something which is growing rapidly right now. Data, obviously, it's unaccounted for. There is no data to prove as to how big that market is. My question is, for example, a company like Lahori, that Motilal Oswal has, is looking at. A good way to look at a company like that, and in the past, we've seen something like a Manpasand also. Now, lot of learnings that come in, right? But because of one episode, you cannot stop looking at that sector or a company like that. So if you have to look at both of these scenarios and the kind of knack that you have, what would your learning be to a retail investor who wants to learn to identify companies and learn from their mistakes?
So, do I have to talk about your Manpasand and Lahori?
I don't want you to talk about the companies.
Yeah.
It's more about understanding and identifying.
How do you learn from your mistakes?
Yeah. So, learn is that, Manpasand I personally lost a lot of money.
Yeah.
So, your assessment of the person goes wrong. See, businesses, it's fine. Businesses will go up, down, their tailwind, headwind, margins can go up, sugar prices are up, pricing. That can happen, But when the guys are crooks, very rarely you get that level of, fraud in your investment. Probably this is the only one of this order. So it happens.
No, but in such a vast history of investment, these examples are going to come about. You're not going to get them all right.
Yeah. So yes. So this was one of them. That doesn't take away my process, in the sense that we went through an entire process. In fact, my research in that company was most intensive, I would say, and we were literally talking to all the established investor, private equity investor for 5-7 years, and yet they couldn't catch it. So that's fine. That happens. This guy must be very smart. But now coming to any other company, see, one of the opportunity in unlisted is that you get access to a lot of data, and the companies are not that big. They are at nascent stage, so you can ask a lot of questions and you can see the path ahead, and then they need a lot of guidance, so you can buy at reasonable prices, and typically they will go public after 5-10 years, so you have buy and hold. See, real investing is necessarily at least 5 to 7 years. If you want to be a true investor, at least few years time has to be given, 3 to 5 years, 10 years. If you're not giving that, then you're kind of semi-speculator, I would say. I mean, if it turns out lucky, you buy something and it flies 5-10 times in next 1 or 2 years. That's what people love. But that doesn't happen every time. I bought Bharti at $25. In 2 years' time, it went 25x. So, but I didn't buy thinking that it's going to go 25x. I bought it for doubler in 3 years, and I wanted to sit through 25 years. You know, so see, starting point thought process is one, and what really happens later on, because the events you don't have control over the events. So I think you have to have a process of investing, whether it is listed or unlisted. We call it QGLP. So if you follow the QGLP process, there's enough material out there.
What is QGLP, sir?
So quality, growth, longevity at reasonable price.
Okay.
So after doing I'm doing this wealth creation studies every year. So after, I think 20 studies or 18 studies, we wrote in 2014 that we have found our mantra of investing. Okay, that is called QGLP. We quoted it QGLP so that it becomes easy to this thing. And then even now, after 12 years, I can tell you it is a fantastic piece of research. And I use that only. So when I'm looking at a company, I look at quality of business, quality of management, longevity, and reasonable price. That's it. But I don't go to the price. See, the problem is most of the so-called investors, they start with the price without knowing what they're pricing. How do you price?
So there used to be a QS, QT, now it is QGLP.
For me, it is QGLP all the way.
Okay, talking about lessons in investing, I'm just going to take a viewer question and we're mixing it up as well. So Ramya Srinivasan has written this question. I thought it was an interesting one, saying, when should an investor consider exiting a position even at a loss? This kind of a decision, I think, is also a mindset decision, not just a price decision. वो दम होना चाहिए.
दम नहीं,
या गट्स होने चाहिए.
हाँ नहीं, ऐसा कितना क्या गट्स. आप 25 पोजीशन लिए हो, उसमें एक पोजीशन खराब हो गए तो क्लीन द डैम थिंग, उसमें क्या है. So Phil Fisher, this is a Phil Fisher dialogue from Common Stocks, Uncommon Profits. He used to give 3 years. He's one of the finest growth investor, I would say, and who talks about investing. Buffett, he talks a lot of big things, but he doesn't give you those, how-to types, So this Phil Fisher says he typically used to buy for 3 years. He will give any thought process you have developed, give a time of 3 years. Say if any company you think it is going to go from, say it is growing at 25%, so in 3 years' time it will double. So you buy a bank which is earning, say, 2,500 crores, and you think in next 3 years it will go to 5,000 crores profit. But 3 years will take 3 years. So you buy today at, say, 20p or 25p and wait. And then things work out better than your expectation or worse than your expectation. If it works out better than your expectation, you double up position. Because your depth of knowledge will keep increasing after investing. So you have researched to some extent as much as you can, but actually real research starts happening once you have put in money.
Yeah.
Because see, life of the even life of the companies are not in the hands of the promoter.
That's true.
A lot of things happen which is beyond you.
There's so many external factors.
External factors. So external factors, if it turns out to be very, very favorable. If you're in packaging company and suddenly this Iran thing happens, I mean, you never thought that there will be such a problem that raw material prices will go up by 50%, my working capital requirement will go up by 50%, where do I go? So it changes the outlook.
You think MSMEs will take time to recover? Even if we do see some kind of a ceasefire extension, etc., fact is crude is still at 95, 96, not at 76, 80 levels. So that some of the damage has already been done?
Yeah, definitely. Every day, every minute is damaging. So in businesses, you miss a quarter, so then it starts calling on your reserves or your margins, existing margin. If you're running 10% margin, it will become to 8%, 7%, 6%, or maybe if you're 5% margin, you're vulnerable. So those things happen. And a lot of the marginal companies, weaker companies will have tough time in, starting now for 6 months.
Yeah, so next 6 months is going to be important. Okay, Mahima there, waiting patiently.
Yeah. So you talked about how you're bullish on financials right now. When you say from a 10 years, lens right now, are there any emerging themes that you're looking at? Let's say green energy, data centers, AI, anything particular that you're tracking actively, and you think that in the next 10 years, these are the themes that, would bring in a lot of money?
Yeah, so actually I don't pick stocks directly. Now I invest in my own products, Motilal Oswal private equity or mutual funds, and also I'm not that much on stock picking, but something comes along, I still take interest in reading the balance sheet, meeting the management, those kind of things. But But I see growth all over, particularly capital market. You know, finances, lending is one thing, but because there's 3 million customers we are getting every month, there's a very explosive growth in the capital markets. Explosive. I mean, that's the word. It's not even linear growth. It's exponential growth. So your AMCs, broking, depositories, exchanges, I mean, God knows how, I mean, if the rules, I mean, nothing changes, I think they are sitting on a literally, you know, path to heaven.
Are there any overhyped stories you're seeing right now where you think that the optimism is not warranted?
Stock-wise, there could be, but not generally.
In terms of space, sector, is it defense? How much more of an upside? Green energy, for example, idea is good, but ho kya raha hai? Solar. I mean, I'm just giving examples.
Yeah,
is there
but
anything
it's
like
not
that?
grossly overpriced or overplayed theme types, you know. Like in 21-22, there was the digital, which was just, you know, so even digital companies, internet companies, they are quite corrected, you know. So I would think that broadly market is very balanced, so to say. So it's not very cheap. At 21 times multiple, it's a fully priced market.
Yeah, but how much quick commerce can grow, for example? How much of these can grow? People are wondering, you know, when will profitability come? You've always been a believer in that space. There are enough on the other side who say that, you know, loss-making company bar fund utha rahi hai. What does it really mean?
No, I mean, I generally don't buy companies which are making losses, but here I think there is a consumer shift, the way we run our household. I think that is undergoing change, and that is not going to reverse. And the category is very large, and so one has to see how the accounting happens here. They don't have stores, so it's a cost. So there is a cost of acquisition of the customers. How much you have blown? See, you have to see if you are building a 50,000 crore turnover business, how much you have spent. If you do it through the actual stores, how much it would have costed? It would have costed you 15-20,000 crores of stores to do those 50,000 crores turnover. Here it has costed you 8-10,000 crores of losses to get you all onto the online. So, I mean, it is the way you look at it. And when you build a store gets capitalized. Whereas here, entire thing goes in the P&L. So that's what the loss you see. If by chance you force the store companies to write off their store also in the P&L, the numbers will look very different.
Oh, yeah, that's a good way of looking at it.
That's
Have you seen your own habits shift? Do you order a lot online?
Yeah, I don't order. I see in my home things coming in, but my daughter-in-law runs only on I mean, one of the quick commerce.
Yeah, that's completely it.
Yeah, so younger people, they are far more aligned. My staff is far more aligned than we people. But yes, but then I know, I have all the app here.
I'll tell you the reason I asked this question. When you are spotting opportunity, do you also take away from observation what you're seeing around you? And then, of course, you have to go and look at what the company is doing, how the management is, the numbers, etc. But how much of a part does that play, the skill of observation?
Yeah, so see, I think observation or common sense, you know. The common sense is, you can't take away common sense in investing. That's the most important part, and that's where you get conviction, and you have I would say conviction. See, like all these companies are making losses, but I have in my portfolio all three of them.
So some of that conviction comes from what you're observing around you.
Yes, if nobody's using quick commerce and then I'm holding the stock, then I'm in deep trouble. But if they're growing at 100%, every now and then we are using it, and crazy things are herbal on this thing on the go. So I think, I mean, but it's speculative. It's not a classical my type of investment. I don't buy things unless there is a profit and growth in profit. So this is not my type of investment, but sometimes you take a punt.
Wow. I think ever since you took this punt, it's all proven right so far. I don't think there's anything.
Nothing like that.
At least in this space, it's not been.
No, like we are underwater in what is that other third one? Insta. Swiggy, yeah. So because there is so much of competition and all, so it's not that it has made money or anything like that. It's nothing, but it is very exciting space. See, it's again 10-month and 10-year dialogue. If you are buying for 10 years, I think you could be sitting on some fancy gains, but on 10 months, God knows whether it will be profitable or loss making.
Yeah, the idea is to have that patience, Varsha.
you so much. Hello, sir. Pleasure to have you. My question is related to valuation. Suppose if a company is available at 80, 90 PE with a growth visibility of over 5 years, should investor invest in that company or should give a pass on? Why I'm asking this is because even if a single bad news comes, the stock will take a massive hit. So what should an investor do in that situation, considering the growth visibility over 5 years?
What growth visibility? What level of growth?
Say the company is going at 35-40% for the next 5 years.
40%, then it can sustain for 90p.
Even if the bad news comes?
Yes. No. But growth should come. See, if the bad news is related to growth only slumping, then obviously the stock will suffer. But if the growth continues, but there is the Iran war or something, then it will suffer for some time. It will come back very quickly. Then the stock deserves to be at 70-80p if it is growing at 40% for next 5 years.
I think the big distinction over there to highlight is that is the bad news because of something endemic to the company, a problem that is within, say, the management or the kind of business or a tectonic shift, or is it an external one which can come and go? I think that is important to differentiate.
Yeah, see, earnings is the core of valuation. If the earnings is not impacted, but external forces are, FI is selling, this is selling, that is selling, but earnings are intact, I don't care who is coming and going. Someday the guy who was going out, he will come in a rush, So tomorrow things may change. India might emerge as the only country to go to. So then what do you do? Then everyone wants to, see, today only DI is buying. Tomorrow if by chance situation comes where DI and FI both want to buy, where are the stocks?
So, just to come back, and you gave very important data points from March as well. Do you think that fear of what will happen with the SIP loyalists is overblown? I was looking at one report today which said Nifty SIP returns for investors are at 0 for the last 3 years.
Yes, it could be.
Not everyone has that patience to stay on.
Yeah, so market can go through further correction. But 10 years henceforth, the market where it has to go will be there only. In between, say, so for last 1 year, market has done nothing. For last 2 years, I think it has done nothing.
Yeah.
1.5, 2 years, it has done nothing. Maybe another year of consolidation.
You think another year of consolidation?
I don't know. I don't know. I am looking at my companies which I have invested in, whether they are growing at 20-25% or not. My job, see, this market thing is just a time pass, I am telling you.
Kya baat kar rahe hain, sir?
It's complete time pass. It's made for NDTV Profit and CNBC only.
No, it's a lot of people sit and watch what we do. So you're saying market outlook is not something you're worried about at all. If I were to ask you like next 12 months...
Who is going to give me 10 years market outlook?
No, 1 year.
Yeah.
1 year outlook. 1 year
but
outlook
I bought the stock for 10 years.
Okay. You know, there's one, I know we've taken a lot of your time, but there's so many queries coming in. So just a few more I will take. So from Chennai, B. Soumya is writing, what's a sector people are missing today but may dominate tomorrow? Anything that you have spotted which maybe B. Soumya from Chennai has not?
I think capital markets.
Yeah.
People have done well, exchanges have done well, BSE has done well. BSE, for your information, for last 6 years, the fastest growing company. It has grown double every year. Double every year, you imagine. From 9-10,000 crores, it is up to more than 1,10,000 crores or something.
And you're going to have...
And we're just watching like that.
But you know, scarcity premium will go when you have another player which will list.
The game is going to become so much bigger. They're going to mint money. It's all free cash flow machine. All 140 crore Janta are going to trade only in these two exchanges.
You think there'll be a time when 140 crore Janta will trade? Because
right now we have a demat accounts of about 220 million. In 2020 we were 40 million. Now we are 225 million. I think we are going to be 500 million demat accounts in next 5 to 6, 7 years. Will be the more I can bet will be the most crowded retail market in the world, capital market in the world.
Most crowded capital market in the world. Do you think the Indian investor has the stomach to also see losses? My question is this. Usually we used to see, and do you think that's changed as a trend? We used to see the moment there is sign of trouble, people would stop talking about markets. There was a time a few years ago, you know, even in parties and conversations, people are saying, okay, what's happening with their portfolio? That has quietened down a little.
So one of the what you call new thing is that 80% of the market is new. See, only 40 million demat accounts were there in 2020. So I would assume that they had some legacy, 3, 4, 5 years of the same. The guys who opened the account only in 2020, so they are at best 5, 6 years old.
तो डर तो लगेगा।
हाँ, तो डर तो लगेगा। और अभी क्या, अभी भी पहली बार बाजार करेक्ट हो रहा है। सी, हमने तो बहुत करेक्शन देखे हैं। लाइक आई स्टार्टेड इन 1990 व्हेन द index went from 700 to 4200, 7x, and then it crashed 50%. Then we waited for 10 years, then Y2K happened. From there, again it went double and again crashed. Then mother of all the bull run happened, GFC, from 2003 to 2008. Again market went from 3,000 to 21,000. Again it crashed by 50%. And from there, here we are. So I think let these guys who are coming now in last 5 years, they must also know market goes down. Who is going to tell them? Unless they go through themselves.
Yeah, market is teaching them.
Yes,
so
market is teaching them.
We have two quick, just in time of what we were talking, Rajesh from Noida is asking, long-term investing versus profit booking.
What to follow?
What to follow?
No, both you have to follow. See, long-term investing doesn't mean that you don't have to book profits. I bought say Bharti in 2003, thinking I'll double in 3 years, but it went 25x in next 3 years. So I had to sell because there were developments which I didn't like. Say the scam happened, 2G scam and all those things happened. I said, boss, enough is enough. हमारा 50-25 गुना होगा, भागो यहाँ से. We sold that. But
no,
I had bought it for long term.
No, but if those developments had not happened and you
I
were
would have
sitting
been
on
sitting
25x.
Yeah, I sit in so many companies 20-25 years. Today also I am sitting with companies for 21, 22 years.
Can you name, I know you can't, but anything which
Better
you have
avoid.
20 year...
21, 20, 23 years. And I think it is as cheap as when I bought it 23 years back.
My God. I know you can't give the stock name, but that would be, I'd love to know. Anurag.
Hi, good morning, sir.
Hi.
So we are very young investors, we have just started. So one thing that we have learned is diversification. So in terms of assets particularly, so in these AI-driven economies, do you think commodities are still the place, the safe haven tag that we have with gold and silver? Should we still look around that, or equities should be the preferred bets for us?
Yeah, so you do what you understand. See, don't go by textbook and don't go by what this television guys they keep teaching you.
Sir, he works in the television company.
Go by what you understand. I mean, listen to all of them. But you have to, when they say something, all kinds of experts come. Gold expert comes, commodity experts comes, your real estate expert. They'll bring best of the experts. But आपको तो बात उसे समझ में आनी चाहिए ना. आपका पैसा है, वो तो चला जाएगा बोल के. आपने लगा दिया रियल एस्टेट में, मालूम पड़ा आधा हो गया भाव. So किसको पकड़ने जाओगे आप? So you have to go by your own understanding. जैसे मेरे को खाली इक्विटी समझ में आता है. मैं किसी जन्म जिंदगी में दूसरा कुछ नहीं खरीदने वाला हूँ.
Okay.
I am going to buy only Indian equities.
Okay.
Even to go out of India also, I understand equity. I can go and sit in New York and make some money. But I have to go and sit there to get into American markets. मेरे पास वो time है नहीं. I am pretty happy in India. So I have kept India as a country and only equity. But that is not advice to you. You must go by your own skill. If your father is in real estate and you understand real estate well, go and do it.
Okay. So what about the service class then?
Pardon?
Because what about the service class? We see gold returns like going 100%, but in equity we're going only 10-20%. Then how do we compare and how do we look at the horizon?
Try to buy what is unpopular. Don't try to buy popular.
Okay.
Just on the part about you going and sitting in New York, there was a report today quoting a very prominent market voice, and the quote was that his 50% of his portfolio is now outside the country. Not because he's bearish or wants to exit India, but 50% is now outside the country because he's thinking India is kind of tapped out. Do you see any of that?
We'll see after 10 years. Whether he wants to come to India or I want to go to America.
Okay. We will not definitely wait 10 years for our next interview with Ramdev Agarwal, but I want to thank you profusely. I know we took more questions and more time over here, but you've been very patient. You've answered not just our young investors in our newsroom, but our viewers as well. Thank you so much, Ramdev.
Thank you.
Thank you.
Pleasure.
All right, we'll take a very short break, but all the action continues on the other side on NDTV Profit.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे. केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
कुछ बड़ा होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
We're team off with Dr. Vinod Hayagiri, MD and Director of CKC Jewelers. As a fifth-generation leader steering a 155-year-old legacy, he knows that brilliance takes patience. Watch at these times.
Tamil Nadu votes decisive, uniquely the way it does.
Politics, power and cinema and all of that in an unprecedented Dravidian script.
This is not an election easy to call. It never has been.
And unravel grassroots conversations with the voices that matter.
That's why we travel across Tamil Nadu to get you the real picture. From the OG of Indian elections comes the next big political blockbuster.
Because
Tamil Nadu
votes only the way Tamil Nadu
does.
Tamil Nadu elections on India's original election voice.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's happening? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's happening.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360. Real talk, real reviews, tech that you can actually use.
Tech has changed. So should your tech show.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to. Get the management to answer questions relevant to you. Watch Know Your Company, weekdays at 11:30 a.m. to understand your next big bet.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah.
Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock, with a table thumping buy.
And when the street wants the levels,
Benchmarks ease off day's high right now. Nifty struggles to stay in the green, while the Sensex was little changed. Metals shine, IT and FMCG resilient, but pharma and realty drag. All eyes will be on Wipro, that will report its Q4 numbers today. Modest revenue uptake, stronger margin performance on the cards. Watch out for the commentary on a buyback and outlook on the deal wins. A high-stakes special sitting at the Parliament. The extended budget session takes up 3 key bills aimed at fast-tracking 33% reservation for women in the Parliament and state assemblies, marking a crucial legislative push. Motilal Oswal Financial Services founder Ramdev Agarwal says India is getting wealthier at double the world's pace. He also urges investors to stay bullish when markets weaken. Think in 10-year cycle and recognize quick commerce as a long-term compounding story. Hello and welcome. You've tuned into Markets at 12 and I'm Nisha Podar. Let's take a look at the markets. And yes, Nifty 50 has really given up all its gains in the middle of the trading session, now inching downwards towards a 1% loss at the current moment. So 24,170 odd levels. And there you can see in the last half an hour or so of trade, the market has let go of a lot of gains. So that's where Nifty 50 is, and turning around 2.2% loss at the current moment. All right, when we talk about the other aspects in the market, take a look at the other sectoral play that's really working in favor of the markets. Well, metals, defense, IT, these are the gainers. Remember, from the IT space, Wipro is looking at really posting its results today, so that will be watched out for very, very closely. But beyond that, all other sectors are showing a downtick. In fact, it's the real estate as well as auto sector which are down in trade today. Also, looking at some of the internals coming in from the composition of Nifty 50, it's Larsen & Toubro from the metal pack, it's Hindalco which is really gaining, Infosys from the IT pack, and ICICI Bank from the pack of the bank. So those are the companies which are doing well. HDFC Bank, that big boy which has been really taking the lead in terms of gains for a few sessions, that is drawing down the most. It's minusing 26 points from Nifty 50 at the current moment. So 7% loss when we talk about Nifty 50. IT sector outperforming the key indices. It's also the banking space which is underperforming the index today, 0.4% down on that. And when we take a look at the broader universe, remember yesterday in the market momentum, it's the broader market which actually came out much more strongly and saw a lot of buying coming in. And today also it's the mid-cap index which is really performing better, but now it's in the red tinge as well. So there is some bit of profit booking, and also expiry has a role to play. All right, let's take it straight to an important conversation coming in. Anshul Jain, the Chief Executive India of SEA, MEA and APAC Office and Retail at Cushman & Wakefield joins in today. Anshul, always a pleasure speaking to you, and welcome to NDTV Profit. Yes. So, Anshul, we're just taking stock in a very uncertain environment where many factors are really paying out for the real estate space, and especially in the commercials rental space. How are you seeing, in fact, your company, you have also authored a report on how the weakness is slowly creeping in. What are the key highlights from the report coming in?
Yeah, Nisha, let me just correct you a bit. I think what we are not seeing right now is the weakness. I think perhaps maybe I can explain some of that data. I think the first quarter was quite outstanding as far as gross leasing activity is concerned. There was almost 22 million square foot of gross leasing activity. This compares well with whole of last year, where the gross leasing activity was, around 90 million square foot, right? So I think it's kind of still tracking to what it did last year. The reports around weakness is largely misinterpretation of perhaps a data point on net absorption, which is the net new space getting occupied. Technically, that definition depends a lot on the new supply coming on board as well. So you can do the deals, but if the supply gets delayed, it's hard to occupy that space, right? So I think the way we measure the market activity is gross leasing, which actually has been doing really well in the first quarter.
Right. When we talk about, Anshul, the absorption, and here I'm specifically talking about this particular space, which is also, remember, the commercial real estate space with rentals, which has really become a very large sector and pocket of growth in the last few years. Even REITs have benefited from that. That particular point and space also is at risk with the global scenario. Are you seeing any important, factors on the ground which is playing out, which is playing to the uncertainties, and also the companies being a little stressed when it comes to their overall economics globally because of the Middle East war?
Of course, the Middle East crisis, the usual oil prices go up, inflation goes up, GDP comes down, right? That has a direct linkage to commercial office expansion and of course, from a capex cycle perspective, as interest rates rises, people are hesitant to put new capex into building out new offices. Having said that, if I just compare it to, let's say, the year 2022, where, if you remember, due to the Omicron wave at that point in time, the offices were shut for 3 months. Even in a scenario where people are working from home completely for 3 months, 3 quarters was enough to get the demand rolling back. So I think Indian markets have a lot of resilience in bouncing back very quick. So again, it really depends on how long this war will extend. I think a couple of months of sort of, tensions, if it kind of finishes, I don't think it'll have an impact on the Indian property sector. Are people a little cautious right now? Answer is probably yes. Are we seeing deals dropping? Answer is no. There's been some delays on the fringe, but don't forget that most of the office markets are undersupplied in India, and most of the deals that are happening, or larger deals that's happening, are for occupation in the year 2027 or beyond. So the office market, from that perspective, the demand still remains fairly robust.
All right, demand still fairly robust. Some bit of delay could be part and parcel of an uncertain environment. But Anshul, to your point on the demand remains higher than the supply. And of course, there was zero new supply in especially areas like Hyderabad as well as Pune in this particular quarter, which your report suggests has also pushed the Hyderabad prices up by over 10%. So what does this really suggest, and how are you seeing the pricing mechanics really working out now for this quarter?
Yeah, so notwithstanding, so let's make a couple of assumptions. This Middle East war is not going to last very long. Let me put it that way, right? So it doesn't last for 6-9 months with devastating consequences. So if that doesn't happen, I think broadly what we're seeing is that demand's steadily outpacing supply or consistently outpacing supply over the last 4-5 years. Supply has been in the region of 50 to 60 million square foot. The gross demand's been in the region of 80 to 90 million square foot. We've seen rents rising consistently across the board at 5% per annum. An interesting stat is for the first time, the rents on a weighted average basis across the key markets that we track are in triple digits, which is 100 rupees per square foot. So that's a very interesting fact. And given the level of demand that we are seeing from interested parties, we think that this demand's likely to continue in the next kind of 3 to 4 years. And therefore, we are likely to continue to see downward pressure on vacancy and upward pressure on rentals in all key markets, particularly if your building is great, particularly from prime asset, because corporates are making beeline for better quality assets and better quality buildings.
That's right. This has become, a very, very critical aspect of large companies to showcase themselves in a good project, and the project which has amenities and is also green in some areas. But you have to agree, Anshul, that Mumbai's market, that is the one which is off the charts, very expensive at the current moment, with the vacancies really being almost full and the demand being high. How are you seeing the pricing power for the developers and the potential growth there?
Mumbai has obviously always been a tight market, particularly when it comes to the key micro markets of BKC, etc., which has become the preferred market. Even markets like Powai, Western Expressway have done well. Navi Mumbai has done well. Parel's kind of bounced back. So I think, and with the sort of, the great infrastructure development ceiling all the way going down to South Mumbai, we're likely to see a revival in the South Mumbai markets as well. So, much like any place else in India, I think you will probably continue to see the higher end of demand, particularly banking, financial sectors, high-end technology sectors still going to Mumbai, and services companies, legal firms, and other accounting services. These will likely to continue to expand in Mumbai. So from an aggregate perspective, Mumbai will not see the kind of demand that perhaps what a Bangalore or Hyderabad does, but it'll see a very high quality demand and therefore the pricing.
Right. You mentioned one thing, Anshul, and being from Mumbai, I would say that the road connectivity with coastal road to South Bombay has now become so smooth that will also have an impact. You said that South Bombay is also going to see the demand, where a lot of office spaces got vacated in the past and moved to the other areas. Now, how does the infrastructure, also commuting infrastructure, where also Maharashtra government has paid a lot of attention, and also the connectivity, how is that going to really impact in the long run? How are you seeing that really develop?
What it does is it helps develop other micro markets as well, right? So as you said, South Bombay was out of fashion, South Mumbai, and that now can be back in demand, provided there are good quality buildings available in South Mumbai. And of course, given the lack of connectivity over years, there's not been many new developments in South Mumbai. Land's also pretty rare. But if there is a good quality development there, there'll be massive demand there. And as the connectivity improves, you'll see other micro markets emerging, which is great for Mumbai because, with the kind of commuting distances and new sort of residential markets kind of emerging, you want the city to have multiple business districts. Having said that, a central business district like BKC and Western Expressway, which has been preferred for a lot of multinationals' preferred destination, is going to continue to thrive, but other micro markets will emerge.
Right, and Anshul, out of all this that you said and the perspective that you gave on the overall market, how do you see the REIT scenario really panning out? Of course, business trusts have really developed over 12, 13 years and now have come to a very big, pocket in the market. A lot of important developments have also made it much more acceptable in the overall market as well. But yields have always been still a concern. A quick view on the REITs and how that play as an investment and an asset class really now stacks up.
Look, REITs, in my mind, have actually done very well in India, right? And of course, it went through a perception issue during COVID that people are not coming back to office and whether the yields will hold up, etc. But the reality is most REITs reported in excess of 95% rent collection, very little delinquency, and they've given some pretty good return. Don't forget that REIT is more of a yield product, and you get 6 to 7%, about 6% yield, let's say, back to you. But also what's happened over years is it's given capital appreciation. So in my mind, I think REIT remains a very safe product. You have some great underlying assets behind all the listed REITs at this point in time. The occupancy remains very high. The rent collection remains very high. We're likely to see this market only deepen, and you'll have more REITs hitting across different sectors, office, retail, perhaps industrial in near future. Of course, with mutual funds being allowed to invest in REIT, the market of investors deepen. And as people understand the product, I do think that REITs in India are set up for a very, very vibrant future.
All right, the very uniqueness of the yield as well as the capital appreciation, the stock appreciation, that combination really works for REIT. Thank you so much, Anshul. It's always a pleasure to speak to you and take your views on the real estate space. Thank you.
Pleasure.
All right, with that, we'll slip into a short breather on markets at 12. More discussion on markets as well as the news of the day on the other side. Stay tuned.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
Welcome back. You're watching Markets at 12. And yes, market has, Nifty 50 has let go of all its gains in the last half an hour or so of trade. And a couple of heavyweights have really led to this. Take a look at HDFC Bank in the same momentum that heavyweight has really lost and is a key dragger. And that has been a big concern. Sun Pharma has also fallen from the top and that has had an impact on the market. All right. Now, Dhananjay Sinha, the co-head of equities and Head of Research and Strategy as well as Economics at Systematics, joins in. Dhananjay, pleasure welcoming you on NDTV Profit. What do you make of the sudden, sell-off in the market?
So I think market was kind of looking for a sort of easing of the anxiety emerging from the global disturbances, especially in the Middle East, and the sort of talks that was happening between Iran and US. I think that part was something that the market was sort of looking at. The post discussion feedback that people sort of factored in was that you might actually see a sort of agreement and downscaling of the aggression that is there. So people were expecting a easing of crude prices and the deadlock that has been there. So that was expected to ease. So I think as things are sort of filtering in, I would say that it's still a very ticklish issue. It's very complicated. And what people are sort of realizing now is that while there was an obvious reason for a sort of a pullback from or sort of a revival from the peak level of anxiety, I think people are now realizing that it is something that will be long drawn. We are seeing that crude prices continue to remain at close to $100, and I would say that versus what the level was last year, you are at least 50% higher. Now the result season is also likely to start now. As a result of that, people are sort of mindful of what guidance companies would give. And clearly, companies are not guided by the way market sentiments move. As a result of that, people are kind of somewhat conservative with respect to what kind of outlook that would come from the companies. So that is what I think the market is grappling with. So you have episodes of revival, but I think the broader concern continues with respect to the oil prices, the cost of raw material, and we also have the weather forecast, which is telling that IMD is forecasting about 8% deficient monsoon this year. That will have an impact on the rural economy and the overall consumption theme. So people are concerned about this. The market is sort of straddling between optimism on the headline with respect to the war, whereas the underlying fundamentals remain on a weakish side.
That's right, Dhananjay. In fact, on any day in the last few weeks, that we have seen that the crude prices have been below $100 per barrel, and Brent crude today is even below 95. It is estimated that the market will rise. But the two important factors that you mentioned is now starting to play out, except are the earnings as well as also what kind of a trajectory the market takes in terms of the play on the war situation. So when we talk about earnings in one, that is one big thing that the market will have an eye on. And is it fully baked in terms of at the ground level, how our supply chain as well as cost escalation of raw materials really going to impact which sectors, and how much of that is unbaked in the market and we could see as part of volatility going forward?
So I think if you look at the markets, there has been a sort of lackluster performance for the last 1.5 years. I would say even before the eruption of the war. So essentially, the concern about growth, especially with respect to earnings, is something that the market was already grappling with. So if you look at the Nifty earnings for FY26, it is on a trailing basis roughly about 3.5%. And if you look at Sensex, it was just about 1.5%. So from a high levels of compounded growth of 20% till FY24, there has been a sort of a downtrending that has been happening. And last year there has been a issue with respect to the demand scenario, as a result of which the government had announced income tax rationalization and GST reduction in the second half. So clearly that softness in the demand was something that people were grappling with. There was a sort of episodic bounce because of the GST reduction, and we have seen this in auto numbers and select consumer names. But now the market is grappling with the effect of the of the war and the impact it would have on the supply chain, the cost of raw material, all those things will be relevant. And we have the El Nino effect also. So there is a compounded headwind that is there from a softer demand to these two other events that are there. So I would say that in terms of how the sectors will be impacted, we see that at a broader level, what we did was to really understand the sensitivity of the non-finance companies' margin and profitability in the context of rising crude prices, because we need to account for the fact that when crude prices rise, all of the raw material prices rise and the logistics costs increase, all those things happen. So roughly what we found is that for every 100 basis point rise in crude prices, the raw material cost goes up by almost like 50 basis point, and the top line, while there is some pass through of rising cost, it rises marginally by roughly about 25 basis points. So clearly, if you have $100 kind of a scenario, let's say 90 to $100 scenario for crude, you might actually see margins compressing from 15-16% to 10%. So I think that is something that I would say is not still baked in.
Right. A lot to be baked in there. Thank you so much, Dhananjay. But keeping an eye out on the markets, and volatility really continues despite the crude oil prices being at softer levels today. But then other pressure points probably building, as Dhananjay was mentioning. But take a look at Reliance Industries and Bharti Airtel. Both in tandem are weak in trade today. And those two heavyweights are really putting pressure on the market, even though they are in similar space only as a commonality of telecom. But also remember, for Reliance Industries, the upcoming Jio DRHP filing is something that is building the momentum on Reliance Industries and also the results at the later part of the month. So keep an eye out on these counters along with HDFC Bank. All three are putting pressure on Nifty 50. All right, moving on to Grow. Grow is quietly pulling ahead in the slowing broking landscape, even as the retail trading cools and active investors really fall. In fact, Grow continues to gain market share, driving the Q4 growth. Meanwhile, Zerodha, Angel One, as well as Upstocks lose ground, while the traditional brokers regain traction, signaling a clear shift from breakneck growth to industry consolidation as regulation and volatility push out low activity traders. Nimit joins in with all the details on what's really happening with Grow. It's the billion brains garage ventures that we are talking about. Nimit.
Yes, absolutely. And like you said, true to its name, Grow is one of the only companies today in the broking space, in the discount broking space, that's still gaining market share and is growing despite a 7% fall in FY 2026 in active investor numbers. The NSE reported that the active investors have fallen about 35 lakhs from data from 2025 to 2026. Now, while most of this came from steep discounting brokers falls, for example, Zerodha dropped to 15.08% from 16.3. Like you said about Angel One and Upstocks have the same numbers. Grow, for that matter, rose from 26.26 to 28.31%, adding 2 percentage points to its market share in a contracting market. A substantial feat indeed. Now, broadly, like you said again, that there has been a shift, a clear shift in the way how these broking industries are looking at the market. The rapid consolidation phase is over. There are more active investors now and serious trading going on in the market. Of course, derivatives have driven a substantial amount of that, but because of the recent F&O curbs as well as market volatility, the low activity investors are moving out. It's going to be high activity, intense active investors moving forward, and Grow is seriously capitalizing on that right now.
All right. Thank you so much, Nimit, for giving us that roundup of the numbers and who gains traction in the broking business. In fact, let's take it to Parth also with all the top buzzers at this hour. Which stocks make it to your list, Parth, today?
Thanks a lot, Nisha. So there are three stocks that are in focus today. The first one is Tejas Networks, which reported its Q4 results yesterday, and they have actually reported their fifth consecutive quarter in losses. The revenue was down 82.6% year-on-year to reach 333 crores, while the company reported an EBITDA loss of 118 crore versus a profit of 121 crore last year. They also reported a loss of 211 crore versus just 71 crore last year. So they have almost tripled their losses in this quarter. The second one is Indian Metals and Ferro Alloys, which has updated the status of its ongoing projects. Their Greenfield Ferrochrome project is in the final stages and is expected to be done by the September month of this year, while their Kalinganagar acquisition is done and all the four furnaces in that plant are now operational. Their ethanol project, however, is slightly delayed and is expected to be commissioned by the July of this year.
All right. Thank you so much, Parth, for getting us all the lists which are the buzzers in trade. With that, completely out of time on this edition of Markets at 12. Thank you so much for tuning in and keep it with NDTV Profit. Thank you.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
कुछ खास होने वाला है।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
We're teaming up with Dr. Vinod Hayagiri, MD and Director of CKC Jewelers. As a fifth-generation leader steering a 155-year-old legacy, he knows that brilliance takes patience. Watch at these times.
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu, here we come.
YouTube doesn't have a favorite news channel. It has three. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
Hello and welcome to NDTV Profit. You're watching Trending Stocks with me, Heeral Dadia and Sharad Dubey, standing at the NDTV Profit market pit with all the action in the markets today. Sharad, an interesting day of trade right now. If you have to look at Nifty 50 as well, I mean, slight under pressure, but what are you looking at? Because we've slightly given up the gains.
Right. Good afternoon, Heeral. And yes, you are right. There is a technical pause, to be honest, in the markets. A profit booking also coming in. But yes, the sell-off did intensify over the last 15 odd minutes, and the markets are trying to figure out where will be the next support level. Let's look for Nifty Bank also. What's the situation, and we'll see the reversal which is happening is there pertinent for them also, but the sell-off is slightly more than Nifty going ahead. But what happens on this Thursday is very much important. There's a technical pause at play. Nothing much to be majorly concerned about. Profit booking is happening from the recent rally which we have seen, and its analysts suggest it's a technical healthy pause. Unless more fall happens, then we'll be looking at different levels as well. Overall value buying still continues in small and mid caps, and that's a very good news, to be honest, especially if you look at the broader indices. The up move is still there. Mining, metals and select defense stocks are seeing a good buying, good volumes. Of course, some news flows are also there, some broking upgrades are also coming in, but nevertheless, remember, Sensex expiry is also at play, so there will be volatility going ahead as well for the next 1.5 to 2 odd hours as well. Apart from this, largely we see most of the asset classes are stable, and the risk of sentiment is still reducing because of the development of the optimism which has come in, and which we have seen that in European markets, your Asian markets and even US futures today. So largely the markets, if there is, you could say the triggers are on the positive side, but we should be focusing on the Q4 earnings, Angel One, HDFC AMC, HDFC Life and the IT biggie. We are talking about Wipro earnings as well as an important buyback announcement which will be coming in. So you should be targeting all these stocks as well. So stock specific news is something you should be watching out for, Hiral. But yes, today there is a technical pause at play.
Okay, technical levels at play, but let's quickly look at the watch list. Premier Explosives, the DRDO news that has come in, that is positive. Likewise, you have Apollo Micro also that is buzzing in trade. Moving on, you have GMDC and OMDC. The mining stocks are seeing a rally in today's session. Let's see if there is some announcement that could be on the anvil. Sonata Software, First Source Solutions, strong volumes. HDB Financial, a strong Q4 is what the company has reported. There is an operational update that has come in for IMFA, that is Indian Metals and Ferroalloys, which is strong, and that's the reason why the stock is up in trade. And you have a Gallant Ispat and Kiaran Heat Exchange that have hit an all-time high. Suraj Developers, they've acquired a land parcel in Mumbai, so that stock is in focus. On the negative side, Astral and Supreme, the PVC prices have now fallen by 10 rupees per kg. You know, in the last couple of weeks, we were covering both these counters from a perspective of the PVC prices, which were increasing, and now we've started to see that correction reflective of what's happening in crude prices. Tejas Networks, again, weak Q4 earnings is what you're focusing on, and that's the reason why the stock is under pressure. But let me head across to Sharad to take the rapid fire with Osho Krishnan of Angel One.
Thanks a lot, Hiral, for that. Osho, good afternoon. It's always a pleasure to have you. We'll start our rapid fire segment, especially the defense-related companies. If I talk about Apollo Microsystems and even Premier Explosives, good DRDO-related announcement has come and a good up move in both these counters. How do you see this developing, and do you see more, momentum going ahead for these counters?
Very good afternoon, Sharad. Firstly, thank you for having me at the show. Well, yes, no doubt defense counters are looking very positive. There has been a very strong technical pullback in major of the counters. Apollo Microsystem has seen a decisive surge of nearly 30% in the month, and it is currently hovering around 200-day simple moving average. But I'm expecting that in the short-term period, the counter can see some kind of a strong upside movement. 270, 280 is the first target. Once it crosses the zone of 280, then we need to review the counter for medium-term.
Right, and the next group of stocks are the mining related stocks, GMDC and OMDC. Both of the stocks are doing really well in the trade, and volumes have also picked up. Any kind of a profit booking move we can expect, especially in GMDC, Osho?
See, GMDC today has given a very strong breakout. Near about 20% has already rallied in the counter, but there has been a technical breakout in this counter. So on the higher end, the first target that is expected is around the zone of 720. So it is obviously above the zone of 720. So one should trail profits around with a stop loss of 720 and try to ride the momentum. So overall, there is a technical shift, and I am quite bullish in the counter.
Okay, so stay with it, ride the momentum. Okay, apart from this also, Osho, I just want you to understand, we discussed GMDC, OMDC also, but we need to discuss the technical up move which has happened in Sonata Software. Select IT stocks, good buying is happening across the counter, especially the small cap cash counters. Your views on Sonata Software?
For Sonata Software, I'm not very much optimistic on the technical perspective, but there might be some kind of technical bounce that might be seen in the short-term period. The first and very crucial target is of 300, 310 odd levels. So in the short-term period, that is the target that one can expect. But again, from those levels, the counter has given a breakdown. So one should be cautious around those levels, that whether there will be continued momentum or the counter can see some kind of further correction from those levels. But from here onwards, another 30 points of rally can be seen in the counter.
And the next stock is HDB Financial Services. Strong Q4 earnings coming in. a little bit of breakout levels also coming on short-term basis. What are the key levels to watch out for, Osho?
For this counter, 700, 720 is a very strong resistance level. So I will be waiting for these levels to have a strong breakout, and only after a sustainable move above 720, one can get some kind of complacent bullish bets in the counter. At current levels, it will be advisable to maintain a cautious stance with strict stop loss of 675.
Right, Osho, there's a short build-up happening for both Astral and Supreme, and earlier Hiral had mentioned about the PVC price fall as well on that, but just wanted to get on this, more short positions can be taken for these two counters, and if yes, any important stop losses?
For Astral, the counter is having a kind of a very strong support around the zone of 1540, 1550 odd levels. So if there will be a further correction below the zone of 1540, then one may look for a selling opportunity for a target price of nearly 1400 to 1420 from very short-term point of view. Overall, there will be kind of a strong consolidation in the zone of 1400 to 1540 odd level. So I am expecting that in the short-term period, one may look for selling opportunity, but wait for a decisive and sustainable move below the zone of 1540 odd.
Right, and the next stock is Tejas Networks. Weak set of quarterly numbers coming in. Is there further pain in this counter?
Overall, the technical structure is still very bleak. The counter is hovering below the long-term moving average. So there is no strong respite or no technical pullback that is being evident in the counter. So better to stay sideways from this counter until it breaches the zone of 500, which is the 200-day simple moving average. Above 500, only one can look for buying opportunity in this.
Right, so that's the end of rapid fire. But over to you, Hiral. What are you gathering from the Google Trends?
So this is an interesting aspect on the show that we have, because you get to know what are the stocks that investors are actually searching for to get answers to. Tata Power, LIC has been on the block over the last 2 days, Suzlon again, and a Reliance Power. So it's the power pack which is buzzing in trade. Osho, Tata Power, Suzlon, Reliance Power, anything on the charts that you like?
Tata Power is looking very positive. It has given a very strong breakout in last trading session, and there has been a strong weekly or monthly structural breakout in the counter. So 400, 405 was a very strong resistance level, and after a decisive move beyond these levels, I am expecting that from here onwards another 25 to 30 odd points of rally can be seen. So 440, 445 is the target for Tata Power. Overall, the power sector is looking very positive. Again, Suzlon Energy has also surged nearly 10% in the week, and it is still looking very positive on the technical chart. So I'm expecting a target of nearly 54, which is the 200-day simple moving average. That might get tested in the coming period, but again, for Suzlon, one should maintain a cautious approach and try to trail their profits for a target price of 50.
Right, but of course, let's move on to the Q4 earnings also. Important previews and two important earnings would be there. HDFC Life Insurance, if we talk about it, largely the AP numbers are expected to go up by 3%. But there is some stress when it comes to the value of new business margins as well. Margins are expected to be impacted because of the GST related announcements which came in during the quarter, and also importantly the retail protection would be growing, but it's insufficient to save from the weak volumes as well. And also apart from HDFC Life Insurance, HDFC AMC is in focus. Sequentially the numbers might not be that good, and PAT is expected to see a downtick of almost 15%. So weaker numbers is expected from HDFC AMC also. And to decode these companies, we are joined in by Mahesh Hoja. Good afternoon, Mahesh. It's always a pleasure to have you here. I was talking about two important previews from the house of HDFC AMC and HDFC Life Insurance. And of course, their numbers are due in some time during the trading hour, and some maybe post the closing. Your views on either of these two stocks, which is better placed, because the street is not liking HDFC AMC's preview numbers, but there might be some respite when it comes to the life insurance.
Definitely, but if you're looking from a life insurance or AMC perspective, I think AMC placed very well. But we will watch out on lower level if numbers are, as you said, the number expecting some lowers. I think some consolidation can't be denied in HDFC AMC. But if you're looking to, if it is available near 2,400, 2,450, I think that is a good buying level. we are hope the 3,200 to 3,300 level could be achievable in a 1 year horizon. But yes, some consolidation we are expecting in HDFC AMC as well. But if you're looking from a HDFC Life perspective, the life in a limited upside we can see in life that could be a 740, 750 in a 1 year horizon. So both of the counter are is slightly upside, but in near term, some consolidation can be seen in both.
Okay, so consolidation that could be seen in both of these HDFC companies as well. But ICICI Lombard is another one which has actually delivered an overall strong fourth quarter, driven by healthy premium growth and improved underwriting performance. The stock is at the day's highest levels as we speak. We spoke to Gopal Balachandran, the Chief Financial Officer at ICICI Lombard, about the quarter gone by and the outlook going forward. Let's listen into a bite of that conversation.
I think what we've always spoken about is to say that whenever we see market getting rebound in terms of industry growth coming back, ICICI Lombard is well positioned to capitalize the opportunity of growth across segments. And this is exactly how things have played out, particularly in the second half of the year, largely aided by a lot of reforms that has been done at, let's say, governmental / the regulatory front. Now that has obviously kind of rekindled growth, even from a market perspective. And obviously, as I said, in our context, we have been able to leverage that growth potential. And that's the reason if you look at the second half of the year, for example, the industry growth was roughly at about, I would say, close to about almost about 11%. And ICICI Lombard had grown at almost about 15%. So we had an outperformance of almost about 400 basis points at an aggregate level. And if I were to distill it down to the quarter gone by, now that delta between our growth versus the industry growth has been almost about 700 basis points. So in that sense, I think it has been a great quarter for us, aided by growth in lines of businesses which we think are viable from a profitability standpoint. And that is what has aided in terms of the overall beat when it comes to, let's say, top line revenue numbers. And exactly to your point, absolutely, bottom line, combined ratios, again, is an area which we have always focused on. And we have always maintained that from an ICICI Lombard standpoint, we would want to continue to see how we can see an improvement in combined. And that's also reflective in the quarter four combined ratios, which has seen a drop by almost about 150 basis points.
Right. Mahesh, what is your view when it comes to ICICI Lombard?
Definitely, the numbers are very good, and I think the stock can do well in the upcoming time. If you're looking from our perspective, 2,350, 2,400 level could be achievable in a 1 year or more than 12-month horizon. So it's a very good level to add ICICI Lombard. But yes, there is a regulatory hurdle in the sector. So we are optimistic for some more upside, but yes, with cautious approach.
Speaking of optimism, Trent is also one of the top gainers in the Nifty index in a market in which Nifty has turned red. Just to understand what are the key takeaways from the recent broking report, I joined in by Mahima. Mahima, what's there in the broking report that Trent is up 2%?
So, ideally they've cut the target price for Trent and has given a target price now at that 4,800 mark versus that of 5,300 earlier. But I think the commentary largely coming in is very neutral, if not positive. What they're saying is that there's comfort that they're seeing on growth setting in. The achieving of 200 stores addition for Zurio for FY26 has been possible, and this is despite of productivity moderation, and this gives visibility going ahead in FY27. Performance triggers are sustained at that 18 to 20% mark, which has been the case in the last 2 to 3 quarters for Trent. No negative impact from cannibalization and competition is something that they've said, which is not the case that a lot of brokers are kind of penciling in. They estimate a 4% like-for-like growth for Zurio in FY27, and top-line growth will be the key trigger going ahead is what they've said. So this is the reason as to what's causing that just 1% rally now in Trent.
Thanks a lot, Mahima, for that. And Mahesh, I just want to get you on Trent. Is there a further round of up move possible for Trent going ahead, or are you thinking that the valuations are expensive for this counter?
No, if you're looking from a trend perspective, after many days, we have seen some kind of upside in trend. So I think that momentum can be continued till the 4,400 level. But if you're looking from a 6 to 9 month horizon, I think 4,600, 4,700 level could be achievable. And if you're looking from a Judio perspective, I think they can do well in upcoming time. So valuation are looking good, and I think some upside can come in this counter.
Okay, so that's with regards to where trend goes. Let's pull up a Sun Pharma on the screens. If you can just have a 1 week or a 1 month chart to understand the kind of movement that stock is at the day's lowest levels as we speak today as well. But let's just see a 5-day chart. You know, the last couple of days have been weak, but since yesterday it's seen a pickup, and now again that correction that is coming in. And this is because Sun Pharma and Germany's Grunenthal are set to be eyeing for the US listed company, which is Organon. Now, these are among the firms eyeing New York listed women's healthcare company, and this is according to source-based information. This would be India's biggest pharmaceutical firm, and closely held Grunenthal are working with advisors on potential bids for Organon that they have may or will be submitting in the coming weeks. Apart from this, if you have to talk about the acquisition, the plan is for a $12 billion bid that you're talking of. This would be the largest global M&A by Indian pharma company, and the bidding offer is expected in coming weeks. The deal size is pretty large versus the actual size of the company, and that is what is worrying the markets right now. There is a debt burden legacy issue when you talk about Organon, and some of the segments are seeing pretty weak growth. Now, there could be international, globally integration challenges that one could be seeing, and the competitive intensity, which is actually increasing in the generic and the biosimilar space in the global markets, becomes a key concern on the back of this acquisition for a Sun Pharma. It does not really bring a strong pipeline of products for Sun Pharma, and also does not really enhance the company's R&D pipeline. So all of these are the concerns that the street is watching out for, and hence the kind of pressure that you're seeing on the counter. Mahesh, your view when it comes to Sun Pharma and all the buzz around the acquisition that they're looking at?
The debt concern are higher than any other. So I think market is concerned for that, and stock can consolidate further. After outcome of these all, then we can see full and final view. But from current view, I think some consolidation can be in stocks can be seen. I think 1,620 level can come in near term. After that, but we can review the further.
Right. I will just take the conversation forward from the pharma space, as Hiral had picked out Sun Pharma. BofA has come out with its report on Dr. Reddy's, and interestingly, they have maintained buy, but the target price has been hiked from 1480 to 1540. And they have stated, of course, that they are assessing the resilience and the risks in the defensive sector, and there is a buy on the diversified drivers and a semaglutide catalyst as well. So sort of a mixed tone coming in for Dr. Reddy's, but slightly on the positive side as well. The cost reduction levers in case of revenue delay is likely to still keep the margins above the 20% mark. I just want to get Mahesh, your views on it for Dr. Reddy's, at least on the medium term prospects. How is the stock looking like?
Technical setup is positive for Dr. Reddy, and stock can touch at least 1,280 to 1,300 level. So overall, stock Dr. Reddy looks positive. In any dip nearby 1,160, 1,170, that could be a good buying from current view.
Okay, so that's with regards to where Dr. Reddy's is concerned. But moving on. Now, the Bihar liquor ban policy is something which is in question and in focus as questions are rising over the ban to be lifted as their new chief minister faces the liquor ban test. The stocks, Global Spirits Home Distilleries up, UBL is trading under pressure. To talk to us more on this, Sanjeet Padi, CEO of International Spirits and Wines Association of India, which is ISFI, joins us now. Welcome to the show, Mr. Padi. Always a pleasure to speak to you. My question coming to you is, since the time the ban has been in place, how are you seeing it in terms of a potential for the ban to be lifted? Are you hearing, murmurs around it? Is it that this is going to be one of the mandates with the new, team coming in? Mr. Padi, are you able to hear me? Okay, so I think we'll have to just fix his audio because that is something which is not clear. But categorically, what we're talking about over here is that with the new CM taking, that's the Chief Minister coming in, there is a lot of murmur with regards to the beer ban that could be lifted in Bihar. Now, this could be beneficial when you talk about companies which are in focus as we speak. If you have to look at names, you have United Spirits, Radico Khaitan, all of these companies are the ones which are in focus in today's day of trade. We will have to wait and watch in terms of what happens once the number has come, once the information or the news has come in. Mahesh, let me take a quick question with you. If the Bihar liquor ban, which is under review, is lifted, how big a benefit is it going to be to all of these liquor companies?
So many companies will get benefited if liquor ban lifted. So I think Som Distillery, Globus Spirits, and Radico Khaitan, these are the most beneficial company, and we will prefer Radico Khaitan over all these companies. So I think ban lift could be a good positive for Radico Khaitan.
Okay, so Radico Khaitan is something, and that's the only stock which is seeing those gains of 2.5-3% as we speak. But moving on, we have Mr. Sanjeev Padi, who's again, I think we've just got him now. Mr. Padi, are you able to hear us? I think, there are some audio concerns that we have been looking at as we speak right now. Tejas Networks is another one. Now, they've reported the 5th consecutive quarter of losses, and that's the reason why you're seeing the kind of pressure. Little over 4% is the kind of downtick in terms of the stock. Order book, again, that remains at around 1,500 odd crores, so nothing changes from an order book perspective. Revenues down 82%. They've seen an EBITDA loss of little over 118 odd crores and a loss of 211 crores. Is what the company is sitting on. Mahesh, any view when it comes to a Tejas network?
Currently, we have a neutral view on Tejas network because there are a lot of losses in the books and order book are good. So currently on these levels, we are neutral. If any dip, then we can review for the SIM.
All right, that's an interesting development coming in. But let's just check IMFA how the overall operational updates have come in, and that shows a good movement, especially on their overall plants, the amount of movement which is happening over here. And the street seems to give a very strong thumbs up as well. The stock itself is up more than 7% in the day's trade. Mahesh, IMFA, largely this counter moves very few times on the volumes, but this time it seems like the operational update is pretty much strong, especially on their ongoing projects which the company has given, and the street is liking it. Do you think there is a further chance of an up move from this counter, or this is just a news-based move and then what happens is again the stock comes back on the lower volumes?
I think that there is chances of up move. At least 1,650 level could become in this IMFA. So it's a little bit, I think some kind of upside can come because company is doing very good. And I think after surpassing 1,650 level, we can further review. From current view, I think some bullishness can come further.
That's with regards to Indian metals as well as we speak. So clearly, it's an interesting day of trade that we are watching out for. But thank you, Mahesh, so much for joining in. The markets are at the day's lowest levels as we speak. Let's just pull up Nifty 50. Then we look at Bank Nifty and the sectoral heat map to understand what is putting pressure today. In terms of Nifty 50 as well, cuts of around 0.5% coming in there. Bank Nifty also at the day's lowest levels, down of about 0.7%. Moving from there on, if you see in terms of sectoral indices, it's the metal, IT pack which are staying afloat in trade today, but auto, one of the top losers, followed by the PSU bank index. You have the private banking space which is also putting pressure. Oil and gas, infrastructure consumption, all the others are down to the tune of almost 0.7% on the upside and around 0.4% on the downside. So that's what we are picking up so far. But very quickly, some flashes at the bottom of your screens where the Supreme Court has allowed banks to declare Anil Ambani account as fraud. That's what we are picking up from the Informist. And apart from that, the Supreme Court has refused to stay the bank's order from here on. So this is going to be some bit of a negative development that is coming in for Anil Ambani Group companies, where the banks are allowed to declare Anil Ambani companies as fraud, and that's what you will see in terms of the stock prices as well. That would be putting pressure. But completely out of time. With that, it's a wrap on this edition of Trending Stocks. Lots more lined up on the other side. A thank you from Sharad, the team that put the show together, and myself. Stay tuned to NDTV Profit.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit-taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
They say the biggest deals aren't closed in the boardroom.
Golf is a game that you play against yourself. Business is also the same. You play by beating yourself from yesterday to today.
We're teaming up with Dr. Vinod Hayagiri, MD and Director of CKC Jewelers. As a fifth-generation leader steering a 155-year-old legacy, he knows that brilliance takes patience. Watch at these times.
Tamil Nadu votes decisive, uniquely the way it does.
Politics, power and cinema and all of that in an unprecedented Dravidian script.
This is not an election easy to call. It never has been.
And unravel grassroots conversations with the voices that matter.
That's why we travel across Tamil Nadu to get you the real picture. From the OG of Indian elections comes the next big political blockbuster.
Because
Tamil Nadu votes only the way Tamil Nadu does. Tamil Nadu elections on India's original election voice.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
As well, metals shine, IT and FMCG resilient, but pharma and realty drag. As well, metals shine, IT and FMCG resilient, but pharma and realty drag. And all eyes will be on Wipro, that will report its fourth quarter numbers today. Modest revenue uptick, stronger margin performance on cards. Watch out for commentary on buyback as well as outlook on deal wins. And a high-stakes special sitting at the Parliament, the extended budget session takes up 3 key bills aimed at fast-tracking 33% reservation for women in Parliament and state assemblies, marking a crucial legislative push. Motilal Oswal Financial Services founder Ramdev Agarwal says India is getting wealthier at double the world's pace, also urges investors to stay bullish when markets weaken. Think in 10-year cycles and also recognize quick commerce as a long-term compounding story. Good afternoon. You're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup of everything that is happening in the world of commodities, news and updates as well on the top buzzers at this hour, all while you grab lunch. But first things first, very quick look at the markets right now. When you talk about Nifty 50, it's actually close to the day's low right now as we speak. And when you talk about Sensex as well, you're seeing some weakness also come in there. In fact, you do have that weakness that you've seen sharpen in the last few minutes. When you talk about the sectoral picture as well, you do have a bunch of sectors that are holding on to a tinge of red right now. Something like autos, PSU banks, Nifty Bank, oil and gas, rural consumption and pharma. Those are some of the sectors that are in the red right now. Metals still holding on to some amount of resilience. Same can be said about IT. So that's broadly the kind of picture that you have in terms of the losers and gainers on a sectoral basis. But even when you talk about the entire picture for stocks as well, something like a SCI or Sonata Software, First Source, those are some of the counters that are holding up quite well for themselves with that double-digit gain also coming in. But when you talk about the entire Nifty 50 pack as well, you're looking at a bunch of counters that are still resilient even in a market that is taking quite a little bit of hit in the last few minutes as well. So something like a Hindalco, Eternal, Trent, Adani Ports, Adani Enterprises, BEL, L&T, Infosys, those are some of the counters that are holding on to a tinge of green and holding on to a little bit of strength right now. But what's not holding on to some strength is something like an Apollo Hospital. From within the Nifty 50 pack, even heavyweight HDFC Bank is also trading with a cut of about 1.5%. ONGC, Bharti Airtel, HDFC Life, Sun Pharma, Quality Walls. Those are also some of the stocks that are down anywhere between 1 to about 2%. That's the entire outlook that you're looking at in terms of some of the sectors and the stocks that are making it to our radar at this point in time. Of course, we'll be discussing at greater detail why some of the likes of HAL or something like a Tejas Networks, why some of these counters are also buzzing away. But before we do that, quick look at the world of commodities as well, and you're looking at oil prices that are managing to remain largely steady with those peace hopes very much in the spotlight. When you take a look at Brent crude and WTI, you've made some bit of recovery, but not really back up above those 98 levels also when you talk about these two contracts as well. And when you talk about oil prices, largely steady, but gold on the other hand actually has made a rebound. Little bit of strength really returning back into the picture when it comes to gold as well. And you do have that commentary also coming in when it comes to Trump and Powell, that little bit of policy uncertainty that you could also be penciling in. That should also be making it to your radar as well. But Ajay Kedia, Director, Kedia Advisory, is joining us with all of those insights to make sense of all of these headlines. Mr. Kedia, a very good afternoon to you. It seems like it is at least a good afternoon for gold. Can't say the same about oil right now.
Very good afternoon, Shansi. Yes, in last couple of days, we have seen prices has moved slightly more towards $5,000 mark. In last 45 days, we have seen whenever there is a geopolitical concern, generally we presumed gold would be on a positive side. But because of the global sell-off, we have seen sell-off in equity, commodity, and property everywhere. Because of that, gold prices were under pressure, and we have seen prices moving to the level of 4,100. And now it seems that as ceasefire news has been going smoothly, we can see prices moving closer to $5,000 mark. But I think this is just a retracement because still the concerns between Donald Trump and Fed chairman is still going on. So it would be more important how Fed would be moving from here, either rate cut or rate pause, or it could be a rate hike, because there is a 50% rise in the energy prices that has been seen in last one month. So that can impact the economy growth, as IMF has stated. So I think closer to $5,000 we can see, and some consolidation for gold.
Absolutely, and that's something that you're looking at in terms of the broader outlook right now. But Mr. Kedia, I also wanted to try and understand what you think about the higher for longer oil prices right now, because as Qatar and some of the other nations have also indicated at this point in time, some of the damages that have been done to key oil infrastructure that could last well into months to years. So how are you looking at that entire supply side of the picture? How are you looking at higher for longer oil prices? Is that something that you're also penciling in?
So I think, Janji, we have got an upper price and lower price also. As the conflict has started, we have seen crude prices went as high as $120. Last in 2022, we have seen high of 130 when Russia-Ukraine conflict has started. So we have got the upper hand because at 120, we know that Strait of Hormuz was being closed. Now, as soon as last week the talk of ceasefire has started, we have seen 23% fall in a single day that made a base of $90 for Brent. So I think we have got both the and lower side and upper side. So I think there should be a consolidation because if the war stops, then also the logistic part would remain slightly choke point. Secondly, this whatever the infrastructure damage has been seen in Qatar, in Iraq, that will take months of time, as you have rightly stated. So I think prices would consolidate between the range of $85 to $100 as of now. But in Q4, maybe possible, looking to the demand and supply situation, prices can again come down to the level of $70, $73. But as of now, for Q2 and Q3, we can see prices will be on elevated level with a range of $85 to $100. As of now, with the current scenario, we expect prices should be in this range.
No, absolutely, and that makes a lot of sense in terms of what could be happening to prices when you talk about oil. But when you're looking at gold as well, couple of things that really make it to my radar in terms of the haven bids returning. There's a couple of concerns here. One is that Trump and Powell clash really coming back into the spotlight. Other than that, you have that entire headline also. Bunch of uncertainty also sustaining when it comes to the war. Do you think that the haven bid really is making a little bit of a comeback? We've not seen much of that for most of the war right now.
See, I think, yes, you have rightly pointed out the things. I think gold is just waiting how the new Fed chairman would be pulling up the rate. And secondly, the equity market, there is very surprised that despite of this war-like situation is going on, US equity is rebounded and making a new highs. So that clearly shows the investors are now looking towards the more opportunity where they find in equity rather than gold. So maybe this could be the point we can see some consolidation in gold and silver prices. Even if we take a reference of 2008 and 2022, we have seen multiple of time whenever there is a geopolitical tension or war-like situation, generally gold correct and maybe we can see a time correction in 2008 also from Feb to October 2008, we have seen some consolidation. Then gold has started moving to the record high of 1920 in 2011. Similar kind of movement in 2022 we have seen where gold was corrected to the level of 1600 and from there we have seen a high of 5600. So maybe some consolidation could be seen for gold till September. Afterwards, I am sure that we can see a new high coming back in gold prices.
No, absolutely, and that makes a lot of sense in terms of what is really happening with prices. I also wanted to try and understand what you think about silver as well in terms of what has been happening for the last few weeks. Now, we have broadly seen that silver prices have been moving in tandem with gold, and that used to be, the trend a few years ago. That's really back in the spotlight yet again right now. When you talk about gold and silver, do you see that sustaining right now?
So to track silver, I think gold-silver ratio it will be the better barometer. Last year, exactly this time only when gold-silver ratio was around 106, 107, that time silver was very cheap and we know this is the 7th year where silver is in deficit. Industrial demand is improving because of clean and green energy. But right now, in the month of Feb, we have seen the ratio has tumbled down to the level of 44 and currently it's around 60. That doesn't show that silver is very cheap right now. With the increase in the energy prices, I think the industrial demand would be slightly tapping down. A range of $70 to 85 we are expecting for next couple of months. Once we get a level like 70 is good, but slightly be cautious because I think looking to the gold-silver ratio, we are more bullish on gold rather than silver. Immediate support would be 70 and maybe if suppose sell-off scenario comes again, we can see a base towards $55 also. But whatever the expectation of silver last year was built up, this time we don't expect this type of momentum would be there for next at least couple of months. Once the industrial demands restart, renewable energy demand restart, then
Right.
definitely we can see silver's prices moving again.
No, absolutely, and that's one of the other triggers as well that you're looking at when it comes to silver as well. Very quickly, before we let you go, I just wanted to get a quick word in terms of what you think about all of the optimism around the peace talks as well. If there's any progress that is there to be made, where do you see the immediate reaction coming in within the entire commodities complex?
So right now the focus would be on industrial metal, where we have seen copper prices has shown a very good recovery, currently on LME trading very well, about 13,000 level mark. There are a couple of things which are being supportive. First of all, we have seen the supply concern from Indonesia and Chile is still going on. Demand for clean energy, green energy is going to support copper. And one more thing is this sulfuric acid ban from China. In couple of days after this news, we have seen the production concerns are still prevailing and prices has got a boost. Here I am expecting around prices might go to the level of 15,000, 15,500 in next couple of months. I think the opportunity lies in copper.
No, absolutely, and thank you so much for summing that up really brilliantly when it comes to the entire industrial metals complex also in terms of what else to watch out for. Thank you so much for taking time out and joining us this afternoon, Mr. Kedia. And there you go, that's the entire verdict coming in as far as something like copper is also concerned. But of course, the oil market and the gold market right now is really listening into one person, and we're going to listen into that exact person right now. White House Press Secretary has said that the US had not formally requested an extension of the ceasefire with Iran. She's also added that there are discussions about more talks being held. Of course, you do have oil prices reacting to this commentary and all of this optimism. So let's go across and listen into this bit of commentary.
I saw some reporting, again, bad reporting this morning, that we had formally requested an extension of the ceasefire. That is not true at this moment. We remain very much engaged in these negotiations, in these talks. You heard from the Vice President directly and the President this week that these conversations are productive and ongoing, and that's where we are right now. I've also seen some reporting about the potentiality for in-person discussions again. Those discussions are being had, but nothing is official until you hear it from us here at the White House.
On that note, then, it's time for a very quick break right here on Lunchtime Trades. On the other side, there's a bunch of stocks that we've lined up that we're going to be talking to you about, so do stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका शटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है, और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are
warming up and raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Sehgal. What's actually happening?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Aisha Sehgal, on Prime 5 only on NDTV 24/7.
Presenting the all-knowing, all-powerful.
Welcome back. Thank you so much for staying tuned in. Well, as promised, let's take a look at some of these counters that are buzzing away in trade. Right now, of course, you do have HDFC Life that is trading with a cut of about 1%. And the margin hit is something that you're really penciling in when it comes to the Q4 numbers. HDFC Bank also about 1.7% downtick coming in. Titan Company and Apollo Hospital also down just a tad bit. But what's holding up quite well, and you know, something where you're seeing a little bit of weakness, though, Tejas Networks is something that's really down right now on the back of its numbers as well. In fact, there's a bunch of counters that are making it to Parth's list right now. Something like a Tejas Networks, Infra, HDB Financial Services is what makes it to the top of your list as well, Parth as well.
That investors need to keep in their watch list. The first one is Tejas Networks, which has reported its Q4 numbers, and the company actually saw its fifth consecutive quarter in losses. The company's revenue was down almost 82% and was at around 333 crores, and they saw an EBITDA loss of 118 crore versus a profit of 121 crore in the same quarter last year. Their net loss also almost tripled at 211 crores versus a loss of 71 crores in the same quarter last year. So this is the main reason why the stock is down in trade today. The second one is Indian Metals and Ferro Alloys, which has updated the status of its ongoing projects. Their greenfield ferrochrome project is in the final stages and will be done by September of this year. The company's Kalinganagar acquisition is completed and all the 4 furnaces in the plant are now completely operational. However, their ethanol project is slightly delayed and is expected to be commissioned by the July month of this year. The last one is HDB Financial Services, which reported a very strong Q4 in terms of profitability. The company's net profit jumped 41.4% to reach 751 crores. The company saw an improvement in its asset quality, which led to lower credit costs, which further in turn drove profits for them. The company has also approved a borrowing of around 32,825 crores via the debt route. So these are the 3 stocks that people should keep in focus for today.
No, absolutely, and that makes a lot of sense in terms of some of those counters that are also buzzing away in trades. Look at that HDB Financial Services stock as well, about 7.5% uptick that you're looking at on the back of the results. Tejas Networks, on the other hand, down about 4% right now. But let's also take a look at some of these other news updates also that we have for you right now. The Telangana High Court has ordered a probe into whistleblower allegations concerning Canfin Homes, directing the Central Vigilance Commission to examine the complaint as well. In fact, Nimit Dixit is standing by with all of those important details. Nimit.
Yes, the High Court in Telangana has ordered the Central Vigilance Commission to probe into Canfin Homes, the housing finance company, which is 30% owned by Canara Bank, and Canara Bank is also promoter of the company. Now, this comes on the back of a whistleblower complaint filed by one of their HR general managers, who basically said that the company had unfair and preference in recruitment policies. What they said that there were the large-scale recruitment irregularities across Canfin Homes. They also accused of pushing preferred, unqualified candidates and mark sheets allegedly being altered. Also, the whistleblower complained that he was transferred days after raising this complaint about the recruitment irregularities. Now, what the court has said that since this is a matter of public interest, because Canara Bank officials have been named and are involved in this probe, then it cannot be said as Canfin Homes wants to say that this is a private dispute. The court has held that this is a public dispute and it must be taken into account while ordering these investigations into it by the CVC, and the RBI has also been asked to look into this. Now we will understand what inaction comes out of this RBI and CVC report as this case goes on.
No, absolutely, and thank you so much, Nimit, for joining us with all of those updates when it comes to Canfin Homes as well. Of course, the stock is not doing all that much, but you do have that particular update also coming in terms of the whistleblower and what the court then had to say. But let's also talk about something like a TCS. Employees at TCS's Nashik office, in fact, have been instructed to work from home amid allegations of sexual harassment and religious conversion. NDTV correspondent Sujata joins us with some more details here.
New shocking and chilling details now emerge with each passing day in the Nashik TCS syndicate, where now on one end it is Nida Khan, the mastermind accused, who's still on the run and is likely to apply for anticipatory bail through her legal team if she's arrested. And secondly, it is several investigative agencies like the NIA who have now stepped in to figure out how exactly and how big is this entire plot of religious coercion that was underway in Nashik at TCS, where more than 12 FIRs have been registered. Several complainants are likely to come forward and register their FIRs because their counselling sessions are underway. Whereas it is also the TCS company's internal team which has now begun an investigation into the entire matter to figure out how exactly was it that the entire syndicate was working without the top authorities even knowing about it. And since 2021, as an eyewitness while speaking to NDTV, stated that there were these activities carried out where vulnerable victims were targeted, they were suppressed and they were forced to be in their loneliness, distancing them from their social and family circles, and henceforth forcing them to practice Islamic religion and follow its protocols, because of which one victim came forward, took a decision, registered FIR, after which we saw multiple of them coming forward. So far, 7 accused have been arrested, out of which the main HR, which is Ashwini Chenani, is in police custody, the rest of them being in judicial custody, and likely the custody is to be extended because there are several other scales which needs to be investigated from the SIT and other investigative agencies, whereas it is also the Women Commission who has now raised their voice and asked for a stringent action against the culprits into the matter. Not only that, officially on the administrative front, it is the government who's thinking of launching an helpline number, as there are multiple complaints that are coming forward of women who are narrating their ordeal in the case, stating that in their particular company similar of such instances have happened. So it remains important to watch what more developments take place and how is it that the police and the investigative agencies, they ensure that the entire syndicate and its extent to which it is connected is busted out.
Chilling details that have really emerged out of this case right now, Sujata. Thank you so much for getting us that update. But let's also watch out for Wipro as well when it comes to the markets. That's one counter that you're really looking forward to. In terms of fourth quarter earnings, so you do have expectations of a modest revenue uptake. Also, stronger margin performance is also something that you could be penciling in. Deal wins, and that entire bit of commentary is something to watch out for as well, Puneet.
Most certainly, and expecting not too much in terms of flair, at least in quarter 4 results, just a 1.7% growth in revenue in INR terms. EBITDA as well will largely be continuing to be at 16.7%. This is a growth from the same time last quarter actually, where you saw the labor code impact, but continuing to see 2 key aspects from the results. One is, of course, what will be the quantum that the company will announce in terms of buyback. Now, it's the first time the company was one of the first companies to come out with a buyback announcement for this particular quarter. Cyient also has followed through, but the quantum of the buyback will be something to watch, could enthuse the street at least in the near term. And the second key aspect will be on the constant currency growth. Now, expectations are for quarter 1 of FY27, the company will give a guidance of a very bearish sentiment, just -2 to 0%. And that is the estimate from most brokerages. Jefferies is the only one expecting a guidance of 0 to 2%, but Morgan Stanley and JP Morgan expecting a weaker picture. All eyes will be on the buyback number, as well as what could be the commentary for the company in terms of the impact of AI amongst others and the models released by Anthropic as well as ChatGPT. But at this point of time, a lot more details on what could be on some of the key aspects, barring the numbers for quarter 4 for Wipro this time.
No, absolutely, and thank you so much, Puneet, for joining us with all of those expectations. So there you go, that's something that you're penciling in, and that's something to watch out for when it comes to something like a Wipro as well. But that's all that we could pack for you on this edition of Lunchtime Trades. Thank you so much for tuning in. Soumit Sarkar, as well as Mahima Vajrajani, take all of the action forward on the next show.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ खास होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
Will the rising sun win with a hand in hand? Will the two leaves and lotus bloom? Who will whistle to success in Tamil Nadu? To understand the Tamil Nadu twist, join me in the midst of our politics and people. Vanakkam Tamil Nadu. Here we come.
YouTube doesn't have a favorite news channel. It has three. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Aisha Sehgal. What's happening? How to do?
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Aisha Sehgal, on Prime 5 only on NDTV 24/7.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just a guy who loves his tech.
A show where the mysteries of megabytes and motherboards shall be unraveled.
Bro, nobody talks like that anymore. This is all about connected ecosystems, EVs and AI that you can use in your daily life. That's what we do on Tech 360.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Mahima Vachujani. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade. So firstly, let's see what's on the show today. Firstly, we'll be speaking with the management of Blue Spring Enterprises. Now recently, they made an announcement of acquiring a company called LSG Skychef, which is into catering service for the airline company. So how does that lead to their growth plans going forward is something that you will get to know from the management first on the show, that is Small Cap Buzzers. Apart from that, we'll be also covering stocks like Crore India. Now that stock has been gaining for the last couple of days. It's up nearly 27%. Have valuations become now more attractive, and that is the reason why the stock has been gaining, is something that we'll ask our fundamental guest on the show today. Apart from that, we'll also be speaking about Suraj Estates, and the stock has been gaining on the back of new land acquisition that they have done. Now this gross development value of this land is expected to be around 100 odd crore rupees. We'll be also speaking about the company called Oriental Aromatics. At one point of time, the stock had hit an upper circuit of 20%, and in the last 1 month, the stock has gained nearly 40%. And lastly, when it comes to Hindustan Composite, that stock has been gaining in the last 5 days. It is up nearly 30% on the back of strong volumes. If you look at the volumes, even today, it's nearly 15 times its 30-day average. Now, if you look at the market, after the stellar rally that came in yesterday, we are seeing some kind of profit booking coming into trade. We did open in the green. 24,400 acted as a resistance, and currently 24,100 is acting as a support, down around 110 points from yesterday's closing point. If you look at the sectoral indices, it's the Nifty Metal Index, which is the top sectoral gainer, while on the losing side, we have Nifty Auto and banking names, which have been the draggers overall for the market as well. But when it comes to the Nifty Small Cap Index, that is still managed to be in green despite the fact that the benchmark has come down. So, Mahima, which are the stocks that have been buzzing there?
Right, so Somit, as you rightly mentioned, the small cap 250 at least still trading in the green, up by about 0.3%, but almost at its day's low point is what we speak. The mid cap 150, of course, has turned into the red. But some specific name in the small cap space, India Bulls, yet another day of gains coming in for this one, trading around 18% higher. You have Orissa Minerals, which is also seeing gains spot 16-odd%. Surat Estate, as Somit mentioned earlier, on the back of the land acquisition that they've made, is trading around 14% higher. Oriental Aromatics also trading 14% higher. You have STL Networks, which is also trading around 14% higher, and something like CCCL is also trading around 12% higher. Other than that, IndiCube Spaces, Aztec Life Sciences, LG Rubber, Jinkushar Industries are some of the other names that are trading, in the green in that range of 10 to 12-odd%. But on the flip side, you have counters like Johnson Control, which is down by about 5-odd%, seeing profit booking today. You also have something like a TTK Health, which is down about 4-odd%. DMCC Spec-Chem is seeing profit booking today down by about 4-odd%. And something like Pratap Snacks is also down by about 2-odd%. So that's with regards to where some of these names go in the small cap space. But as promised, Blue Spring Enterprises, has been in focus, and this is on the back of the news flow coming in. Now, this company was demerged from Quest Corp in March 2025 and is basically India's integrated infrastructure service provider company, and operates across food services, facility management, and hospitality. The recent news coming in, of course, they are now entering into aviation catering via acquisition of LSG Sky Chefs India. And to take this conversation ahead, to understand what this acquisition means for them, what lies ahead of the company, we're joined by Kamalpal Hoda, who's the Executive Director and CEO of Blue Spring Enterprises, joining us now. Sir, thank you so much for taking out the time. My first question to you is with regards to your recent acquisition coming in. This marks your foray into aviation catering, if I'm not wrong, through LSG Sky Chefs. Just want to understand as to what this means for the company. What does this bring onto the table, and what is the kind of revenue potential that you're looking at from this acquisition?
Sure. Thank you, first of all, for having me on your show. And yes, it's been a very important acquisition that we've just announced. In fact, we've actually announced 2 acquisitions in last, less than a month, and happy to share update on both the acquisitions, starting with LSG Sky Chefs, which operates, aviation catering kitchen at the Bangalore Kempagoda International Airport and caters to, 1 domestic airlines and 3 international airlines. It is a segment which has got an entry barrier, and Blue Spring, as you mentioned, is already into food services. So we do have food services right now in various industries, starting with, very large premium education institutions where we cater to, students. We also have presence in 100+ hospitals where we do patient food. We also work with very large industrial houses where we do, industrial canteens, food for the labor that they work there. And also through central kitchens, we do food at large corporate houses. And now, obviously, in a premium entry barrier segment and a niche segment, which is aviation, we've got entry through this acquisition. So food as a portfolio with this acquisition should do close to around 500 crores of annualized revenue. This particular acquisition will come in with around 120 crores of revenue. So in total, it'll be 500 crores of revenue and high single digit or low double digit EBITDA margins. If I talk about the second acquisition that we did, which also we announced within the span of last 1 month, was another German company which was selling its Indian business, which is Stiag, which is an operating and maintenance partner for very large Indian companies in the power plant space. So they manage close to around 7 gigawatts of power plant operations, and through very high technical competence, they operate again at very good double-digit EBITDA margins. So both these acquisitions add up to the Blue Spring capability in the industrial space and also in the food space, which have been areas where we've been interested to grow. On the back of these 2 acquisitions, We believe we should in FY27 be a 4,000 crores plus revenue company. Our EBITDA margins, which we were reporting prior to these acquisitions at around 3.5%, should be close to around 5% EBITDA margins.
Right, sir. Right. Okay. Now this is all about this acquisition. Now, if you could just take us to the contours, the financial contours of this deal. 129 crore, I believe, is the enterprise value. What is the equity value and how much debt is coming into the books of Blue Spring?
Yeah, so see, these acquisitions, both of them are going to be partially funded through debt and internal accruals. Specifically talking about LSG, we are yet to do the closing. We've just signed the SPA. So right now the enterprise value is 129 crores. The company, like I said, at 120 crores of revenue, does close to around 20 crores plus of EBITDA. And, the equity value should probably be in the range of the enterprise value only. However, like I said, closing should take another 60 days when we'll have, very exact values.
This is largely a debt-free company? Largely?
Yeah. This company comes with, a starting cash of around 20 crores. So yeah, it's a debt-free company.
Okay. And you said the operations are in Bangalore. So just wanted to understand this. Do you plan to expand LSG's operation to other major airports as well?
Yes, of course. That's the intent, and that's why we've entered this segment. So, Bangalore itself has got two kitchens, and one is with obviously competition, and the other one is what was available. So we took it, and on the back of it, not just other airports, we want to get into aviation kitchens. We also want to get into lounges, which is also a very premium business. We also want to gradually getting into aviation also allows us to have a look at the MRO services, which is also a very big market, and which is something that we have not done. So we have an engineering business. Which is also back of this TAG acquisition should now cross 1,000 crores in revenue. And, this entry into aviation then, exposes us to one more adjacencies in expanding.
Sir, with regards to your core segments, facility management and security, etc., are traditionally low margin businesses. But when it comes to your guidance, you've said that, your services like security services could go from 2% to 6%, anywhere near that 6%. Just want to understand from a slightly long-term perspective, let's say 2 years down the line, where do you see your margins go, considering all of these acquisitions also into consideration? And if at all you're penciling in a growth, would that be a structural change that would come in?
Sure. Thanks for this question. See, security, since you mentioned that, let's start with that. It's been a low margin business for us. But last year itself, post the demerger, we worked on our margins and moved from 2% to 3%. And very hopeful that, in the coming year, we should probably move from 3% to, let's say, 3.5% to 4%. On an overall basis, we had given a guidance when we did our demerger and got listed last year that, by FY30, the target is to be a 6% margin company. And, these two acquisitions rightly set up for that. Like I said, we should move from the overall consolidated operating margin of 3.5% with these two acquisitions and integration done. We should be touching close to around 5% EBITDA margin. So we are there in our trajectory of reaching 6%, especially with these two acquisitions. And also on the organic businesses, there's a lot of digital integration being done to, push for margins. Since we spoke about security with now almost 24,000 security guards, a lot of digital security surveillances that we are doing, which are better margin businesses. Also mapping our entire employee base of 91,000 people digitally and monitoring them digitally, their attendance digitally, is also bringing down our cost to serve clients, and which is also helping us margin. So on a combined basis with these two efforts of acquisition and the organic efforts, we should move more near to 5% once both these acquisitions are fully integrated.
Okay. And trailing 12 months, you're right now sitting at a top line of around 3,300. What is the kind of internal guidance that you have in terms of FY27 top line growth?
See, FY27, internally, we want to cross 4,000 crores. And FY28, we want to cross 5,000 crores. So those are the two milestones that we have on top of our mind. And those are the numbers we are targeting.
Thank you, sir. Thank you for joining us and giving us the way forward for Blue Spring Enterprises. Let's also welcome in our fundamental guest, Tapan Doshi, research analyst at ca.tapan.in. Tapan, you heard the management, good growth in FY26, FY27, also a stable growth targets that the management has given. And with this acquisition, they're also expecting the margins to inch up higher. How are you looking at this counter at the current valuations?
Yeah, good afternoon, Sumit. See, but the only thing is, the stock has already run up in last 2-3 weeks. And as you already told, then already quarterly losses are there. Again, the margin issue is there. Now new acquisition is there, so we have to see how the margin is going to pan out. Even though the management is quite optimistic, again they are saying then better margin will be there in future. Even industrial contracts shifting on the outcome base, so that is also a positive thing. Security facility demands remain good, but overall as at a P&L level, I want to see that conversion. I want to see more profitability and margin improvement, because currently what is happening, there is a working capital stretch and no low interest coverage ratio is there. Even the free cash flow is negative. So my take is, as the stock has already run up, this is not a buy call at this level. We have to wait for 1 or 2 quarters and let the stock come down, then only take an entry.
Okay, all right. So that's the view coming in on Blue Spring Enterprises. But it's time to look at the F&O space. And we've Sharad joining by to give us a perspective. Sharad, I think tides have turned since we last spoke.
Exactly, that's the right point. But of course, remember, it's a technical pause. Sensex expiry is also at play. And we had started at 10:45. We had seen 80% of the screen was in green. But now, I think the reds have taken over the greens. But nevertheless, Adani Ports, Eternal, Trent, BL are still holding. And remember, it's like a technical pause. That's what the analysts are talking about. But yes, in case any positive news flows come, we can see a kind of a recovery as well. But net, if you're on a medium-term basis, still the signals are bullish as well. But let's just look at the key long build-up, how things are panning out. And of course, this is the Bankex we are seeing here. But overall, the structure is definitely there. And stock-specific news flow or something which we'll be watching out for. But yes, today metals and mining stocks are doing well, and these are the important stocks.
Well, before we go on to
The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the Prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Tamil Nadu votes decisive, uniquely the way it does.
Politics, power and cinema and all of that in an unprecedented Dravidian script.
This is not an election easy to call. It never has been.
And unravel grassroots conversations with the voices that matter.
That's why we travel across Tamil Nadu. Comes the next big political blockbuster.
Because
Tamil Nadu votes only the way Tamil Nadu does.
Welcome back. You're watching Small Cap Buzzers here at NDTV Profit. The next stock that we're going to talk about is Crore India. Now, this particular stock has been up 27% in the last 2 days. And we have Puneet joining by to give us a perspective whether valuations are looking attractive as compared to peers, or it is now very expensive to play that catch-up role. Puneet, over to you.
Well, thank you for that. Some gains are being cooled off during the day today, but largely been stock was in upper circuit of 20% yesterday, and hence the last 5-day return is up 23% for the company. Now, largely, the key question on valuations. Before that, we've seen that the company is largely in a couple of key segments there, and it is a global MNC, so you have the technology advantage of its global company as well. Transmission systems, which is used in tractors as well as construction vehicle, is one of the main businesses for the company, and the other one is axles, which is the main vehicle, of course, and main instrument for the proper functioning of tractors as well as for commercial vehicles. So these are the two key verticals that the company operates in. When you look at the 9 months, revenue growth has been strong, up 21%, but the EBITDA growth is up 28%, with profits rising to almost 89 crores, which is almost a 38% jump. So in the 9 months, the last 3 quarters have been very strong, which has led to the share price movement as well. But there have been two key highlights that the company highlighted over the last couple of quarters, which are important. The first one being a new capex being approved of 62 crores. The current utilization is almost 90% for axles, so this will help the production for the same. And the second one is the shift, which is tectonic in one way. From 2-wheel drive tractors, we're now moving to 4-wheel drive. And with that, you need engineering excellence, which Crore India does provide with its product, given that they have technology advantage of its global peer. Now, stock is up 100% just in the last 1 year. And even in the volatility of this year, stock's up 15% with that as well. But because of that, stock's trading at 30 times price to earnings for current multiples. Doesn't have any kind of coverage from analysts as well. But given the high base for FY26 for tractors as a whole, growth will be something to watch, and commentary in Q4 will hence be very crucial.
All right, Puneet, thank you so much for getting us those details on Crore India. Stock almost trading at its day's low point. But Tapan, any view on this particular counter? I mean, you heard Puneet talk about it.
The stock is doing quite well now. If you see, even the guidance looks good, and if you see the Excel capacity is going to increase almost 1.54 lakh, around margin expansion is also they are focusing a lot. I think 4 service center they are going to open in next 1 year. The utilization, if you see, it is almost 90%, so almost done. Now they are going to do some plant expansion. So we have to see at the debt level. But I think looking at the valuation, because the stock has gone up a lot, no, I think this is not the level to enter. But the stock is good, so I think it will be a buy on dips category.
Right. Suraj Estate is the next counter that we'll be talking about, and this is largely on the back of the land parcel that they have acquired, which has a gross development value of nearly 100 odd crore rupees. What is the overall project plans that Suraj Estate has? Let's get in part 2 with more details.
Thanks a lot, Somit. So, Suraj Estate is a company that develops real estate and real estate projects which are both commercial and residential. They mainly focus on the South Central Mumbai region, where they hold a market share of 8% in redevelopment projects. Now, the reason why the company focuses on this one region is because it's a very lucrative micro market in the Mumbai real estate market. It has a large pool of old buildings. It has proximity to key locations. It allows the construction of both residential and commercial projects, and it has improving infrastructure thanks to multiple government projects that are happening in the region. Now, the reason why the stock is in focus today is because they have acquired a new land parcel in the other west for 18 crore rupees, and the company will be undertaking an redevelopment project there. This plot has a sellable carpet area of 18,000 square feet with a gross development value of more than 100 crores. This will further strengthen the company's presence in their core South Central Mumbai market, and will enable them to increase their market share in the region. This is the reason why the stock has gained over 10% today. In fact, in the last 5 days, the stock is up over 21%. But still, in the longer time frame, if we have a look in the last 1 year, the shares have lost 15% of their value. So a lot of developments coming in, but let's see how they execute in the coming time.
Tapan, any view on Suraj Estates, given the fact that they have done this acquisition?
Yeah, see, most of their development is coming into South Mumbai. Of course, there the demand is on a higher side. Even if you say guidance is almost 25 to 30%, they have a strong pipeline of almost 3,500 crore GDV. So margin improvement is expected, and new launches are also going to come. The only thing is there is a high working capital cycle. So we have to see, is there any execution delay, then there will be impact. But as the stock has already fallen a lot from the top, at current valuation, one can hold this stock.
Okay, so that's the view with regards to where Suraj Estate goes, and it's upheld the gains that it is seen since the start of the day today. The next small cap buzzer that we're going to talk about is Oriental Aromatics. Now, this one has seen an uptick of around 40%. since past 1 month, and volumes are also very strong, coming in 18 times its 30-day average is what we're seeing. We have Varsha joining by to give us a perspective on what's causing that spike in the counter. Varsha?
Well, yes, absolutely. So the reason why the stock is buzzing, of course, on the back of volumes, and this company, what does this company do is they are a specialty based aroma chemical player, also manufactures camphor and flavor and fragrance products. While talking about the key triggers, I would say one is the outlook and guidance for FY26. Well, FY26 is the revenue growth is expected at 8 to 10%, but FY26 called it as a consolidated year for the company and not launches per se. The cycle and capacity fill will drive the recovery over time. Onto the Mahar, which is a future earning lever and not a problem for the company. If you see, it's currently a margin drag, but management gave a clear ramp metrics. One is the production, of course, started in June 2025, so operating at 30-35%. Well, the profitability is linked to 250 tons run rate. Onto the margins overall, if you see, the buyers market is leading to persistent pricing pressure. The Mahar greenfield facility was causing a near-term drag, but management is expecting a growth in margin as well. Onto the key triggers to track, one is of course the pricing recovery in aroma ingredients and the Mahar utilization moving towards more than 30 to 35%, and of course the conversion of Mahar customer sampling into commercial orders. So overall, the Mahar, which was seen a problem for the company or was a margin drag, is expected to move or expected to have a growth perspective overall, which will head to margin growth for Oriental Aromatics.
Okay, Varsha, thank you so much for getting us those details on Oriental Aromatics. Tapan, any view on this particular counter?
Well, this is the segment of a lot of competition is there, and the margin expansion they are thinking, but still it is difficult to come. Again, demand recovery is going to be there in FMCG and personal care, and they are saying that no, capacity utilization will be good in next few years. But the only problem which I feel is that the pricing pressure is always there in this segment, and high raw material volatility is there. Again, working capital stretch we can see on the company also, and you can see the profitability is not so great. So I feel that margins is not suitable for us to get into it. So my take on this stock will be avoid.
Right. The last counter that we'll be talking about on the small cap bazaars is Hindustan Composite. Now this stock has been gaining for the last couple of trading sessions, and if you look at the volumes, they are quite strong. In fact, today as well, the volumes are nearly 15 times its 30-day average. Let's get in Jasmeet to understand what does this company do.
Well, thank you, Samir. As rightly said, the stock has been buzzing on the back of volumes, and today is off the day high. So if you look at what the company operates, it operates as a manufacturer of the friction equipments for the auto sector. So it deals with auto, railways and other sector as well. They provide brake pads and other braking instrument as well. What interesting is to see that the overall stock performance, the stock has rallied nearly 25% in last 5 days, and over last 6 months the stock is up nearly 7%. And if you look at over last 1 year, the stock has traded nearly 8% from the gains. Now in terms of the interesting aspect comes is the overall business portfolio. The company is split into the manufacturing of this braking equipments and also into the treasury business. So they have a treasury business where they invest their surplus cash into equities, and even that business is doing well for the company, and also a large chunk of revenue comes from that business. Now in terms of the other key highlights, the board is set to meet on April 23rd to discuss their overall dividend and Q4 performance, something to watch out for. While in terms of key financials, the revenue see a healthy addition in Q3. We saw it uptick 15% reaching 94 crore, but the overall profit is on 25% YY basis. Now if you look at the 9-month figure, again the revenue has done really well for the company. It's up 14% at 270 crores, but in terms of the overall profit, that's down 33 crore and stands 19 crores. That's something to watch out for. How does the overall treasury business goes ahead, and how does it add to the overall top line after this run up of 25%? If there's still value in the stock left, it's something to watch out for.
Right. Tapan, quickly your view on Hindustan Composite, given the fact that the company will be announcing their results and dividend in next few days.
Well, Sumit, this company has already run up a lot, but a good company. The demand is steady, across auto and industrial sector. Margin stability is there. I think gradual growth will be there in the niche area. The only thing is EBITDA margin. We have to see whether they are able to improve or not. Cyclical is there little bit due to auto demand. But as the stock has already gone up a lot, I think one has to wait to little bit come down, then only enter.
Well, thank you Tapan for joining us and giving us your perspectives on the stocks that we discussed. Well, with that, it's a wrap on this edition of Small Cap Buzzers. Stay tuned and keep watching NDTV Profit.
Capri Global Capital Limited is a well-diversified, retail-focused, systematically important, non-deposit taking NBFC. The company announces its public issue of secured, rated, listed, redeemable, non-convertible debentures offering a coupon rate of up to 9.5% per annum and a security cover of 110%. The issue opens on April 15th, 2026 and closes on April 28th, 2026. For issue structure, risk factors, detailed disclaimers and more information, please refer to the Self Prospectus and the Tranche 1 Prospectus dated March 30th, 2026, together referred to as the prospectus, are available on the website of SEBI, Stock Exchange, the company and the lead manager.
कुछ बड़ा होने वाला है।
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
To understand the Tamil Nadu twist, join me in the midst of our people, language and politics. Vanakkam Tamil Nadu, here we come.
YouTube doesn't have a favorite news channel. It has 3. NDTV Profit, India's #1 English business news channel. NDTV 24/7, India's #1 English news channel. NDTV India, India's #1 Hindi news channel. 3 channels, 3 undisputed leaders, 1 unstoppable network. NDTV.
When others are warming up, I'm raring to go. The stories that matter, the stories that shape your life.
Hello and welcome to watching Prime 5 with me, Raisha Sehgal. What's that today? How to
The show that sets the prime time agenda.
We'll be deep diving into this topic to tell you what's at stake.
Join me, Raisha Sehgal, on Prime 5 only on NDTV 24/7.
Presenting the all-knowing, all-powerful Tech Guru.
Whoa. Guru? I'm no guru.
Okay.
I'm just...
Shall be unraveled.
Bro, no.
Welcome to the town hall with Ramdev Agarwal, Perma Bull, someone who has always been very positive on Indian markets. And I would say, first of all, Ramdev ji, welcome to the NDTV Profit Studios.
My pleasure.
We think it's been too long since you made it to our studios, but we're happy to have you here. And of course, our team is here to ask you questions as well. We've opened the lines to our viewers as well. So whoever wants to ask you questions has the opportunity. I hope that's okay with you.
No, that's fine, but please don't ask me about any individual stocks. That's about it.
That, of course, we know the rules. So we know the rules, guys. You know what questions to give. Ramdeep, very warm welcome. And I think it couldn't be a better time to talk to you right now because you've always been optimistic, bullish about the Indian markets. And in the last 10 days, those who had faith have been rewarded. Would you say?
Yeah, I mean, see, in anything that is most important, and you have to be bullish when actually markets are bad. In bullish market, to be bullish is not a big deal. What's big deal about it? I mean, market is up 3%. If you are not on the buy side, even if you are short, you say I'm bullish. You know, so you have to be bullish when chips are down.
But were you bullish, say, 10 days ago when chips really looked down? There was a point at which we were thought we were brink of maybe a nuclear war. And इसमें अजीब सा ये था कि युद्ध इतने देशों के बीच में हो रही है. India seemed to have been suffering the most as far as equity markets are concerned. Were you bullish even then?
Yes. See, because there are two types of dialogue. When you have 10 months dialogue, it's a very different thing. When you have 10-year dialogue, in your own mind, different things will come up. You know, if you want to be right or wrong in 10 months' time or 3 months' time or tomorrow or day after, then, God knows what to see. Probably just about who's buying, selling and those kind of stuff. But when you are buying for 10 years, 20 years, I typically think that I'm buying for 25 years. You know, it's different that I'm not right every time. But I always buy thinking that it's 20-25 year kind of bet. So the dialogue is very different, actually. In my mind, dialogue is very different. And that keeps me, if you see my last wealth creation study, which we did just now, see, what is the summary of the report? The summary of the report is the world is becoming wealthier year after year. If you see last 50 years, 75 years, world is becoming wealthier. India is becoming wealthier at double the speed. World is becoming wealthier at 7% dollar, nominal dollar. We are becoming wealthier at 14% nominal dollar. Now 14% is not double of 7%. If you take a 10-15 year profile. So India is emerging very rapidly. Of course, other countries are also emerging like
it's
China.
It's also a base case, which is the reason why India is emerging more rapidly.
That is also one of the same. That also allows me to be emerging for next 50 years.
Yeah.
You know, so it's a very long story, and there are very few compounded predictable countries. One is, of course, nothing can beat US. US is one and the only one. You know, like in last 15-20 years, US has gone from 30% of total global market cap share to 50%. You imagine, the world is growing at 7%. In that, US went from 30% to 50%.
Sir, FIIs ये सब क्यों नहीं देख रहे हैं?
See, they are for 10 months. They want to be right in the next 1 year, 2 years. I don't care. I want to be right on 10-year basis.
So you're saying that the average investor should not worry about the FII figures today. We were earlier this morning speaking with a prominent market voice, and he said exactly this, that the conversations he's having with his friends who manage India for global funds is that हम office आए नहीं आए कोई फर्क नहीं पड़ता है. No one is looking at India right now globally.
Yeah.
Why aren't they seeing all of these points that you are talking about?
I mean, India for them is very small. Say, like, if there is one micro cap where a lot of excitement is happening, I don't care. Because in my scheme of things, that 100, 200 crore company or 300 crore company, I cannot buy enough. So I don't bother about what's happening in that company. India, in their mind, is something like that. And particularly if you're sitting in US, which is now $70 trillion, market cap, where single companies are bigger than India. Well, would you bother about an NVIDIA? Or would you bother about thousands of companies in India? So it has become like that, and US is doing extremely well thanks to this AI and AI-led capex and whatever is happening there. It's crazy. I mean, it looks scary. I mean, if they have 55-60% of the global market cap, can they go to 70-75% types? That's the kind of run. If you look at internet-based businesses, they're the only guys. There's nobody.
From a 10-year perspective, how are you looking at AI? Are you looking at it at the next big thing? We should be worried because that's the horizon, or is it something which is being overestimated right now?
It's very tough to say for me, but it's a very big development. These kind of times happen every 15-20 years. I mean, we saw the mobile phone coming in, then we saw internet coming in, then we saw the internet and mobile coming together. That exploded everything out here. I mean, literally everything, payment and scheduling and road, everything is out here. And more things are coming. So we have seen that advent, and now AI will do its own magic. In what way? Consumer AI we have seen, where you can get your essays right for your son, you can get your letter well written, those kind of things are done. But the enterprise AI is a very different ball game. And that's where enterprise and government AI is not that easy nut to crack. It's not that easy as people are talking about. That will also require a lot of intelligent people to run it. You can write your own essay on your own, but you can't run a company with, you can't give one instruction and the company will be run. So yes, you might do your things faster, but it's also not the situation that requirement of AI or software are limited. One of the funny thing or best thing is when things become cheaper, particularly software becomes cheaper, demand is unlimited, literally infinite. So say today, if there are 1 million projects are there in the system, and the 1 million projects could be say 20% or 30% faster in execution, there are 10 more million projects waiting to happen. So what do you do with that? So I think eventually demand will explode. That's my sense. Right now for a year and a half, there will be readjustment of the old model and new model, and then eventually the new model will explode. I mean, once the software is developed, once the way enterprise will adopt AI, if that is clear, I think all the projects will be done by the same services companies.
So you think IT companies will survive, thrive and come out smelling of roses?
Survive for sure. How much they'll thrive, it depends on their own adaptability and at what pace diffusion of the technology happens through enterprises.
Okay. So, in fact, we have viewer queries coming in. I'm not going to hog all the questions from Ramdev Agarwal, so don't worry. All of you viewers will get a chance. So will our team over here. But there is one quick query which has come in while we were talking. If you had to hold only 5 stocks or sectors for the next decade, what would they be? And Ravi specifically saying, is it a right time to invest in IT space given the AI disruption? Nothing stock sector specific. But there's always a debate about IT, and we get both views.
Yeah, so in IT, I have been saying for last 2-3 years since I advent of this AI that it is headwinded. See, I met somebody very senior from Microsoft. He said the era of headcount driven model is over. See, if you have 500,000 people working for you, you don't need another 500,000 to double now your revenue. So, one part of the engine of Indian IT is kind of gone, where they used to add people at 15-20% every year. So that's gone. So will they be able to increase the productivity of the people or profitability per person at that pace? But I'm not competent to answer that. So I would still say the sector is headwinded. I would be very cautious unless I have extra insight. I would not put in more money.
Okay, cautious on IT. Let's get some questions in-house. Alex is starting off first.
So, Ramdevji, always a pleasure listening to you. And the question I have is more strategic in nature or tactical in nature, which is that oftentimes over the course of the last decade, we've spoken about fill it, shut it, forget it, patience, etc., and looking at the long-term horizon. But that the reality is that we remember the winners of that strategy. To say that in the 90s you had an Infi that came in and now look at what Infi has done, right? But you don't remember those that have fallen by the roadside. Is there a pitfall holding on to companies that have been relative underperformers valuation-wise, because they can have a hole in your portfolio as a result of that? When do you pull the plug?
You have to see, fundamentally in investing, you have to understand what you're doing. What stocks you're buying, why you are buying, what is the source of value, where is the price and where is the value. That understanding is constant, not constant, because the value is continuously changing. As the company is growing, the value of the company is growing. Say when we got listed, we were 1,000 crores. Today we are 40,000 crores. And we are growing at 25%. So my value, I hope I am able to grow my value. So, so long as the value of the company is growing, you are pretty comfortable even if price is fluctuating a little bit. If the value of the company is not growing, then obviously you have to take your call.
But even blue chips, you're happy to sell. And
forget about blue chip, red chips. I'm talking about your company. So let's.
I'm going to actually take you up on that. Forget about blue chips, red chips.
Yeah.
Do you think that classification and definition has changed over the last few years? You have mid-cap companies which are at huge market cap and value. And that old way of just looking at blue chips with the depth of the Indian market right now is also changing?
Come again.
My point is, should we look at blue chips with the same awe that we used to? Just taking from the point that you made about blue chips and red chips.
So I think one of the big differences is the availability of data. Now markets will become far more aligned to data rather than this. See, when you had scarcity of data, so you are saying, okay, you are a Tata, you are an FI, you are a what is that, multinational company, because they were known for terrific management and markets were generally reasonably priced. If the market is at 12, 13, 14 P and you are a multinational company, Colgate, Lever, underpenetrated categories and all, so your management was never a concern. So you made a lot of money because of aligning with them. But now, because those quality has been so much, thanks to Buffett, the quality has been so much overpriced, irrespective of the growth, that they have been stuck at 50, 60, 70 P multiple. Whereas I am getting the company growing at 5%, just run.
That's the big one. I think that's the clearest answer we can get to blue chip and red chip. Puneet has a question there.
Actually, on continuing your point, because within the Nifty, you've seen IT and FMCG, both those counters haven't performed well in the last 5 to 6 years, and the growth hasn't been there. So continuing your point, are these largely